are kind of the bread and butter of these home improvement companies that have slowed down. See comps, down 5% compared to what we got for Walmart. It just really shows you that there's like a very limited sliver of consumer stocks that are showing real growth and real momentum. And it's basically like Walmart. Yeah, and a few popular shoe brands.
I know. It's amazing to me the way, I mean, all things considered, Lowe's has outperformed Home Depot. And I actually have always looked at Lowe's as like the newcomer, the smaller of the two. It's not really that much. It has like 200 less locations in the US. So they're actually pretty comparable. But home improvement, I have a whole new appreciation for ever since I tried DIYing my apartment, and it was so expensive that now I understand why people are deferring some of their major home improvement projects, because one bedroom in a 600 square foot apartment was enough to make me say I'm done for a few months.
Yeah, there's like nothing. There's like no version of DIY home improvement that's like a low ticket, purchase.
No, because it always ends up being so much more than you think. And so now I speak to why consumers are falling back.
Yeah.
But if you want to look at the health of the consumer, sure, you can look at Walmart. I think it's also important to pay attention to this and say everyone right now is waiting to find the best deal, but that is not signs of a super, super strong housing trade economy. There's some cracks in the, we've been saying this for months now. There's major cracks in the overall housing space that are just being ignored by the market.
No, very well said. Definitely true. Comp down 4% is pretty major softening of the outlook for the company. So, down a couple bucks, though, not bad. I mean, to the point of the leash that the market is giving these housing companies with low rates. I mean, there were a few pretty bad quarters over the last couple of years.
Good morning.
It improved a little bit, but still negative, and market is going to have to deal with it. So, right now, down a little bit, but, does the market move on lows? Home Depot? Not usually. So we'll see what happens. But we got Toll Brothers coming up too, so the home builders will get a nice mix. The other thing too is a lot of people in existing homes that haven't been selling, been sitting in them. Like, how much more projects do they have left to do? Like, a lot of people have been just parked in their homes for decades plus.
Well, right, they're completely ruining the supply. Well, they're just continuing to contract the supply. I mean, they're the reasons I think that right now it's so impossible for new home buyers to get into the overall housing space. So we'll just keep renting, I guess.
All right, good stuff. Thanks, Jenny. Good little lows here under some pressure.
All right, watch Chewy. There's an upgrade, and there's a lot of trades going off on it. So we'll see if anything happens there. Chewy, currently sitting right at resistance supply. All right. Hope everyone had a good evening. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Tuesday, the 20th of August. We got about 13 minutes to go. 13 minutes. The first 15 minutes, I don't do much of anything except take profits off the table usually. Reassess the markets after 9:45 for stocks with high relative volume for potential trades. If they do, then I'm looking for VWAP to be sloping, whether up or down, for longs and shorts, respectively. Flat VWAP just tells me to look for range-bound trades and strategies. So right now we're waiting. We've got an upgrade on Chewy and a few block trades this morning. Looks like some shorts covering. All right, not moving that much, though. Chewy not moving that much. Also watching PayPal for a follow-through. We'd like to see a follow-through in Tesla. Google. Nothing on Google at the moment. Google does look good on the daily, though. Amazon or a change in direction. Amazon pulling back at the moment. All right, so we got a little bit of weakness coming into the open.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex around-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim.
Okay, let's look at Supermicro. I have put credit spreads on Supermicro. Sold the 520s, so $100, $100 lower. Lyft, what's Lyft doing? Lyft, we looked at last week, coming into this week. Lyft looking for a move higher or a lift up to the highs. Okay, watching the futures about ready to change direction.
Welcome to Schwab Network,
Daily live exclusive content tailored to today's investors.
broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market.
Okay, so today's the last day for this VIX series to trade. We got VIX expiration tomorrow.
No politics, no noise.
Dealers are short VIX down to, I think, 15, the 15 strike where they get long.
24/7, 7 days a week on Schwab Network.
We're trading in positive gamma. If you read the gamma update, you know we're trading in a very high positive gamma state. So above 55.50, 5,600. We're looking for prices to stay above 55.50, 5,600. Watching and looking at the Spiders 0-day setup was coming out of the tight Bollinger Bands at the close. We had 10-1 on the Qs, up volume 10-1. So we look for the Qs to continue performing, or maybe we just start to consolidate. We've had a nice run up. Last night I posted a few charts in the trading room. You might want to check those out. I'll review them right now. So basically, if you look at the New York Stock Exchange, let's go to NYMO NAMO. Okay, so I want to look at NYSE. NYSE is a summation index. Okay, so you can see the dark line is climbing higher highs, higher lows. Okay, there's no occasions where price fell or retested the recent low. Recent low is around 5,000. This is a monthly chart, or 5,100, 5,100. There's no occasion where this was rising. NYSE was rising on the monthly time frame. There's no occasion where we retested the recent low. So the recent low would be 5,100. Okay, an additional observation was the previous. I should go back to that. We got advanced decline percent all moving higher too, so that's bullish for the follow through. We could see some consolidation, some selling into strength. Some people in the room are going on vacation, so makes sense for people to take profits off the table as we're sliding higher or zipping higher before you go on vacation. Here's the NYSE, the summation index for the New York Stock Exchange, with 9 minutes left to go for the opening bell. NYSE is giving you a bullish crossover. And let me just mark this up real quick. Okay, so these crossovers, you can see what happens after the crossovers. Look up top, the top chart. You can see we had the nice rise. We've already had a follow through. So far, we've had an 8-day rally. We've got a bullish cross now. So can we see another follow through? We got a triple top breakout. You can see a higher high. We're going for 19,000.
The market has had expectations of much more accommodative Fed policy for the past 12 months, and it just hasn't happened yet. During that time, the market continues to go up and up. I think that the futures market especially has finally learned their lesson, and now the market is calling for a 25 basis point cut next month. I think that a lot of people have taken 50 basis points off the table. There's probably some people out there who would love to see it just to add more rocket fuel to the
Okay, so
equity market.
triple top breakout potentially on the NYSI. the NYSE, the summation index. You can see the previous crossovers had nice rallies after that. And let me go back to the previous chart because you couldn't see. Advanced decline percent rising across the board. NASDAQ is very hot. You can see NASDAQ is plus 34%. All that tells me is that we want to start taking some profits off, reduce our risk. Yesterday we had NASDAQ 10 to 1 at the close, 10 to 1. Up volume. All the indices had up volume leading, more than 2 to 1. Actually, the lowest was 3 to 1, and that was the Dow Jones Industrials, only 30 stocks. So what does all this mean, Vinny? It means that we could see a follow through, but we are hot. We've been running hot for a couple of days now. Okay. So here's the New York Stock Exchange Composite, 2,000 stocks. This is the volume, McClellan volume oscillator. Now, the importance here is that you want to get bullish when we get down to the green zone, and you want to start taking profits off when we get up to the red zone. So this all plays into some of the things that Brent was talking about in the Gamma update this morning. You might want to check that out before the opening bell. We got 5 minutes to go. We got a VIX expiration tomorrow. We got Jackson Hole. We got the markets ramping higher. Probably not a bad time to take some profits off the table. I have been. What did I sell yesterday? After hours, I took Hollow off. That was a penny stock that I've been playing around with. Got in at average 51 cents. Sold at 61 cents. Got in at 50 average. Sold at 61 cents. Got an average 11 cents on a very large amount of shares. But I was stuck in this for a couple of weeks. And then finally, we're coming back. Okay, right around in here is where I bought. And we started to slide a little bit lower. 35 cents to 40 cents, up to 50 cents. Let's see, what else? Let's see what's going on here. Okay, Frano mentioned VKTX yesterday. VKTX, a couple of people mentioning Option Hawk mentioning VKTX, that there might be, again, rumors abound that this one might get taken out. VKTX. Okay, PayPal, I was just looking at PayPal. Okay, we're at highs on PayPal. We could see some resistance here, most likely will. But you can see that PayPal has some work to do to get back up anywhere near 100. Okay. SPY, TLT, Chipotle, Tesla. Oh, Coinbase. What's Bitcoin doing? Bitcoin had been moving higher. Let's take a look at Coinbase. Coinbase, a lot of action in Coinbase recently. We got 3 minutes to go. 3 minutes to go. Coinbase trying to get back up into this range. Apple, looking for a follow through in Apple. Let me send my son the link to the live stream while I'm thinking about it. Antoine. Okay, we continue to drift a bit lower. Futures are off about 3.5 at the moment. Okay, so we're looking for an opportunity to buy the dip. Okay, AMD was another one that was hot yesterday. AMD looking for a follow through in AMD.
a lot of these private credit funds, what they've done is
AMD. Okay. All right. Lift. Okay. Looking for lift to pop a little bit, maybe. AMD a little bit lower from. Okay. AMD. Okay. Yesterday, AMD announcing that they bought ZT Systems, going after market share, trying to take market share from NVIDIA. Watch NVIDIA as well. NVIDIA sliding a little bit. All right. So we're looking for dips to get bought. We got less than a minute to go, seconds to go for the opening bell. First 15 minutes, I'm just taking profits off the table where applicable, and then let the markets settle down. Reassess the markets after 9:45. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is 9:29, almost 9:30, the opening bell, about to ring. It is Tuesday, the 20th, and we are open. Okay. Apple. AMD drifting a bit lower. Apple. Okay, Apple. Okay, futures are starting to turn the corner. Okay, S&P 500, S&P 500 cash. S&P 500 cash. Yesterday we had lots of liquidity come in. We kept getting buyers come in, 149 million, 160 million, 249 million. We just kept marching higher. And now you can see supply coming in north of 56, up 56.40, 56.45. I see 35 billion up there. Okay, nice little bounce on the S&P, bounce on the S&P. Is that going to be a buying opportunity? S&P, shorts covering on S&P.
Netflix has just been real strong, basically punch, and that's about it. Not a lot of big movement across the giants. Pretty sleepy day in terms of news flow. Probably going to be that way. Tomorrow starts to get more interesting with minutes, and then jobless claims on Thursday alongside some other economic data. Obviously, we've been on a hot streak, so even if we pause a little bit, probably not a reason for concern. Stocks have been on a
Okay, watching shorts cover 0 day.
S&Ps after clearing 5,600 yesterday, began their session right above that level, which takes us back to mid-July and just below the all-time high. So 5670 roughly your high. So we're pretty close to it. Anything can happen. We'll have to put in the rest of the day.
Okay, just watching the S&P right now. NVIDIA, AMD, looking for the bounce. Apple strength. We're seeing some Apple strength. Okay, Bitcoin watching. What's that? Tesla, boom. There goes Tesla. Huge move in Tesla. Holy smokes. Look at Tesla go. Look at Tesla go. Okay, S&P. NVIDIA. Watching Apple.
ripping through that $340 level that has been basically a wall for the stock over the summer. And deep report, what's up?
It was actually a decent report here, although I think the market is just criticizing me because maybe some of the residual issues that they may have saw from last quarter, which was more of an elongation when it comes to the sales cycle. When you're looking at the remaining performance obligations, that just does not seem to be the case right now. Full quarterly revenue came in at $2.18 billion. New receiving machines expectations of $2.16 billion. The adjusted earnings per share came in at $1.51. Street estimates were $1.41. Remaining performance obligations are really the area that I've been kind of focusing on. This ought to have growth around 20% on a year-over-year basis.
Okay, watching Tesla, nice little pop there. Look like shorts covering or something. All right.
Now, they did highlight the fact that the next generation security business continues to outperform. We did see growth of about 43% on a year-over-year basis. And they did make mention about the CrowdStrike issue that we saw about a month ago, 2 months ago.
Okay, there goes Apple. Apple popping. Okay, let's see. Tesla hanging in there. Meta. Okay, nothing yet on Meta. I was looking for Meta to regain some of its lost ground. Meta on Friday, there was news that there was some online selling of drugs using Meta's platform. And supposedly, I'm just hearsay here. I don't get the whole story, but supposedly the posts were approved. And now they may not have been scrutinized heavily, but the news that came out that I guess the Department of Justice was looking at it, or whoever was looking at it, some legal entity in the government was looking at Meta and that particular instance where somebody was advertising drugs on Facebook. So the stock took a dump. I think it was like $10 or so. So we're trying to regain that lost ground. Meta was looking pretty good there for a while until that news came out. All right, so the S&P is climbing. S&P. Okay, we continue to climb. Look at the liquidity going up into today's price action. Yesterday was really monumental. Big move yesterday. All my dreams seemed so far away yesterday. NVIDIA. All right, trying to get back above. There's a pretty decent amount of supply here with NVIDIA. So if we get above this level, okay, if we get above, you can see if we get above 130, that should do it. Let's take a look at Money Magic levels as well. Coordinate with those. If you're a new member, you don't know what I'm talking about. Look through the trading room and look for Money Magic. Okay, you should see a link there. You just click on the link and it'll take you to the room. Otherwise, you put in $money-magic-updates. I can throw it in the room. Okay.
Nice. Yeah, after basically, slowing some of the top line over the course of the last 18 months, kind of seems like they've hit another smooth spot, and looks like the expectations are for them to be able to maintain this cruising altitude of double-digit growth, even though it's kind of, a little bit more muted than it used to be. I think that's all right at this point if they continue to beat earnings as well. And
There you go. Okay, cool. Thank you, Money. All right. So always check that before you take any of the big tech names or the indices. Always check where levels are. Okay, that gives you support and resistance. The green overhead is resistance. The reason it's resistance is because that's where people are currently long in large numbers. So as you approach those levels, as you would imagine, people will start taking profits. So it acts like resistance. Get above the first green box, look for the second green box overhead. And conversely, as the markets lose those levels and start to head down towards the red boxes, that's support. That's just open interest. Large open interest at those levels, you'll see people take profits there as well in puts, and that helps to give us some Vanna tailwinds and push the prices back up. Ping pong in between those levels most often, unless the markets are trending, in which case they all start to slide higher. Okay, so I was going to look at NVIDIA. NVIDIA, we got 131 and 135. NVIDIA, 131 and 135. So we need to get above 130 for starters. There's some supply here that came in pre-market. Okay, that's pre-market. Okay, right now we're watching that. Okay, and AMD, let's see what AMD is doing. AMD. Okay, AMD with some supply overhead. Pre-market right there at 158. It looks like some shorts. We got some liquidity down here where people will most likely, investors will most likely cover their shorts and perhaps look for a long. Okay, you can see there's 177,000 that traded pre-market up there, and there's only 9,000 down here at 155.50. All right, watching the daily over on the right, AMD. What's Tesla doing? Tesla had a nice pop this morning. Okay. Look at all the liquidity down below. So these are buyers sitting here waiting for a follow through. We got resistance over on the right chart. On the right, you can see 225. Okay, 225. There's some supply there. Let's look at Tesla Money Magic levels. 225 also shows up as a major open interest. Above that, 230. 230. Okay, S&P continues to climb. S&P is climbing, so we're adding liquidity. Buyers showing up, pushing the markets higher. We saw what happened yesterday. Let's go to the 15-minute, and I'll come back to the 5. Okay, so look at that level right there. Okay, you got 1.1 billion in volume right there yesterday at 55.50, and we're just cruising along higher. And you got some resistance overhead in the daily chart over there on the right. We get up to 56.50. We're going to run into some resistance. So if you're trading long the S&P after that little dip, was a nice little buying opportunity. Okay, hologram, I got out of that one, so I'm not participating, but it is starting to bounce. Hologram, some of you are looking for higher prices on these cheapies. Let me go to IWM, was it? No, IMN. IMN was one Mondo mentioned this morning. IMN. Was it IMN? INM. Okay, INM. Sorry. INM. INM. Is that was that Intellistat? Is that what that is? Okay, S&P, nice rally up to some resistance just overhead. Yesterday we ran into this level. Let me just zoom out a little bit. S&P. No, that's pre-market. I'm looking at pre-market. Sorry. Pre-market. ES, pre-market. Right in this level, we started to run into resistance, 56.36 up to 56.37. We ran into some resistance on the futures. Okay, we just got a little sell bar there. It's just like it's incredible. I mean, it really is like this like magic drug. It's how often do things like live up to? Okay, can we get a follow through? S&P. Okay, watch Meta. Meta looks like it might want to do something. We've got AMD starting to bounce. Meta, AMD, watching those two. Meta, AMD. It's like trying. Okay, Meta and AMD trying to edge higher. Bitcoin is flat. The S&P looking for a follow through. Okay, Coinbase. Let's look at Coinbase. That was one that Joe over at Option Hawk was looking to get long. Okay, following through, a little gap up.
Because of obesity, so now you got something that fixes it, and guess what? It works. So, all right, all of a sudden, these risk points go down significantly if you're able to find a way to lose weight. Okay, some of it though, to your point, definitely aesthetic as well as a lot of folks. That, like it's a cultural thing. Yeah.
Apple. Looking for Apple to follow through.
Seems like there's a lot of folks who can afford it that don't qualify, and that's where kind of like the business proposition of Eli Lilly is tremendous.
Apple.
Medical procedures or
Apple.
are also being used by
Apple pushing a bit higher. Apple trying to break higher. Netflix on the move. Thank you, Timmy. Netflix. Timmy looking at Netflix. Oh, thanks, Timmy. Okay, Lilly on the move. All right, so Lilly is also on the move. So we were looking for Lilly to consolidate this week on that Thursday, Friday pullback. It had a doji yesterday. Now it's following through. Lilly, nice job there. Nice job holding on to that one, acceleration. 3-day flag. Okay, S&P looking for more upside. Trailing stop at 56.06. Price is $6 above that. The trailing stop I have on S&P is a 1.5 times ATR. So let's go take a look at the S&P. S&P cash. S&P cash approaching all-time highs. I thought maybe we'd get there by Wednesday or Thursday. Still possible, I guess. We've got a VIX expiration tomorrow, so that's going to impart some volatility, most likely. You'll see the S&P jumping around. So something to keep in mind. Okay. Okay, so after a almost 10% pullback, we've rallied quite a bit. 200-day right there. Okay. Alaska Airlines got approved, that merger. Oh, that's cool. That's good to know. Everybody was, a lot of people were thinking that that wasn't going to be the case. All right, so we got volume showing up. We've got MACD full on bullish. It's the bulls to lose. Bulls to lose here. Stochastics embedded like it was over here in May and June. Last time stochastics got embedded like that, it was just telling you look for closes in the upper half of the daily range. We had a really bullish breakout of this cup and handle pattern. Right now, we're looking for a follow through. Why am I looking for a follow through, you might ask? Well, there's a couple of reasons. Looking for a follow through in the S&P 500 because of the momentum. A lot of stocks being bought, broad market participation for one thing. Okay, we can see the McClellan volume oscillator is bullish. It's rising from the green zone. You want to buy near the green zone. You want to sell near the red zone. Yesterday, NIMO and NAMO giving us bullish crossovers on their summation index. Okay, here's the New York Stock Exchange summation index, New York, the McClellan volume oscillator, McClellan oscillator. Okay, summation index crossing over bullish. Whenever that happens, we have at least a few days of upside. Maybe it was front runners, but we have a triple top breakout following through. So that looks good. Netflix, watch Netflix. I wouldn't buy it up here on the run. I'd be looking for a little dip. This does look good though. Netflix, it can run quite a bit. Netflix has a pretty decent ATR. Let me go check that real quick. Netflix ATR is like 15 or 20, something like that, right? Netflix ATR is $17. Currently up 12, so you got about $5 and change more. There goes the S&P. S&P riding the upper Bollinger Bands on the 0-day setup. S&P is riding the upper Bollinger Bands on the 0-day setup. Okay, here are those Bollinger Bands. Okay. On a 5-minute, you got the S&P running the bands. S&P. Let's go here. Get the S&P riding these upper Bollinger Bands. All right, the lower band's pulling away, so that's telling you big move coming. All right, looks good. Nice job, S&P. S&P is ripping. S&P is ripping. Looks good. Okay, S&P is riding that upper Bollinger Band. S&P 500 cash riding the upper Bollinger Band. Don't buy it at the high. Wait for little dips. This is probably going to be a follow-through day. Extraordinary follow-through day. Coinbase, looking for Bitcoin to continue higher. Joe K identifying some end of the month calls on Coinbase. Buford mentioned those as well. Okay, we got cyan colored bars on the S&P, cyan colored TTM bars. Looks like we might be topping a little bit here. Some people probably take some profits off. Let's see what we got going here, S&P.
Regime coming? Is that what's limiting? Are rates too high? Is that what's limiting the housing market right now?
Yeah, I think if you talk to some of the entry-level builders we cover, they would like to see mortgage rates in the mid-5s instead of the mid-6s where they're sitting now.
Okay. Many of the members are telling me that they're thinking about taking profits off into this week. One in particular going on vacation. Good idea. Have a stress-free vacation. Enjoy your sun, Scott. Okay, let's see. Okay, AMD. Let's see, AMD. S&P is still climbing. Okay, I'd be looking for a little dip in the S&P for an opportunity if buyers show up. VWAP is just below price. You can see that's trailing price, those three little dots there. Okay, Netflix is still going. You got about $3 to $4 more before you fill out 100% of your ATR. Looks like an expansion day. You can see that chalk on the daily. Change of character. Okay, breaking out above that pivot right there on Friday, the 5th of July. Okay, you can see that chalk shows up. We break above that level. Change your character. Look at the volume. Look at the volume underneath. Okay, you got a lot of liquidity. 25 million shares, $25 million. No, 25 million shares trading hands here. Dollars. 25 million shares trading hands. Sorry. Got a little excited there. So this looks pretty good. Okay, looking really strong. Let me go to the hourly chart, see if I can find some levels here. We continue to run, so there's not a whole lot of resistance.
Get some relief from the macro side, then some of these, I guess, kind of neutral views might start to warm up a little bit. Kind of waiting for some clarity on that front.
Yeah, I mean, we need to see some help, consistent help on the rate front.
Okay, Meta. I'm looking for Meta. Okay, there goes Meta. There goes Meta. Meta popping. Apple. Yeah. TLT. Yeah, I had the 100 call on TLT. I'm looking for that to happen. October.
Okay. And Toll Brothers, we're looking at like the highest average selling price.
AMD. Meta looking good. Meta. All right, Meta cruising higher. Oh, there goes the S&P. Forgot about it. There goes the S&P. Trade. All right, so Cayman, you were in the Qs, right? You were in the Qs yesterday. Did you sell or did you keep some of these? Qs looking good. Qs looking good. Let's see. Okay, down volume leading. Okay, it's 1-to-1, 1-to-1. So that could be a doji day. If it keeps up. Individual stocks should be fine, even though we got a doji day on the indices. So far. But the markets continue to move higher, Vinny. Yeah. So I'm watching for it to get a little bit more extended, maybe some profit taking coming in here. Coinbase. All right, watching Bitcoin. COHR. Okay, COHR. All right, the Qs, watching the Qs here. Okay, let me look at NQ futures. Okay, NQ futures. Okay, S&P still going. AMD popping. AMD. There goes AMD. All right, S&P running. All right, S&P is running higher. Meta, Apple. All right, everything is going now. Everything is going.
Seems reasonable, but you do kind of need some action here.
Yeah, you definitely. Well, that's the whole thing. When you collect a credit on a strategy like that, that allows it, even if it just does consolidate and doesn't move at all.
Okay. looking good. Going into 10 o'clock, the markets are blasting higher. So a little dip first, then a rip. Looking really good. There goes Meta. Meta following through. Tesla looking forward to spring out of this consolidation. Apple going. Apple looking good.
And then you look at the data too, that's been coming out. New home sales have been horrible. Starts and permits.
They have been very slow, yeah.
Exactly. So
Totally makes a lot of sense.
incentives in Jay's neutral stance on this $150 price target. This kind of sets up with that. So look at the downside. Put calendar in Pulte. I'm going to go out to the September monthly cycle.
Okay, looking for some profit taking. Nothing yet. Nothing yet. Futures. Okay, watching the futures. Wow, that could be another one of those days where they just bang it higher.
This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week. Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis.
Okay, Apple. Okay, that looks good. All right, so we just got Tesla just dropped off a little bit, some profit taking looks like. Meta looking like it wants to follow through.
Checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you with unlimited ATM.
Coinbase looking for a follow through. Futures.
Security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location.
Okay, we got some resistance overhead. We just got whack-a-mole back down.
That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank.
Okay, got a little bounce. Okay, let's see what happens here. Futures. All right, so you don't want to chase. You just want to wait for these pullbacks. Okay, futures. Looks like we're going to go again.
Welcome back to Morning Trade Live. We're in hour two here. 30 minutes into the session, stocks are starting to get some momentum. Big tech coming together as the Mag 7 are green and the NASDAQ futures are leading the market. So we've got a little bid coming in and it's nice. We're going to keep talking some retail. We're going to talk some earnings.
Okay, let's look at some things that we were thinking would follow through, like Google. Google looking pretty good, following through out of the gate. Google looking good. Higher highs, higher lows on Google. Amazon, a little dip. Apple out of the gate, just pushing higher. Now it's dropped back down. VWAP flattening out. Apple, Broadcom. Let's see what the semis look like.
See how it meshes with the earnings outlook. Is it as rosy a bull market thesis as the market seems to believe it is right now? Chartmaster taking a look at Target alongside Macy's and Analog Devices, all giving us earnings tomorrow morning. It's actually going to be a pretty fun day tomorrow for earnings as we get some interesting stocks. Target and Macy's.
Okay, Palo Alto, the top of the
Consumer discretionary. So
top of the NASDAQ 100. Palo Alto.
later on this morning. Right now, I have Mr. Bill Lichtenstein, host the Future Show, with me here in the studio, and we're getting some momentum here, Ben. Tech kind of picking up the pace.
Yeah, this has been a bit of a trend that we've seen. I feel like kind of a chop, mixed overnight session, a little bit of conviction throughout the day. To the
Palo
upside,
Alto.
indices. We're definitely seeing that with the S&Ps headed into their 9th day higher here.
Almost 2 weeks just straight up.
A blistering pace at that. Oliver, you mentioned that this move up in the NASDAQ.
AMD, nice follow through on AMD.
I would agree, within 100 points of
AMD.
1,000 level today. The futures up to 19,931. It looks like, and even the S&Ps. We're within 100
Okay,
points.
looks good. AMD.
There's two things I look at in terms of price.
All right, Coinbase looking for the pop.
Which over the longer term, it's to the upside in the S&Ps, and that really never came into question, even with the intermediate, more intraday downtrends that we saw coming into play as we posted those lows for the month of August and the first week of August. But the other thing to look for is amount of time that you spend on an extreme, right? Or when you establish an extreme, and by definition, you don't spend a lot of time down there. So now we're kind of starting to
AMD.
around this 55, 5,600 level. And I wouldn't be surprised if we spend some time.
AMD, looking for AMD to follow through as well. AMD, looking for a place to add to AMD. I'd be looking for a little dip, BNC pivots on AMD. This looks pretty strong. AMD very strong.
Yeah, buying dips, and we're no longer selling rips. We're closing at highs. Yesterday we did have a little bit better participation because the Russell and the Nasdaq were rallying together.
Netflix being chatted up on social media. Not chat, but Netflix would be good. Netflix. Okay, now we're starting to flag. All right, so you might get an opportunity. Could keep going, but looking for an opportunity to pull back towards VWAP around 700 and still be bullish. All right, so S&P is still consolidating. Apple looking for the follow through. Tesla coming back a bit. Tesla giving some back. Meta looks like it's going to take back some of the losses. Meta looks like it's going to take back some of those losses, perhaps. Looking for a push back up to the highs. We got supply overhead, 189 million shares traded hands there. So that'd be an area to break through.
Jackson Hole on Friday, and then you've got NVIDIA next week. I think in terms of tech, that's going to be the biggest next catalyst, right? And no stranger to beats here. The question is, will they continue to surprise to the upside along the same lines, the same extent, or do they start to show signs of things kind of tapering off? Because we talk about, when you're at that, the pace and the gains that you see over a short period of time, tough to sustain. But Oliver, the other thing today, speaking of gains,
Okay, Meta climbing, Meta. Okay, let's go see what is working. Okay, so the Dow Jones, we got Walmart following through. Still in a consolidation for the past 4 days after earnings, gapped up, staying right at 74. McDonald's, looks like McDonald's is going to follow through. Okay, let's look at the weekly on McDonald's. I'd like to get back into McDonald's, but I do see that we have about 10 bucks more to go. So I'd like to get a dip to get into McDonald's again. I sold on Friday, and then we popped up on Monday. So McDonald's. Okay, we're up here at the highs now. McDonald's. Okay, looking for a little dip to get in. All right, the S&P, a little dip there. Looks like we could get going. We've still got a trailing stop that has not triggered. 56.15. We're at 56.15. S&P cash. All right, so it's a little after 10 o'clock. I'm your host, Cousin Vinny, coming to you from the closingprint.com. It is 10:10. 10:10 wins in New York City. Good radio station. It is 10:10 on the East Coast. It is Tuesday, the 20th of August. Looking for a follow-through day. Tomorrow we've got a VIX expiration, so many are looking for reasons to take profits off the table. Probably not a bad idea to reduce your risk, especially if you're going on vacation, with as Scott is doing. Okay. Yeah, definitely. Definitely sell the news, I would think. Because we've run up. Look at how much we've run up in 9 trading days, right? So the fact that we've run up as much as we have, I'd be looking for a fade, especially on Friday. Looking for a fade. Okay, since 1994, the longest streaks of positive daily returns for the S&P 500 stands at 8 days with a return of 7.6%. Only 3 times in 30 years have we had longer streaks, and the maximum return for those streaks were 6.35%. So let's go take a look at the last 2 weeks. S&P. Okay. Look at the weekly. Okay, so we've moved 5,300 up to 5,600. 5,300 5,300 to 5,600 in a week. So, that's like what, about 5.6%, something like that, close to 5.6%. So roughly 5,300 up to 5,600. We're a little bit above 5,600. So I'm just rounding down a little bit. So about 5%, I guess 5.5% or so at the moment. So the biggest gains we've seen over 8 trading days going back to 1994, we're on a streak right now. The biggest gain was 7.6%. Okay, so it appears to be some sort of buy function in the markets propelling us higher. Okay, that's a hell of a move. Today's day 12 off the low. All right, let's go take a look at the Japanese yen, Aussie dollar carry trade. We want to see this continue to fade. It is. It's down to almost to parity now at 1. Okay, big drop in the S&P. Big drop in the S&P 500. Okay, Coinbase rolling over. Bitcoin rolling over a bit. AMD, Apple. Okay, so pretty volatile at the moment. Okay, let me look at AMD. All right, so this is fading, which is what we want to see. Breadth is still improving. Remember, NYSE and NASI have turned higher. That tends to lead to more upside. That said, we did rally prior to that crossover, so we've already put in like 4 or 5 really bullish days. And many of these stocks are replicating that change in direction on the S&P. because the S&P just dropped here. All right, do we have another buy? All right, so we don't have a setup right now in the S&P 0-day. All right, 0-day Bollinger Bands need to come back together on the 5-minute. Currently, they're pretty wide apart and turning back in with price action. We've got a dark blue TTM bar, so that's telling you to wait. And down volume is leading almost 2-1. Down volume's leading almost 2-1. So we got some people taking profits off into this strength. AMD is above the 200-day and the 50-day. I thought we would get more rejection, but now we're above. Look at Bollinger Bands, AMD. Okay, this is AMD. Look at those Bollinger Bands. Look at MACD and Stochastic. Everything is set up. Everything is set up at this point. Let's see. Okay. AMD looks good. Above the 200-day and the 50-day. Looks pretty bullish for AMD. Note the Bollinger Bands. Okay, looks good. Okay, we are back down to the lows. So that was a pretty quick move on the S&P. Looks like some profit taking. Use a stop underneath the low. Use a stop under the low for AMD or the 200-day. What do we got? Hold on one second. I got to get this. All right. All right. So we just made a new low here for the day. Okay. ES Meta pulling back. All right. So stocks pulling back. Okay. Looking for a bounce. All right.
Certainly in front of the Fed meeting coming up, middle of September. Okay, all right. So you, by a couple bucks, you want to stay under a couple dollars. You don't want to.
Okay, looking for a bounce. Can we bounce back up towards VWAP? Okay, let's take a look at Lee Star's slow mo trade. Okay, so Lee Star's slow mo trade works like this. When you cross above the teal colored lines that I'm about to show you, you're looking for a long. Okay, so that was at 538. Now that we're up at the highs, we're looking for resistance supply overhead. So I'd be interested to see what Lee Star has posted. Let me see what he's said anything this morning. Okay. All right. So he's looking at NVIDIA for a retracement. Okay. Good job there. Okay. Looking for this dip to get bought. I agree, Lori. Looking for this dip to get bought with positive gamma. Okay. We're still pushing a bit lower though. Waiting for some shorts to cover. All right. So watching the hourly slow-mo trade, possible dips back to some support zones. Let's go look at those levels. Okay, ES, watching. All right, so back to VWAP makes sense. Look for buyers. Okay, we're still dipping. If you look at the 0-day trade, Bollinger Bands are still pretty wide. We're below the center line of the Bollingers. Okay, I don't see anything to do at the moment. Okay, AMD still looks pretty good. I did fade from the high of the day, but AMD looks good. Bitcoin pulling back. Apple. All right, you can see how markets are starting to get a little squirrely. So you really need to buy dips and sell rips. Okay, so markets are very quick to take profits away from you. We are positive gamma, so that's good. So we're looking for the dip to get bought. Future's still pulling back. Let's look at S&P cash. S&P cash below VWAP. Okay, we could start to see a little turn here. All right, S&P cash.
Have a choice in how you invest with Schwab.
No politics, no noise, about and beyond. Available anytime, anywhere, on any device for free.
Okay, looking for a little bounce.
Stocks pulling back a little bit this morning as we lost the Russell and an early tech bid turned south as well. So we've got some red on board after a sprint higher for the last 9 days. Keith Buchanan joins us from Global Investments, Senior Portfolio Manager. After our face ripper the last 2 weeks, Keith, should we be slowing down a little bit here? Tell me what you think.
All right, looks like we could turn the corner. Looks like we might turn the corner here. 562 SPY. All right, let's just look at SPY, S&P. It looks like returning SPY.
Assumptions that are really whipsawing this market around. As we saw the put drawdown in 2 days and kind of the last 8 days of recovery from that. We we feel like that volatility could perhaps continue as we make our way through a pretty tenuous period for markets going forward.
When you look at the events here this week, minutes, and then on the Fed and Jackson Hole with Jerome Powell, do you think the market here is going to really move on this stuff, or
All right, let's see what the Qs look like. Qs also dipping, starting to bounce now, the Qs.
Sure, I don't know if the markets completely are certain of what they want, what their expectations are. I mean, 2 weeks ago we're expecting after the crash down and after some of the jobs market report and a CPI report that scared the markets. We looked at going into the markets were expecting a recessionary environment and 150 basis points of cuts.
Okay, we're sitting on top of some liquidity, so hopefully we can push this back up towards VWAP, the Qs.
Between December and November. So the markets really pulled back a lot of that recessionary, hyper dovish assumptions that the Federal Reserve had.
Watching Apple for the bounce. AMD flagging at the high of the day. AMD. Okay, looking for a higher low. Nice liquidity coming in. Bitcoin pulling back. Bitcoin. Meta at support right now. Meta.
where then do we need the relief?
Tesla.
Is going to provide a little less restriction. Then do we get some of these like value or economically dependent companies to lead? I mean, that's kind of been one of the main questions here, Keith, is what market rallies us back? Is it the small cap rotation or is it the big cap reliables? You got any dog in either of those fights?
Sure, we've been biased towards large cap growth for some time now, and most recently, the past 4 months, have dialed that back. As we just saw the imbalance of positioning when it comes from a valuation standpoint, pretty widespread just optimism within the Mag 7 concentration of market cap and assumption of growth. We just felt like that was imbalanced.
Netflix still hanging in there. Netflix.
Kind of going forward from earnings standpoint, the earnings expectations are for that growth too, which is primarily a lot of it has come from the Mag 7, which kind of justifies.
Okay, let's look at the stocks that are holding up the best. Palo Alto holding up very well. Netflix holding up well. Okay, these stocks are the top of the NASDAQ 100 right now. Number 3 is AMD, pulling back the VWAP. Orly Automotive. Okay, that one's at the highs. Intuitive Surgical, ISRG. These are the top 5. Okay, flat VWAP at the moment. IDEX, IDXX, Laboratories, Veterinary Sciences, Zscaler. What's PayPal doing? Zscaler, PayPal. PayPal's number 8 on the NASDAQ 100. PayPal. Costco is moving up the NASDAQ 100 list. Costco moving up the list. Costco looking good. Costco moving up the NASDAQ 100. Costco moving higher. Okay. Fortinet. Fortinet. Okay, let's take a look at Fortinet. Looks like Costco wants to keep going. Fortinet at highs. Zscaler. Let's take a look at Zscaler. That one's on the watch list. Okay, consolidating at the moment. Nice run up over the last week or so. Lululemon. Okay, that one's bouncing back above VWAP. Daily has got some resistance over there on the right. Daily, Lulu, Google had a nice looking chart changing direction on the daily on the right. You can see we're changing direction just a few days into a possible trend change. Got some resistance overhead at 172, 173. Microsoft, that one looked good yesterday. I believe, Steven, you were buying Microsoft some yesterday, looking for a follow through. Okay, so I see a lot of stocks with flat VWAP. So, you know, curb your enthusiasm at the moment. Just waiting. All right, so S&P 0-day setup is still invalid at the moment. We need to see the Bollinger Bands contract a bit more. TTM is still dark blue bars, so there's no cyan bars showing bullish momentum. Down volume is leading 2-1 on the Qs, 2-1 on the NYSE, New York Stock Exchange, 1-1 on the composite, NASDAQ composite, 1-1 on the diamonds, the Dow Industrial Diamonds, and 2-1 down on IWM. But all indices are showing down volume. Yesterday it was all up, and last week, most of the week was all up. So reducing your exposure.
Good thoughts. Thanks, Keith, for your time. Appreciate the catch up. Got Keith Buchanan, Senior Portfolio Manager at Globalt Investments. All right, coming up, we got some charts to get us ready for tomorrow. A macro discussion, I think pretty well rounded there this morning. Let's keep it going with the earnings and the micro data. That is corporate reports from Target and Macy's. We talked to TJ.
Okay, so we're looking for buyers to show up at the lows. It is 1-1, 2-1, 1-1 on the NASDAQ composite, 2-1 down on the Qs. It's not going to be straight up every single day. Okay, what's AMD doing? AMD, all right, right above VWAP. NVIDIA below VWAP.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex.
Meta,
Get 24/7 live help and access to
Meta trying to bounce back above VWAP. Meta.
and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market. Weekdays and Tuesdays on the Schwab Network.
Okay, so right now we're just sitting at the lows of the day. We could drop a bit more. We've been up quite a bit in the last few trading days, so you shouldn't be surprised that we're giving some back. We're not going to go straight up every single day. 2 steps forward, 1 step back. We do have positive gamma, so that's a good thing. We got breadth improving. We did see the NASDAQ a bit overbought. If you recall, advanced decline percent was way up there, 34%. So above 30%, plus 30%, you want to start thinking about reducing your risk. We're trying to edge up here to all-time highs on the S&P cash. Okay, we're trying to edge up here, but we got a little, looks like a gravestone doji so far. RSI is above 50. Momentum is clearly bullish. Volume looks like institutions. Are they just going to keep buying, or are they going to start taking a little profits off? We're watching for that kind of price action to dictate what we do next. All right, so the bottom line, though, is breadth looks pretty good, but we've run considerably over the last 12 trading days off the low that was put in after the Aussie dollar, Japanese yen carry trade blew up. The markets dropped precipitously. We had the 10-year yield. Speaking of 10-year, let's look at the 10-year yield. And, before I do that, you can see we moved above 30. Now we're back down on the NASDAQ in the lower panel. Okay, all of these turning back down a little bit. So not unexpected. Not unexpected. NYSE and NASI, this won't change until later, but we have a nice crossover. So it's neutral to bullish. Okay. We did triple top breakout. Do we fail and pull back in? I don't think we're going to drop back down too far into this pattern, not with a positive gamma. Now, if we start to drop below 5,600, S&P below 5,600, 55, 55.50, then it becomes a little bit different. We're right at 5,600 right now, so we're looking for a bounce. Okay.
They reported a year ago. So amazingly so, Street still feels pretty optimistic on this day. There's 20 buys, 11 holds, and no bears. And the average price target is 258. That implies 15% upside.
All right, so that's S&P. We want to stay above. Definitely want to stay above 55.50. It would be nice if we stayed above 5,600 and start to find some buyers. Bollinger Bands opening up. We saw that with AMD this morning. AMD, Bollinger Bands opening up. Whoops. AMD. Okay, AMD back above. Let's look at the New York FANG index. Pretty significant buying in this one. We're above the 50-day, so that's a good thing. Can we get back some of yesterday's gains? Probably. Okay, so we're still at 60, 59.70 on RSI. MACD stochastics are still full on bullish. This is day 12 off of that reversal candle off the 200-day moving average. Day 12. That's a pretty significant run. There you go. They're dropping off a little bit more now. S&P dropping off a bit more.
We have broken out of a short-term downward sloping trend line beginning with our 52-week highs, this blue line here. We also simultaneously crossed above our
What's TLT doing? Speaking of TLT, let's look at bonds. TLT trying to get back to 100. Skier mentioning that one earlier this morning. I got the 100 call for October, so I'm looking for TLT to get back up to the highs. Junk bonds tend to lead. All right, so we're at the upper Bollinger Band. Now, this is telling me is that there's probably some profit taking. We've had a huge run over the last 12 trading days. The Japanese yen, Australian dollar fading. All right, so it looks like it might be consolidating right above parity, right at the 1 parity level. All right, S&P dropping off pretty hard now. Lower bands are at 55.90. Lower bands on the S&P 0-day 5-minute chart is at 55.90. Down volume, while it is red, it's not increasing markedly. It's still 2-to-1 on the Qs. Hasn't changed much on the Qs. Let me look at the tick. Cumulative is still green on the S&P. Still green on the hourly chart. Let's look at the 5 and 15 are probably crossed over. Okay, that's giving us a red signal. All right, so right now, yeah, looks like they're selling a little bit more than they're buying. We did get overbought, so let's take a look at S&P equal weight. See how far we made it. I think we got up into the red zone. Yeah, we did. Okay, so we got up into the red zone. A little profit taking again. Does it mean that we're going to just drop like a rock? I doubt it. But, we're at a triple top on the equal weight index. That removes the weight of these stocks on the left over here that are seeing a little bit of profit taking now. So, yeah, can we come back into this for the next couple of days? Maybe fade into Friday? Possibly.
expectations from the street too. So feels like maybe you've got a potential to disappoint. Chart that looks good. So let's talk retail. Target and Macy's.
Okay, let's look at a few names. Let's look at PayPal. PayPal. Okay, we're at high, so wouldn't be surprised to see PayPal come back for a few days to get back to the 9 EMA. Okay. A few weeks ago, we popped up and then dropped pretty quickly from 67 down to 60 before we bounced at the 50 day. So we're above the 50 and the 200 day, above the 9 and 21 day. My guess is that we could, at a minimum, flag sideways or consolidate up here near 70 on PayPal. Let's look at the weekly trend. Okay, you see the volume starting to pick up as we're changing direction. Perhaps this flat price action that we've seen for the last couple of years resolves to the upside. S&P is still moving lower. S&P cash still lower. Okay, S&P cash moving lower. Overstayed, you're welcome, perhaps. All right, we got some liquidity down below, so watch for this area for a bounce. Let's go to the 5 minute. 5 minute. Okay, we got a big area of liquidity below. Remember yesterday, there was a lot of buying up into this area. We got positive gamma, so I wouldn't be surprised to see a bounce pretty soon. Hasn't happened yet. We still see positive gamma all the way down to 5,500. That's where the negative gamma starts to pick up, 5,500. So we want to stay above 5,500 for sure. Okay, so here's your S&P absolute gamma. Okay, so here is 5,500, 5,550. All right, so you can see there's a very large area, both puts and calls, right at 5,550. So we want to stay. All right, we're starting to see some short covering already, right at this level. Starting to see shorts covering at 56.20 on the futures, 56.20 futures. Let me go to, can I shift this to, let's see, SPY. Okay, SPY. SPY. Okay, that looks good. Let's go down here and look at these levels. Absolute gamma on the futures, 55.73. We're currently trading 56.20, moving a bit higher now. 56.17, 56.17. Call wall's 57.73. Put wall's 53.23 for the futures. 5,300 for the put wall on S&P cash. 57.50 is the call wall. Looking for a bounce that hasn't materialized yet. 55.50. These are the levels we're watching right here. 55.50 and 5,600. Okay, we're right on top of a level that we saw yesterday. Some liquidity in this area. Liquidity looking for a bounce. Haven't bounced yet. NVIDIA pulling back. Apple pulling back.
So that will be the hurdle to clear in the short term here. RSI showing a long slide to the downside here, connecting these highs. We saw a little bit of bearish divergence here because we had RSI making a lower high while price made a higher high. So that was a potential warning sign there. Not really what you want to see, a sign of deteriorating momentum here. More recently, we're seeing that RSI crossed that
Oh boy, I hope everyone's having a decent day, even though we did pull back and continue to show weakness at the moment. Down volume is leading. All right, so we've had up volume for the past 5 trading days that I'm watching anyway. The last 5 trading days, tick is at minus 184, so there's no setup. We've got red TTM bars showing up on the 0-day setup, so there's no active setup on the 0-day. Just sit and wait unless you're short the markets right now. Just wait for setups.
Holding on to this kind of middling range there, is a decent event on the chart. For all the talk about how it's losing out to Walmart and stuff, it's actually trying to hold on to this range.
AMD, Apple, AMD pulling back.
On top of that kind of gap up, then maybe you get the breakout beyond this channel, and that would be a really big deal. And that's been a lot though. It could happen. Volume node near here would be another spot to watch as well. Once we start getting up to
AMD pulling back. All right, so look really bright this morning, and then we get this reversal. Palo Alto is still leading. Palo Alto still leading the NASDAQ 100. Don't chase it up here. It looks really good, though. AMD, Zscaler. Zscaler trying to push higher.
It was a decent quarter last report. They actually beat expectations, but not expecting any sort of vast improvement this quarter. They are engaged in this multi-year transformation. Year-over-year clothing sales did accelerate a bit last quarter, which could create somewhat of a favorable backdrop. But if there's any disappointment from last quarter, it was that they did more discounting versus the prior quarter, which led to about an 80 basis point contraction in their gross margins to around 39%. They blamed weather and they expressed confidence in their margin improvement, given the better apparel products on shelves. So it's important, I think, to see margins stabilize here. If we're hoping for any sort of recovery, any turnaround, you need to see stabilization. And so, I mean, for them, we are expecting at least some degree of adjusted earnings are expected to come in around 30 cents a share. But there is not a single analyst that has a strong buy or strong buy equal rating on this name. There's 3 buys, 10 holds, 1 underperform. There's no sells. So straight is fairly neutral.
Okay, looks like we could get a bounce here. We're at the 0-day lower bands. S&P at 0-day lower bands. All right, looking for a bounce. Looking for a bounce with the lower Bollinger Bands. Looking for a bounce soon. Okay, ASTS watching that one.
Similar situation to our last chart. We cleared our 21-day EMA, struggling a little bit with our 2 other moving averages, orange 63-day, purple 252-day. The difference is we are marginally above them. We are knocking on the door of these previous lows here as well. The low point that we had before the gap up. So be on the lookout for some potential resistance near this area, just below 18. If we were to move to the upside, once again, we have another gap to watch here. This time a gap down, lines up pretty close to our trend line and our volume profile. Point of control, here about 19 or so. To the downside, we've got our moving averages, our green line, our 21-day EMA. We are about 6. Invalidated not only our downward sloping trend line, but we also broke above the 50 midline. So that's a more encouraging sign for the bulls, and couple that with price at least making some progress beyond our moving averages, maybe not completely overcoming having this resistance yet, but more positive development here for bullish traders.
All right, nice. Encouraging them for Macy's chart actually for the first time in a while, trying to turn around, but boy, overhead resistance gonna be a challenge. Thanks, Rick. Thanks, Jenny. Okay, good prep for tomorrow morning. Coming back, we got our market meetup. Gonna chat about this turnaround as the Russell.
All right, nice little bounce so far. S&P. Okay, we're coming into 11 o'clock. A lot of times we'll see a pivot around this time period. Or we already got the pivot. So pivot. NVIDIA back to 50% retracement, 50%. 50 is your friend, as Lee Star likes to say. NVIDIA. Meta. Okay, Meta looking for the bounce. ASTS starting to bounce.
Technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere on any device, and available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
All right, S&P bouncing. Zscaler looks good. What do I want to do with Zscaler? Zscaler, I can't buy it. Started off the week strong. It was on the watch list. Could have bought yesterday on its strength in Palo Alto. Palo Alto showing up with strength today. NVIDIA. Let's see. NVIDIA looks like it wants to perhaps bounce here. Okay, NVIDIA, I don't see a whole lot of liquidity. There it is right there. All right, so let me go to the 15 minutes, see if I have any more closer to price right now. No. 30-minute. Nope. All right, so I got a 50% retracement in between these two levels. You can see that. If I had a Fibonacci on here, you would see there's selling, supply overhead, short at the open, pre-market. You've got liquidity down below and right in the middle at a 50% retracement. Buyers are showing up. Lee Star posting a chart as well. Looks like we could see a nice little bounce. All right, Bitcoin's still fading. Bitcoin's still fading.
Users, though, if you look at the S&P 500, take a look. Insulet and Dexcom. Insulet's an insulin management company.
S&P with a nice bounce off the lower Bollinger Band.
Big losers today. Dexcom down about 6%. Insulet down about the same. Have to wonder if Eli Lilly is weighing on shares because Eli Lilly, of course, is one of the S&P's biggest winners today on those positive late-stage results for its tirzepatide weight loss drug. So in diabetes patients. So, that's notable. In terms of some of the other winners that we're seeing today, Palo Alto after earnings, Darden Restaurants now up 9% this week. That's the parent company of Olive Garden and Ruth's Chris Steakhouse.
Okay.
One other quick thing that I wanted to note, I know you've likely focused on Lowe's today in terms of the retail space after it reported earnings, but take a look at Amer Sports, ticker symbol AS, up about 11.5%. This is the parent company of Wilson and Arc'teryx. I don't know if you know that brand, but it's pretty popular in our household. But
all right, it's 10:53, coming into the 11 o'clock pivot hour. We usually see pivots this time of day. We're a little bit early on the bounce. You can see what I'm looking at here. The lower Bollinger Band price came right down to the lower Bollinger Band, and then we saw some shorts cover. TTM is still red, so that needs to turn, and we need to get down volume to back off a bit. So we did see some selling. I don't think they're going to sell, just keep selling, 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 selling. I think they'd like to see prices move back up to the highs again, sell a little bit more, let it drop a little bit, sell a little bit more, turns into a doji. If you follow my train of thought, we've had 12 days up since the Monday 2 weeks ago, 12 days up from the Aussie dollar, Japanese yen carry trade that blew up. So it makes a lot of sense to put in a doji as institutions take some profits off the table. Okay. Here is the slow-mo trade, S&P. You can see the doji on the slow-mo trade. This is a 60-minute time frame. Okay, so we're just consolidating up here. Once you push through the teal colored lines, those green or teal colored lines, that's the long setup. You look for options. Leastar usually looks at 2 months to 3 months out and a 40 delta, I believe, right? So the slow-mo trade has a pretty good record, okay, over the years. I think he's gone back like 4.5 years now. Pretty good record, wins versus losses. Okay, so that's Lee Star with the slow-mo trade. What did I want to show you? VIX VXV. Okay, we're just starting to go potentially red. We got a VIX expiration tomorrow. We got a bounce underway. S&P, we got a bounce so far. Okay, S&P. Let's go look at the value. Let's look at value and growth. Let's see what these look like. All right. Okay, so we had a nice rally over the last 12 trading days, pushed back above the 21 EMA. The 20 EMA is turned up and to the right. We know we have positive gamma. So all of this points to the fact that, well, we're probably going to see a little profit taking here after this big run up going into Friday's OPEX. I wouldn't be surprised to see some consolidation. So far, it looks like a doji. So we got to bounce off the lower Bollinger Bands. We're trying to get back up to the middle of the bands. Trying to get back to the middle of the bands. Okay, so a consolidation here makes a little bit makes sense on the growth in the upper panel and value in the lower panel. So value being banks. Banks made a new high, new all-time high, right? Got close. XLF. What about Goldman Sachs and JP Morgan? Those are hanging in there. They don't look so bad. JP Morgan. JP Morgan looks like it wants to break out of this triple top. Okay, Merck. Merck has been basing. A shout out to Farmer Jim. Merck is working. Farmer Jim. Okay, Merck is coming out of a base. Okay, so I'd probably like to take a credit spread on this one, a put credit spread. Uh, 20 delta.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms.
Okay, higher lows printing, higher low printing. Keep an eye on Merck. Merck looks pretty good. Merck, stop underneath the low today. Merck.
Also, you can trade brilliantly. Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading solutions.
Stops under the low of the day. It's got an ATR. Merck has an ATR of $2.50, currently up 71 cents. So if defensive stocks get a little bit of a bid, we could see these push a bit higher. Okay, so that's rising. Yeah, what about J&J, Johnson & Johnson? I saw that on the most actives too. Johnson & Johnson's looking pretty good. I know, Corey, you're in Johnson & Johnson, right? Bristol Myers, this one turned the corner a few weeks ago. Bristol Myers turned the corner a few weeks ago. It moved above the 200-day, came back and tested the 200-day. Now it's starting to retest the 50 level. Okay, looking at the weekly, Bristol Myers, you can see the clear break of the downtrend. Okay, while it's never a guarantee you're going to be 100% on the first day or two, this looks pretty good. But I'd be buying dips. All right, so I wouldn't be buying right here. I'd be looking for maybe another little dip towards the 9 EMA. If it does start to take off to the upside, note the Bollinger Bands are coming together. So that's telling you it's probably going to stay in consolidation mode for a few more days, maybe a couple of weeks. So it's not something that's going to just take off today, most likely. Let's look at healthcare, XLV, healthcare. Okay, that's taken off to the upside. Note the Bollinger Bands, XLV, new highs. B bands expanding. Bullish healthcare. Whoops. Didn't mean to put these in your. Sorry. Didn't mean to post those there, Rick. Okay, so I'll get rid of those. All right, let me delete that. Yep. Delete that. Yep. Delete that. Yep. And healthcare, delete that. Okay, let's see. Merck, I'd be interested in some credit spreads. I'd like to see implied vol a little bit higher. Okay, looking for a higher low to print. Okay, watching SPY, S&P. Bitcoin pulled back rather dramatically. Bitcoin. Okay. So looked good this morning, and then it didn't. Still waiting for S&P to give us some yellow TTM bars, still red bars. Down volume is still leading, so don't be so quick to jump back in to the markets. Wait for a signal. You can afford to let a stock move in the right direction for a few minutes for confirmation. Okay, we need to get about 5602, 5603 on the futures and S&P cash. Need to see a move above 5602, 5603. So far, it's a doji spinning top. Okay. But we are trying to get back above 5,600. Okay, so here we are trying to negotiate this level. VWAP is flat. We got several layers of liquidity below. So you can see we stopped on the first one. That was pretty large. That was the second to last one before we made the high into the close. Okay, so I'm just sitting here watching. Do we fall more or do we find buyers down here? NVIDIA trying to bounce. What's AMD doing now? AMD still fading. Apple holding. Apple's holding. I think my son, Antoine, I think you should be positive on your position, right? You may want to take some off. I would think you want to take some off. Okay, Apple's starting to show signs that may bounce back into this doji. The issue I have now is that we're probably going to see a fade. The statistics have about a 68% probability of a fade after Friday's OPEX. For the first few days, we'll see options come off. We definitely want to stay above 5550 on the S&P 500. Cash, you want to write that down, 5550. We need to stay above it. Okay, Bitcoin is dropping pretty hard on the, what is that, the 15-minute chart. The daily doesn't look so bad, but it faded from the absolute high of the day. We're at a level of liquidity, not bouncing yet. Okay, so look at Bitcoin. You'll see what I'm talking about. Okay, we're starting to fade today. Okay, levels of liquidity. Let's go out to the 30 minutes, see if there's any levels there. All right, there's some major levels of liquidity, it looks like. Not a whole lot, right? Okay. Okay, so PayPal, that's out of the question for now. What's PayPal doing? PayPal still fading from the high of the day. Just feels like people 12 days up. All right, today is day 12 off of the Monday reversal where we had the Japanese yen, Aussie dollar blow up. And we had the 10-year spike. Now, we didn't look at the 10-year. We had the 10-year spike. Okay, 10-year is still fading. All right, so that's pretty interesting in itself. So is the U.S. dollar. We don't want this to move too much lower, the U.S. dollar. Let it stay in this range right here. That'd be pretty decent. I mean, for this entire rally since October, you know, the dollar's been in this range between 101 and 107 or so. So the S&P rallied from October last year. Okay, here's the S&P rallying from October. At that time, the dollar was in between these levels. So we want the dollar to stay in this area. We don't want it to drop precipitously. Okay. This run up in 2022, that led to the S&P bear market. Okay, so we're still sitting here at the highs. I'm not doing anything at the moment. I'm waiting on this 0-day setup to see if we can get a better entry. Okay, ASTS looks like it wants to bounce. Bitcoin is really weak. I'm not going to do anything with Bitcoin probably at the moment. Okay, Tesla has yet to bounce. Google looked okay this morning. Google, let's see what it looks like right now. Google. Okay. Google. Why is this not showing up? Google. Google looks like a gravestone doji. Open at the high, at the lows right now. So S&P S&P is just sitting here at the moment. Still looking for that yellow histogram bar on TTM. Okay, so here's the deal with Google. Google, you see the Bollinger Bands coming together? That's telling you to look for prices to stay in this zone, probably between 173 and 156. More than likely going to stay very close to the 21 day. So no momentum right here. Let's look at the rest of these stocks for through the same lens. If you're trading any of these top 10 stocks, Apple, Amazon, Broadcom, Microsoft, Meta, Google, blah, 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 Tesla, Netflix, NVIDIA, if you're trading any of these, keep an eye. You got a Doji right now. Let's take a look through the list right now. Okay, Apple, Doji, Amazon, spinning top. The thing about Amazon, look at this. It's been rally for 12 days. It's back above the 21 day. 9 EMA is crossing back up. 50 days overhead. So Amazon looks pretty good for a rally off of that retail number last week. So we could see more upside. Stocks like McDonald's looking pretty good. Defensive, that keeps going. So if you want to trade something,
These are more defensive sectors that should weather an economic downturn, a slowdown that we're witnessing right now. How about consumer staple brands like Walmart? They seem to be doing pretty well in good and bad economic cycles. Healthcare, a company like Eli Lilly, we just heard their test results that were very positive as it relates to Mounjaro and Zepbound in terms of weight loss and diabetes prevention. And then you look beyond that, how about an industrial thing like Lockheed Martin in the aerospace and defense sector? We know we need to upgrade, replenish, and modernize our military warfare capabilities, and defense contractors like Lockheed Martin should certainly stand to benefit from this.
okay, so McDonald's looks good. So let's go look at, we were looking at this. Sorry, let me just finish up what I was doing here. Google sitting on top the 21 day, 9 EMA is turning up. This might actually follow through. You got about 8 points to go to get to the 50-day resistance. Microsoft looked good yesterday. Still looks okay. Tight range, not falling off, not dropping below the 920. 921 crossing up into the right. We move back above the 200-day, that dotted gold colored line. 50 days overhead at 435, so that looks pretty good. On the screen is a iron condor I took a couple of weeks ago. That's since expired, so I can take that off. I just want to keep this on here for now, just for reference what I was thinking about at the time. Price is still in between, so was looking for prices to come back up into and above the 21 day, back to the 50 days. So that would be basically range bound. So it's selling the puts, selling the calls for a credit made sense. It's doing exactly what I thought it would do. That's working out pretty well. Okay. We did bounce at 50% retracement. You see that right there. Okay. All right. So I'll get rid of that now. RSI is still rising. So Microsoft looks pretty good. All right. Let me just take this over here now. We did manage to. This is a descending descending triangle. All right, let me just pull this over here. Okay, so it's obvious this broke a downtrend, Microsoft. Okay, so it's kind of negating this descending triangle pattern. So it's following through for the last 5 trading days. Okay, hold on a second.
Absolutely. The housing market is a supply side issue, and that's something that the Fed cannot tackle. It's very interesting. There's been a volatile 10-year, and that's really tied to mortgage rates. And when we saw that print really look below the 4 handle, we got a huge increase I saw from a lot of reports where people were suddenly refinancing, which is telling me that people are on the sidelines and really waiting for mortgages to be more affordable, but there's still a supply side issue. And so I think home builders are still positioned to do really well. D.R. Horton was top of my pick here. They did beat on earnings, like you said. They beat on the high end of the guidance. They have resilient margins. Their home building profit margins were at 24%, which was a quarter-on-quarter increase of 80 basis points. The orders were missed, and to alluding to my beginning point there, it was a choppy traffic pattern, and I really think that has to do with the 10-year and the uncertainty around rate cuts. So once we get the more certainty around rates, perhaps those consumers will come in and then they'll have more inventory. So I think it might be a good time to position at this moment with D.R. Horton.
Yeah. All right. Let's see what Ben has to say about that chart, where we can see the top side more on the right side of the screen. Let's hear a little bit about the story on the chart, Ben.
Yeah, just talking technicals, Nicole, I do see a bit of a bullish pattern playing out here. Not so much on the more intraday time frame. It's kind of a mess. We'll get into that in just a second. But the longer term are really feeding into the fact that the bulls have been in control and continue to be. So let's just start with the more chop type trade that we've seen as the broader markets recovered off those lows that we saw from the beginning of August. You can see that shares of DHI have also rebounded. Now, we're talking about from 165 all the way back up to 185. But I do want to point out, still holding below that high that we saw back in the end of July. That was, again, up around 185.50 or just shy thereof. So nice rally back, establishing a bit of a bottom. Exactly what the bulls want to see, but still holding below this key level. So that's the next big hurdle at this point. Let's take a step back away from 5-minute candle chart. We'll add a little bit of time on in this where clarity starts to provide or comes into play here, and you can see some, because when you look at this time frame, an hourly candle going all the way back to
All right.
April,
So that's Microsoft.
which has formed 2 separate levels, 146 and then more recently around 176. Again, testing the upper extreme of the range that we've been in. So a little bit of a
Meta,
trade, but you can also
Meta
see
just flagging.
start to see that really bullish pattern starting to establish
Tesla
itself,
trying to
and
turn
that
back up.
bottom that we were kind of talking about.
Meta back above VWAP. Meta is showing a spinning top.
165 level. Another step back.
ASTS continues. Meta looks good. Netflix, new highs on Netflix, fading from the high of the day. Look for an ABCD pattern. Okay, look for ABCD patterns if you're thinking about. There's your A right there. Looking for B and C. Netflix breaking out to new highs. Okay, so it's above this level. It made it above this level over here, the previous high that we had back in 2021. High of the day was 711. 711. Netflix looks good. NVIDIA, earnings next week, inside day today.
Absolutely. This is the way I'm positioning my broader portfolio and my individual positions that I already own as well. So it'd be a cover call.
Snowflake,
It's the way that you can utilize
and Tesla. Tesla with a pretty big spending top. Pretty decent range today. The low 219.50, the high 228. All right, so a $9 range so far. MACD momentum looks bullish. It just looks like we're taking a break. Watch the S&P. S&P. I'm going to take a 5-minute break and be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, the 20th of August, 11:20 on the East Coast, the best coast. Looking for more direction. Looking for yellow histogram bars on the TTM, S&P 0-day setup. Other than that, we're just on hold at the moment, waiting for the markets to tell us what to do next. I'm anticipating that we could see some consolidation. We got a VIX expiration tomorrow. And we got OPEX on Friday. So wouldn't be surprised to see institutions take a little profits off after a 12-day rally. 12 trading days up. We're just shy of the highs. Consolidation here and then a push higher would make sense. Not a continuation of this trend. If it happens, that's great. But for now, we're just anticipating some consolidation. Give me 5. I'll be right back.
Contribute to future earnings growth. So good management with solid margin expansion definitely looks like it will translate positively into earnings regardless if we're going to be on the defensive side or the growth side. Walmart's been really coming through.
Yeah, and we have seen the beats on the top and bottom line. Ben, some of your thoughts on the chart of Walmart, please.
A reflection of all of that, Nicole. Very bullish pattern playing out here across multiple time frames. We'll do the same with this example as we did with DHI. I wanted to start with 5-minute candle chart. Very well-defined migration value to the upside. You can see after earnings, and this is a prime example of what I like to look for, the 2 phases of price development, right? Easily identifiable horizontal phase. There's just not a lot of conviction, waiting for the news, and then you get that catalyst to the upside, the earnings results, the news last week, and sideways consolidation. Again, value forms at this new higher level in reaction to the news, and no rejection thereof. So stepping away from the, actually, let's just real quick establish what we have here in terms of the 5-minute candles. 68 and 74, there's the 2 kind of middle of the range areas that we've been sort of consolidating around. So similar pattern playing out as we add a little bit of time on. We've gone from a 5-minute to a 60-minute candle chart. 3 areas that my eye was drawn to. 60, again, 68, 74, the 2 areas we just talk about, but this goes all the way back to the middle of April. Again, you can see that really well-defined vertical separation as the market seeks value higher and then establishes a new area of value, an upper level. Wash, rinse, repeat staircase type pattern comes into play, and we're talking bottom left, top right. Bulls are in control here, Nicole. Take a look. One more time frame for you. This is a daily candle chart. So we've gone all the way from 5-minute, look at just the last few days, to a daily here now to look at the last 4 years, 5 years of price activity. Balance form around 46. You get it again around the $60 level, and more recently around 68. What I like is, again, we're talking about the bulls in control here, right? And the longs being rewarded. Well, it looks like we're in a vertical phase right now. So we're actually breaking out of this range that we established. And right now, the bulls are going to be looking for something a little bit more sideways at some point to kind of further this pattern to the upside. But yeah, it does appear as those that have been sticking with this one on the long side are being rewarded handsomely, as I like to say.
All right. I think we should go to the next one, and that is Amazon. Obviously, you like what you've been seeing in e-commerce. You like what you've been seeing, Jessica, in Amazon Web Services, right?
Yeah, absolutely. That's right, Nicole. And I really think it's the future of e-commerce and the way that the retail landscape is absolutely going to be changing. Certainly the macro headwinds are the interest rate environment and the health of the consumer, but the earnings for me were really mixed. There was growth with AWS, but then there was a miss on the retail side. However, this recent announcement of a potential TikTok partnership is very big and I think realized, almost like that first time we talked about AI. I'm seeing this as that big opportunity. If you think about there's another potential potential partnership with Pinterest as well that I'm happy to speak to. But thinking about the way that those algorithms work, TikTok is designed, of course, to maximize engagement. If there is something that somebody really, really likes, then it surfaces it, but it learns your habits. It knows when I'm about to cook and shows me those videos. It doesn't do it earlier in the day, meaning it has very optimal targeted opportunities for e-commerce. And there's already a shopping platform within TikTok that does really well. But then this marries to my overall other investment thesis outside of the AI piece, which is the gig economy. There is affiliate links and Amazon stores that a lot of the younger generation utilizes that would be integrated, which could help buoyant really the consumer. So I think there is a lot of opportunity that hasn't been recognized with Amazon simply because of the margin expansion. It's an investment up front, yes, but what could contribute to earnings growth with integrating into that platform and opening it up to that Gen Z, the primary users of TikTok, is I think really, really going to be big for Amazon.
Well, that's the whole thing, that demographic, that younger demographic that they're all going after all the time. Ben, some of the technicals, please, on Amazon.
Yeah, supportive of the fundamentals, I think, and that bullish narrative. We've got a similar pattern playing out here on the 15-minute candle chart. And while it's a little clouded on the daily, following some of that sell-off we saw to begin the month of August, the weekly still supportive of this bullish narrative. So let's dive into the levels that I've got my eye on. First and foremost, very much like our last example. And you can see, again, on a 15-minute candle chart, horizontal into a vertical into a horizontal phase, and looking at price activity through this lens really helps provide a lot of clarity. So I recommend your viewers kind of, at the very least, scratch the surface on this one. Again, these auction market theories, concepts, these principles that state that we're mostly in this kind of horizontal random phase. It's very limited amount of time that you spend in the vertical phase, but it does provide a lot of information. In this case, a bullish pattern. We're talking value moving higher. Let's step back. Taking a look at daily candle time frame, you can see a pretty well-defined bottom left top chart. But as we were looking at this one and mapping out some of the areas of consolidation that were forming, we identified 180 as a significant area as we broke out and then kind of got a bit range bound around 197. So to take out 180, not necessarily what the bulls want to see. I think it's important that we held below that around 150. But again, that was a severe retracement there. I think the real way to look at this and kind of evolve this chart or look at it through that kind of bigger picture lens, broader stroke type way of identifying this could be just one larger area forming around 180. And if you look at it through that lens, then really significance of 150 comes into play, and that's right where we tested. So I think that's the way to do it. And the reason I say that is because if you look at the weekly candle chart, it is very supportive of a bullish narrative. Again, you got a nice bottom established around 180, similar to what we just talked about in terms of this recent test around this 150, 160 area. That held. So now, recent breakout failed. Could establish a bit of a range up here for some time, but again, I think these longer-term charts are still supportive of a bullish narrative, assuming that we hold up above some key levels here, 130 on this chart, and those lows from last week, I think, or from beginning of August are important as well.
Yeah. Thank you, Ben, on all those charts. Really appreciate it. Jessica, we'll give you a quick last word.
Yeah, just exciting times in the market, paying attention to the health of the consumer, and of course that AI narrative.
Yeah, and you said cautiously optimistic. That's a good segue into our Investopedia segment, where many of the responses in the survey were cautiously optimistic. Thank you both, Jessica Inskip, stockbrokers.com, and Ben Lichtenstein. Thank you for being here. Coming up next, we're going to spotlight investor sentiment. Caleb Silver of Investopedia is standing by. He'll give us all the details on how investors are feeling about the recession, possibility of a recession, AI, and what would you do if you got $10,000 today? We'll be right back.
Ameritrade is now part of Schwab. bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly. With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time to spotlight market sentiment. Joining me now, Caleb Silver, Editor-in-Chief at Investopedia. Thank you for being here, Caleb. So we were just going over, you have a broad array of folks who answer these questions. How often do you do this? Roughly how many people are, these are all Investopedia?
Yeah, these are our readers of our daily newsletters.
Okay.
We have about 5 daily newsletters that go out to about 1.5 million people. Not all of them answer the survey, but over 1,000 answer the survey. We do this every 2 months. We started right at the beginning of the pandemic because we wanted to know
Right.
how people actually feel. We know what they're searching for, but how do you feel and what are you actually doing with their portfolios? And I'll tell you this, for the last several months, including the dip last month, our investors, our readers have been mostly optimistic, either optimistic or cautiously optimistic. That has been the trend for about 5 to 6 months, but they weren't that optimistic during the bull market of 2023. They got optimistic earlier this year.
Oh, there's the emoji. I
Yeah.
teased that. So let's do this one. I thought it was interesting that basically almost half the folks that answered were cautiously optimistic. Very few were extremely optimistic or panicked. The
Yeah.
two extremes, right?
These are veteran investors, right? They are self-directed veteran investors who have seen a few market cycles. They saw that mini correction, that mini reversal, and they're like,
Yeah.
not all the elements are adding up to a big drop here, so they stayed with it, which is
Yeah.
nice to see. They may have been searching for things that may have provoked anxiety in them, but they didn't move their money. In fact, they poured more money into their favorite stocks. What are their favorite stocks, Nicole? The top 10 stocks in the S&P 500
Right.
by and large, the mega caps. They love the home cooking, and they keep at it, and they've done very well by staying with it.
Yeah, I love this one. Know when to walk away.
Yeah,
Right? That's like Kenny and Dolly Parton. Let's talk about, the expectations for recession because you said it's looking better. You noted only 27% expect a 10% drop due to recession. Tell me a little bit about
Yeah.
that.
That number's up a little bit. We got the recession drumbeat a few weeks ago when we got that kind of bad unemployment uptick. We got that when the yen carry trade. A lot of people were feeling that. You saw banks raise their percentage chance of a recession. I think our readers felt that too. So they said if the market is going to fall, and those that believe it will fall mostly because of a recession if we have one. They're also worried about the election. They're worried about overvaluation in the market. They keep buying, but they're worried about overvaluations on the election front. They're not worried about necessarily who wins, although tax policy could become a factor. They're worried about chaos surrounding the election, and I totally understand that.
Yeah, without a doubt. In the individual investors, it did say 42% bought the dip. So they were willing to take the chance. Not the YOLO one,
Right.
only 1%. Don't bet the farm, but they were willing to buy the dip. But on the other survey, it's interesting because sometimes you'll get what feels a bit like a conflict because 74%, I guess if you have a near-term correction or something you may be scared of, if you have to put into them,
They did say recession
That's what
and
they're worried about.
Middle East conflict, things like that.
All of the things, the walls of worry. They're worried about
Yeah.
all of those things, but it is not stopping them from either regularly passively
Right.
investing or actively buying stocks. And we ask these are active investors, right? They are willing to buy individual equities. They are not market timers per se. They like owning big stocks. They like adding to their positions.
I want to go over some of the sectors and how people, I was actually asking, there was an article about are people losing interest in cryptocurrency? Is it overvalued? What's it doing? AI always is AI too frothy? These are some of the everyday questions.
Sure.
Right? Tell me about what they were saying there.
Yeah, we always ask them what is overvalued, if anything, in the market right now. And AI stocks have led the top of that list for the last year and a half, and for very good reason. That hasn't stopped our readers from buying them per se. Mega cap tech, also possibly overvalued, hasn't stopped them from buying them. You see, this is like a value trade almost for the mega cap tech stocks.
Yeah.
Crypto, they also think is overvalued. I think only 8 to 10% of our readers, or those that answer the survey, actually own Bitcoin and other cryptocurrencies, so they're not terribly concerned about it. And the housing stocks and housing prices in general, they feel overvalued. That's where they feel the bubbles are. The bubbles do not stop them from buying necessarily. They're aware of them, but they've been investing in bubbles for a long time.
But it seems more reasonable. Healthcare.
Yeah. Healthcare, overvalued, right? And these are the areas that are kind of picking up. Staples more than discretionary. Staples picking up now. But generally, yeah, the stock market might be overvalued, but what are the alternatives? We went from there is no alternative to there are alternatives with 5% in money markets to I can make decisions now because we know interest rates are falling. I think that's what they're looking forward to as well.
Yeah. And then I said it in the tease, but what would you do if you got an extra 10 grand? And I mean, these are pretty savvy investors. Nobody said, I'm going to pay down my credit card. Very few people said pay down debt.
Yeah, we asked them this question because a lot of individual investors invest passively every 2 weeks to the paycheck, or they have a regular buying period of time where they always buy stocks or sell stocks. But we said, if we just gave you an extra 10 G's, what would you do? That to me is a good symbol or a good understanding of what that discretionary money would go to. For the past 6 months.
All right, just looking at the Dow Industrial Components. Boeing dropping back down today. Made it all the way back to the 50-day. That's pretty cool. If you're thinking about iron condors, I'm looking at iron condors. Look at those outer Bollinger Bands. Maybe something out there. S&P's trying. Okay, we got some TTM bars starting to turn colors. All right, so this is starting to show. All I would anticipate at this moment is the S&P is starting to show yellow histogram bars. Right now, we currently have. Let me just show you. We currently have yellow histogram bars starting to build now. So we've gone from red histogram bars. You can see what I was thinking earlier, delineating what I was thinking. Now we're starting to see those yellow histogram bars. Okay, TTM is looking a little bit better. Okay, Bollinger Bands are still coming together, but looking a lot better for a setup. Right now we're at a disadvantage. We're like a doji, the lower part of the doji, tight range for the day, a high and the low. We're at the lows of the day. So we're looking for these histogram bars to really start catching a little bit of a tailwind. That would give us a signal. Tick is moving back above plus 166. So we're starting to see tick moving higher, 172, 172. You can also see right here, look in the top panel, you can see that for the last 4-5 trading days, we've had positive up ball. In the top right panel, you can see that we've been moving higher towards the close throughout the day. So we've had positive or bullish volume. Up volume has been leading. Today, it's down a little bit, but we're looking for that to reverse, hopefully. Institutions have another opportunity to sell some into strength. They don't want to just sell this like crazy. We've been up for 12 days. Why would they want to sell it and not give themselves an opportunity to take a little bit more off at the highs? So that's what it looks like right now. So The industrials just going through these. Caterpillar looks okay. CRM looks okay. You can see that there's really nothing to do right now. Cisco's following through. Networking gear. Disney making higher lows. Disney. All right. So some of you, I think Paticus, I think you might have bought some shares down here, right? Acceleration. Did you buy anything on Disney? That's looking better. Dow. It's okay. Goldman Sachs. Home Depot. Home Depot looks pretty good. Still got a triple top, so you got a few points upside before you run into resistance. Honeywell. IBM looks really good, actually. Let's take a look at IBM. IBM. We're looking for areas of liquidity and supply. Currently, supply is overhead at 195. Liquidity is down below at 194. So you got a $1.40, $1.50 range. Flat VWAP starting to push higher. You can see buyers stepped up at the low of the day. Okay. Not much upside to ask for, but it does look bullish. There goes the S&P. S&P is starting to move now. S&P is starting to move off of this area of liquidity where institutions, a lot of times they'll sell into strength and they'll wait for prices to come right back down. You sell, they buy. They were buying here yesterday, 149 million, 160 million, and 250 million shares. Okay, MACD is also turning. Momentum is starting to turn more bullish. Momentum is starting to turn more bullish. We want to stay above 55.50. Most of you know that we have positive gamma and know how that works. What's up, baby? What do you need? You hungry? Are you hungry? Okay, I got to feed the cat. Got to feed the cat. All right, so TTM histogram bars are building more yellow. Starting to head towards zero. This is looking pretty good. All right, so starting to look pretty good.
Yes, from this late stage trial, Eli Lilly shares up about 3%, as you said, one of the best performers on the S&P 500 today, on news that its trial found that its weight loss drug, tirzepatide, reduced the risk of type 2 diabetes in people who are overweight, adults who are overweight or obese by 94%. So tirzepatide is an active ingredient in highly
I'll feed you 1 second.
injections. Zepbound, which we talked quite a bit about, and its diabetes drug Mounjaro.
Okay, getting more tick bars above zero. Okay, Bollinger Bands are still contracting. Okay. I'm sorry. Give me 2 more minutes. I got to feed this cat before she flips out on me.
Decrease in body weight on average after the 176-week time period. There's a 2.1% decrease for people who are on the placebo, so quite a big difference there. So this suggests that Eli Lilly treatment could be, it could be beneficial for people with diabetes, really having a meaningful impact there. So Eli Lilly will submit the results to a peer-reviewed journal, and then they'll present them at an upcoming medical conference in November. So if you take a look at shares, as we said, they're up about 3%. Take a look at Novo Nordisk, obviously a chief competitor, maker of Ozempic. Shares a little bit under pressure, down about 0.3%. But interestingly enough, if you take a look at Dexcom and Insulin management system, glucose monitoring system, both down big on this news. Dexcom's down about 5%, Insulin's down about 5.5%. So it has to make you wonder if that Eli Lilly news is really weighing on shares, because Dexcom is now down about 40% year to date.
Right, understood. All right, thank you for that. Big news here for Eli Lilly, which has just been a winner the whole ride. I mean, 1 year it's up almost 75%. Caroline Woods, thank you. It's time now for our disruptors. And George Silas is here, senior markets correspondent, to talk all about Snowflake. In this case, the analysts over at Citi and Bear are cutting the price target, keeping the buy ratings, though, I think. Tell us a little bit about the story.
Well, yeah, if you look at Snowflake, Nicole, this is a stock that actually has been underperforming the market, and it's down about 12 or 13% over the last year. But nonetheless, it's a really popular company, and their data warehousing, a public and private cloud domain analytics platform, has actually been growing. About 30% of the Fortune 500 companies use their platform. So that speaks to the potential for Snowflake to grow into effectively the price, which essentially has been moving to the downside because earnings estimates have actually been declining. And so if you actually consider the analyst call, for instance, Citigroup did move their target down from 236 to 200. They do maintain a buy rating. They're actually cautiously optimistic because Snowflake reports earnings tomorrow based upon the potential for maybe some additional large customer acquisitions, higher net revenue retention rates, but also the fact that the only about 30% of Fortune 500 companies use their products in their domain. But the other analysts out there, also Baird, for instance, reduced their target to 165 from $200. They also maintain a buy rating on this name as it's going into earnings. And I think one of the challenges Snowflake has faced, Nicole, especially over the past few years, is it came out as a publicly traded company. From a popularity standpoint, the platform and technology is there. They actually provide a really great value proposition in decoupling storage from computing, which again, from the standpoint of cost saving, maybe something that major enterprise customers are looking for in their platform. The valuation is really the concern with Snowflake, and I think that's one of the things that's been a drag on the stock. Even as the earnings estimates are still positive, it's still profitable. The estimates have actually come down. In fact, if you look at 2026 earnings estimates, last time I talked about the stock about 2 months ago, the estimates were $1.48, and they moved all the way down to 98 cents, which puts the forward multiple around 200 times this year's earnings and about 130 times next year's earnings. So with that said, there is a possibility for a turnaround for Snowflake if they do beat on earnings and raise guidance based on some maybe perhaps major acquisition or major customer adoption.
Yeah, and look, not a great chart. I mean, so maybe some potential, but not a great chart. It had a gap down after earnings, maybe 6 months ago, and then down again. Trying to come up off.
Okay. No follow through yet. S&P. No follow. Still testing a low. We could drop off here. Watch 2-to-1 down volume on the NYSE, picking up a little bit. 2-to-1 on the Qs. 3-to-1 IWM. 3-to-1 on IWM. Okay, we're testing the lows again. Okay, so maybe take out some stops.
On Friday, it's around $13. I'm going to increase that to about 1.5 market maker deviation. So what I'm going to do in this case is I'm going to sell the 150, 155 call spread, and then below the current price, I'm going to sell the 115, 110 put spread. So these are about $17 or $18 wide spreads relative, the short strikes relative to the current price. And you could actually sell this for about $1.25 per share in credit, or $125 a contract. So essentially, there's a 73% probability that the stock will be range bound within the short strikes of 150 high and 115 low. Your return on risk is about 33%.
Okay, we got Snowflake with earnings tomorrow after the close. Schwab talking about credit spread, Iron Condor, 2 credit spreads, one above, one below price. Let's look at Snowflake. Last time around, Snowflake missed earnings by quite a bit, actually. May 22nd. Let's look at Snowflake. May 22nd. Snowflake, May 22nd. Okay, earnings were over here, May 22nd. All right, so we faded quite a bit on last earnings for Snowflake. Okay, here's May over here. Continue lower. Now we're back up, getting back up to where we were last earnings. Last earnings was a big miss. Snowflake, I'm not going to play that one. They're talking about an Iron Condor that can net you $125 credit. But I think the lower strike is probably going to get tested. I don't know. For earnings.
Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions. no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Okay, so looking for these lows to get bought. So far, nothing yet. The S&P could start producing red histogram bars again. Okay, IBM looks good though, right? Looking at IBM. Okay, when are their earnings? IBM's earnings? October 23rd. IBM last time around, giving us 4 green metrics. You know, I like when all 4 of these are green. Revenues growth is modest at 1.9% for a stock that's been around a while. 11.5% earnings growth. Earnings surprise. They beat the top expectation. Okay, 15.7 billion for the last quarter. So $60 billion plus per year. Not bad for Big Blue. Okay, so that looks pretty interesting. TTM, excuse me, the 0-day setup, Bollinger Bands are contracting, continue to contract. Tick is right at the 0 line. Spent most of the morning below 0. Maybe we see some ticks above 0. Okay, tick cumulative on the shorter time frames is red. So that's telling me to just be cautious, jumping to any conclusion. The 30-minute is also on a bearish signal. 60-minute is peaking. If it doesn't get some relief soon, tick cumulative is going to turn red at the top of the hour. Tick cumulative will turn red at the top of the hour for the 60-minute time frame. The 4-hour chart, that's the longer term trend, is still green. 12 trading days, higher highs, higher lows. Okay. So while we could see a setup on the 0-day, it's not the best setup. Certainly not anything like yesterday. Okay. IBM. I really like this IBM. We're going to break higher IBM. Weekly. You can see it's been in a sideways range for the last 7-8 months. Highs 195.50, lows 159.50. 40-point range. So can it put the depth of this pattern is the measured move, the maximum. So even if you take half of that, if you take $20 on top of this, right, you're looking at 225. $220 to $225. Can we see that? Be nice. Let's look at the monthly. What's Lilly doing? Lilly, that one's looking strong this morning. Lilly. Okay, did fade from the high. Okay. Lilly. Okay, Lilly giving you an ABCD pattern. So if this starts to move into the upside, that would be your opportunity if you're thinking about day trading it. We're at the highs. It's a double top technically. Technically a double top. Bollinger Bands, lower Bollinger Band is still opening up. So that's telling you that the volatility is increasing, not decreasing or collapsing like it was 2 weeks ago. Okay, so we're still looking for prices to continue higher. 921 day turned up and to the right, 50 days up and to the right. It's above the 200 day. Yeah, so it looks pretty good. Eli Lilly, S&P, just watching. All right, so liquidity. 3 levels built yesterday. All right, Bollinger Bands are pretty tight on the 0-day setup, looking for a bounce. Guess what? The CEO on Fubo is focused on profitability. Did you know that? Fubo, the CEO is focused on profitability. Wow. That's pretty wild. Sarcasm aside, no kidding. Focused on profitability. Future of sports streaming. Brofman. Oh boy. Okay, futures are still off 13 handles. Looking for this to turn the corner. We know that we have positive gamma. Positive gamma.
Yes, I mean, if you look at Palo Alto's AI ARR, it was up 4 times from a year ago, roughly $200 million. So if you think about Palo Alto's overall business, especially with their business and security operations.
The edge goes to the bulls. So long as we got positive gamma, the edge goes to the bulls. Unless we lose 55.50. Okay, we really wanted to stay above 5,600. Let's see if we can get back above that. We're starting to rally now. Okay, S&P starting to rally. Rally who? Can we get back to 5620? 5620. All right, so looking for a push back up to the highs. TTM is still turning. TTM still turning. Still 2-1 down on the NYSE. Thanks, Rick. All right, Bitcoin's still dropping. Risk off on Bitcoin still. Okay, we're coming into the 12 o'clock hour. Looking for B and C pivots. 12 o'clock. Okay, looking for B and C pivots. You got A, you got B. We have a higher low in store. Our TTM is about to cross over. TTM. Okay, we're looking better. TTM looking good for the push higher. S&P 0-day. Can we get back up to the highs? 5620s. 5620 0 days are going for $2.40. 5620s. $2.40. SPXW. All right, S&P 500. Okay, S&P 500 going. Okay, there we go. It's coming out of the squeeze. S&P coming out of the squeeze. Top bands. Okay, S&P full on bullish now, full on rally mode. 1 minute chart. Okay, tick is jumping, tick plus 220. Okay, looking good. They're buying. They be buying. All right, there you go. Back through VWAP. Break a structure. You can see a BOS there. Break a structure. We took out these pivots. Now we're pushing through VWAP. Did we get through VWAP? Liquidity here building. 231 million shares just traded right there 11 minutes ago. We got 231 million. You see it right there? 231 million. Okay, so far looking good. Trying to go cyan on these. Okay. Okay, nice full-on bullish run there. Okay, back to the nice little move.
We will see. Obviously, leading up to Friday, I did notice OPCO yesterday. Since 2000, S&P is up on average 0.4 the week after Jackson Hole.
So market approves of the Fed chair generally.
Let's get to the judgment half.
All right, guys, thanks so much. Welcome to the halftime report. I'm Scott Wapner. Front and center this hour, the rally in stocks. The S&P goes for a 9-day winning streak, its longest in some 2 decades. We traded with the investment committee today. Joining me for the outlook today, Josh Brown, Stephanie Link, Gary Firestone, Rob Seachin. We do check the market. It's got a little bit of work to do, but as we said, we're going for 9 in a row. So it's been quite a run for stocks. We're only about 1.5%.
All right, TTM's about to cross over now.
Which is just pretty remarkable. Jackson Hole is looming large. You heard Carl and Sarah talking about that. We'll get to that in a minute. We also have a new move from Josh Brown today, which we'll get to in a second as well. But Rob set it up here. We've had an amazing comeback, and now we have Jackson Hole looming. We'll get to the specifics later, but a number of people have come on over the last 24 hours and say the trend is up. The trajectory of the market is higher.
We talked about this the last time I was on, Scott. You had valuation, positioning, and sentiment all the way off sides. I think there was a huge reset into those three, sentiment and positioning. And what it did is it set the stage for some better economic data to act as a catalyst to get the market back on the right side. In addition, because of that reset, you had a tailwind to those type of things. And now you have positioning that's modestly overweight again. So you shifted. I will tell you, when we talk to clients, there's still concerns in sentiment. If you want the live conversation, so there may be some room to run here as a result of drawing investors into what has become a pain trade.
What are the concerns? Are they afraid to buy into a market that's ripped? Is that the number one concern? But Rob, I mean, the market's up a lot.
And now remember, most of these people are invested in the market. So
Sure.
It's a question of incremental positioning, right? And the violence of the unwind was really something we hadn't seen for quite some time. And the action in markets is really quite bizarre. We've not seen volatility collapse this much over an 8-day period, maybe ever, right? So I think it has people a little unnerved. And obviously you have things
Excuse
this
me.
week, one thing this week in particular that could maybe destabilize things as it did in 22.
Well, we could be at a far different spectrum now. We'll discuss that later.
Okay, nice little bounce.
Carry. So Max Kettner over at HSBC, risk on Goldilocks. Talk, use the Goldilocks term. You have B of A clients buying the rally last week. They were net buyers of U.S. equities for the second week in a row. Corporate client buybacks are on pace for a record year. I've heard a lot about buybacks over the last 2-3 days as being one of those things that's going to continue to drive stocks higher. You have momentum traders, you got buybacks, you got expected rate cuts, earnings good enough, economy holding up, discretionary stocks, consumers hanging in. That's why people think the environment is bullish.
Well, if you have a 9-day streak, it therefore is very bullish. I mean, you pointed that out. So we've been having a big bull run, and we're, as you said, about 1% from the all-time high. Does that mean the market is a buy right now? I think the market is anticipating good news from Jackson Hole. The market has anticipated that retail sales will continue to be strong. But if you really dig into what happened in the quarter, and I'm not being bearish here, but I'm just being realistic, what happened in the last quarter is we had good earnings, and we didn't have particularly good revenue. The revenue numbers were weaker than
8
expected.
days a week. That's a good song. Just thinking about that.
The biggest names in technology were mostly muted in terms of revenue growth, and expectations are for 15% earnings growth in 2025. Therefore, you really have to get something moving in a positive trajectory. And I think that we could see a reasonably
I
positive sounding
love you.
Fed meeting dovish to the extent that
8
we
days
believe
a
that
week.
things are softening and we
You know
therefore are
I,
likely to
you know
do
I
something
care.
that lowers rates. But that could be in the market right now, and we could then have to wait and see what happens with earnings for this current quarter before the market takes a real step forward.
Quite a broad-based move. Financials, healthcare, staples, those are all at record highs. Industrials are a whisker from a record high. So many sectors have had such strong gains since the August 5th lows. Healthcare, for example, is up 5%. Financials up 8.2. I'm dropping below tech, obviously, which is the leader at 18, but discretionary is up 11.3. And Josh, on this note about the financials, you have JP Morgan 10 days up, right? Into Monday. The last 10-day streak was in July of 23. And you have a new stock on your list, something that you just bought. It's from the financial space, not a bank, but it is PayPal. Interesting. Why?
Yeah, so I bought it in the pre-market on the news that Adyen is going to do a huge partnership with PayPal's Fastlane service. I like, as you know, when the fundamental news lines up with what we're seeing in the technicals. And PayPal hit
Testicles? Did he say testicles?
Of the best stocks in the
Oh,
market.
technicals.
Technically speaking, this stock is now above its prior 52-week high. And it's been a really long time since there's been anything positive to say about PayPal. And I have lost money in this name before, so think twice before you follow me into it. But they have a new CEO, and the new CEO is making incremental moves to improve the fundamentals. We've seen that the last couple of quarters. And now we're starting to see big partnerships. And I think that's why the stock has been breaking out. The other thing to keep in mind is Apple. And Apple, by the way, is the bête noire of this story. Apple Pay has just absolutely trounced a lot of competitors on wallets and payments. Apple has just preemptively opened up its near-field communications, or NFC, system so that you can tap to pay, and this will include Venmo. So having Venmo as an option alongside Apple Pay when you push your phone up against a merchant screen is something new. The apps on this stock is Dan Dolev at Mizuho. He went positive on the stock after having been negative for a while, and the story here is now changing. PayPal is, I think PayPal has a very hot product in Fastlane, and if they can gain back some more ground on all these payment solutions, it really changes the fundamental outlook. So it's a technical breakout. I have a relatively tight stop. I don't trust this name, but I'm in it, and I love it when the fundamental story is improving as price action is confirming.
Kerry, this thing was in no man's land, penalty box for a long time. You used to own it, didn't you?
As a matter of fact, I remember the last time that Josh bought it because we had sold it.
Yeah.
And I wish Josh luck. I mean, there's a lot that
Carrie.
right. Do I remember? I think if the market holds up, if retail holds up, it's good for PayPal. That's what it needs. It needs not just partnerships. It needs people to keep spending on their platform.
Yeah. So, Steph, all this news about Buffett selling Bank of America, selling the stake down. You've been a buyer and you're a believer in financials. Do you think there's momentum in that sector moving forward here with all that lies ahead?
First and foremost, Buffett is still a 12% owner of Bank of America, right? That's number one. Number two, earnings. To the point of view, you guys were talking about broadening out in the market. Financials grew earnings 17%. And by the way, discretionary, 31%. Healthcare, 17%. So there's no wonder why we are seeing this broadening out, right? I mean, that's the whole point, is that earnings are doing better than expected. I don't care, you talked about 5% revenue growth for the overall S&P, and that wasn't...
All right, looking for a follow through. TTM's about to go cyan.
GDP world translation, and you're seeing margin expansion, which is why you got 10% earnings growth. So to me, that's the exciting part. That's why we're seeing the broadening out. Back to B of A, it's trading at 1.5 times tangible book. I think it gets to 1.9 times. Net interest income.
I got 8 days a week in my head now. I can't get it out. 8 days a week.
I think you're going to see something like $63 billion in net interest income by 2026. Net interest margin expansion as well. Fees coming back because the last decade they got hurt because they reduced their mortgage book. So that goes away. And they're seeing investment banking fees at the same time. Expenses are growing GDP kind of plus or minus 1%. I think you add it all up, it's a very cheap stock. So I like it. I'm overweight financials, and I've been very pleased with the rally in the sector.
So you've been pretty opportunistic. When 2 weeks ago Monday, when crowds were running for the hills with this panic attack over the economy and the unwind of the carry trade, you were a buyer. So now that we've had a huge snapback, how does that influence your decision making now?
Less buying. Less buying. We've had a heck of a run back, right? But I'm still a believer. So maybe September is volatile because it historically is. And if it is, I will be back buying because I have stocks like Eaton and Lam Research, Bank of America, Truist, CrowdStrike. So many names came off double digits. I mean, Lam Research is down.
Okay, come on, S&P. Let's do this.
I was opportunistic because I didn't think it was a credit problem. Obviously, carry unwind, the yen carry unwind was a big deal, and it was surprising the move. But I think that gave you the opportunity because I thought that's the
Novartis with a big cup and handle, a big cup anyway. Novartis. Some of these pharmaceutical stocks looking good. Here's Novartis. Trending. Let's look at the weekly time frame. Nice. Swiss drug manufacturer. Let's look at the monthly time frame. You can go fill the chart. Let's go to monthly. Okay. Novartis.
This continues to be one of those names where we were very fortunate to buy it when it was a heck of a lot cheaper than it is today. The name's up over 210% since we bought it not too long ago. Zepbound is showing some really encouraging results, obviously. That's generating some enthusiasm.
All right, that one's taken off. Lilly also taken off to the upside. Lilly having a big week. Over the last 12 trading days, been very nice. All right, so watching the S&P.
trimmed the name a little bit in May here because of valuation. And I think those are the things that we continue to watch is the efficacy of these drugs, how they're broadening out, how they're pairing versus their competition. And so far, this leadership team and product suite has delivered on all fronts.
All right, Karen, my question for you, if you were still running the healthcare fund at Fidelity, we both know that Lilly and Novo would be in your fund.
I'm sure.
No question, right?
They're big market cap stocks, so it would be a commitment against your benchmark if you did on Lilly for sure. And Novo is just as big.
Novo Nordisk they're talking about, in addition to Lilly, Novo, NVO. Okay, Novo got rejected at the 50-day, but it's probably going to get above it. We'll wait for it to get above it. That's probably not a bad idea. Bollinger Bands are starting to turn in, so this can consolidate for a little bit longer. I really don't see anything screaming buy at the moment. AMD, squeezing AMD. Apple looking pretty good. Apple looking good. Home Depot looking good. Yeah, I like that one too. Home Depot. Outside day on Home Depot. Bollinger Bands are starting to open up.
Josh, we look at industrials now, which we said is, within a whisker of record highs.
Volume. Okay, so institutions and Home Depot.
Yeah, so we had let me see like a 1-year chart. I can't really see it, but put up a 1-year chart. We had a huge breakout after the last report. The new CEO, whom Steph was very early to explaining this to our viewers, the new CEO basically reset the table about what needs to happen here to take this company out of the doldrums, fix the errors once and for all that have been made in the past, and get them back on a growth track. And that was very well received, as you can see, by that monster.
Okay, SMH is testing the 50-day. All right, so we need to get above the 50-day, that upper Bollinger Band. We're getting very close to the upper band, so I'm looking for that to turn up and to the right. Okay, SMH. Apple, near the upper Bollinger Band. Notice the lower band is also moving away from price, so that's telling you Apple's probably going to keep going. Antoine, I know you're in class right now, Antoine, but if you're listening eventually. 2-to-1 down volume on the NYSE, 1-to-1 on the NASDAQ composite. So that's starting to improve. 1-to-1 on the SPY, 1.4. Qs are 1.2 and improving. The diamonds are 1.3 and improving. All right, so tick is above 0. No, it's down below 0 now. What's Shake Shack doing? You heard that news the other day with Shake Shack employees beating the hell out of some 2 gay guys. That definitely not a good good for business. It's a crazy world. TTM trying to stay above 0. TTM cyan color bars building, looking for more. Looks like the odds of us staying in a doji pattern are building unless something happens. The doji spinning top, doji on the daily. Looks like that's the case. 8 days solid straight, 12 days since the rally, but 8 days in a row of positive gains. Today's day 9. Do we push higher? Do we hit that upper band? We're right at the top Keltner channel. That gray area is the top Keltner channel. Let's take a look at take a look at Ichimoku. Let's see how that looks. I think we're above the cloud, right? Should be. Yeah, above the cloud. So coming back to the cloud, see the twist over there on the right? See the Kumo twist? That's telling you a nice little clue there that we could see this follow through. Okay, Chiku, the green line. Chiku, where the hell is it right there? It's right up against price right there at 56.69. You can see it turn right next to that little red candle, then 3 up. So Chiku needs to get above price. If that happens, if everything falls into place, we could see this S&P rally retest the highs. The bears are trying their best to keep price at bay.
Has just flawless execution, and they are taking market share. I think it's from Dollar General, Dollar Tree, that cohort. But a U.S. same-store sales number of 4.2% is so important for a company of this size. Now, Target, I think the expectations, the bar is about
S&P is still off 10 handles, off the worst levels of the session so far. Positive gamma, we're looking for dip buyers.
I think it's all about operating margins. Can they get back to 6-7% operating margin? If they can and hold comps flat, revenues flat, then you're going to get operating leverage, and so you will have a decent earnings beat. The stock is very cheap, hasn't done much, but they have disappointed in 2 out of the last 5 quarters, and so that's why I'm a little nervous, because it's been inconsistent, which is totally inconsistent of this management team. So like the ship.
Okay, got a little buy signal there, hopefully. All right, TTM looking for the follow through. Gold miners at new highs. Gold miners. Andy Nyquist talking about gold miners. GDX. All right, so yep, gold. GOLD, gold. Grinding higher, gold. All right, let's look at the weekly. New highs getting extended.
Let's get a quick news alert from Seema Modi, I'm told, on Texas Instruments. What are we learning here, Seema?
Yeah, Scott, we were on the capital management call. Texas Instruments is reducing its capex targets for 2026 from $5 billion to $2 to $5 billion, which brings up its free cash flow per share. Activist investor Elliott Management has been pushing for this. They have a $2.5 billion stake in the company. CEO of Texas Instruments, Haviv Leon, also signaled greater flexibility around its capex targets going forward.
Okay, back. We got rejected at VWAP, coming back.
He also acknowledged the weakness in the auto and industrial end markets, but signaled better days ahead. We did see shares of Texas Instruments turn higher on these new capex targets. Scott?
We'll watch it. Seema, thanks so much. That's Seema Modi. All right, let's continue the conversation. We can take a look at Palo Alto. That's surging on the back of its earnings. You do have some moves alongside as well. Fortinet was higher. CrowdStrike's still higher, but maybe not the kind of lift that some had been expecting. Josh, so tell me about CrowdStrike here after what you
Apple looks like it wants to go. Apple change of character. Apple is making a new high, trying to make a new high above 227.50 would do it definitely. Apple. Let me see what Apple looks like here. Apple. Okay, Apple. Let me look at the.
But this stock is really going to trade based on people's perception of how far they've put their problems behind them in terms of the IT outage. And it's really early. So we've had a big snapback rally in the name.
Okay.
I congratulate Steph for jumping in and capturing most of that. I don't think it's over.
Apple Daily looks good. It's on a buy signal. Apple.
It's still a premium valuation. It's still a company that is getting the benefit of the doubt because of how outstanding they've been in terms of growing this company. So it's not a value stock, and you have to accept the high beta that comes along with this if you want to be an investor here. And if you don't, then you shouldn't. So I accepted that. I'm okay with the volatility.
All right. So he was talking, Josh was talking PayPal earlier. Let's see what PayPal did with them goosing it. Okay. It had a little pop. Now it's fading back to VWAP. PayPal. Continuation. PayPal. Maybe.
stepped on CrowdStrike. I got Bill Baruch waiting on some
Apple sure looks good. I'm just reluctant to do anything at this point.
Volume is down 41% from its high. It went from 22 times EV to sales to 13 times EV to sales. Best in class operator, best in class products. These are all very high beta. If you don't want it, buy Hack because the cybersecurity trend is here to stay. It's going to be $1 trillion total addressable market by the end of this decade.
Okay, so we're giving a little bit back on the NAS, as you see today, down by about 1/3%, but it's ripped so much since the low of a couple weeks ago, Monday. The reason I bring it up is because Bill Baruch joins us by the phone now. He's making some moves in that space. Interesting ones at that. You trimmed a handful of names: NVIDIA, Apple, Amazon, Google, Meta. Is that synopsis at the end? You want to take me through why you trimmed these mega cap names?
Q's,
Absolutely. I went across a number of names, trimmed them all.
IWM,
Listen, we've had 8 straight updates coming out.
a little worse for wear, IWM.
Volatility event. I was on the show a couple times giving you all the buys I was making. But this rally has also happened with 4 rate cuts being priced in with a 63.7% probability. We had better than expected retail sales last week, better than expected jobless claims, and all that sort of goes into Fed Chair Powell this Friday. So not only to mention the NASDAQ just hit the gap from just prior close to the Google or Alphabet and Tesla earnings. There is a lot of resistance right here. So I'm just taking a step back, monetizing this move, because I do fear if Fed Chair Powell is not overly dovish, it could be perceived as hawkish. So a lot of these moves I'm trimming across my top 5 in my diversified equity portfolio: Apple, Amazon, NVIDIA, Alphabet, and Synopsys. And what I'm doing is more equally weighting the names to the rest of the portfolio and raising about 3% cash. It gives me flexibility the next couple of weeks. And Steph just noted, I mean, September brings volatility. So I want to be ready for that. And then really to cover on Meta, in our concentrated portfolio, which we trimmed across the board, we only own 10 names there. But Meta was our largest holding, and we trimmed that by about 24%. There's nothing that I dislike about any of these names that really at the moment.
Okay, nothing to do at the moment.
And the tweaks to come.
All right, yeah, maybe some risk ahead. We'll see what happens. Appreciate you.
All right, Meta. Let me take a look at Meta. Okay, looking for a bounce off of VWAP. We do have resistance overhead on Meta. 189 million shares sitting up there.
Halftime Report podcast. What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
Okay, let's see what you guys are going to do here. All right, Apple looks like it wants to do something. We do have a VIX expiration tomorrow. We OPEX on Friday. So there's expectations that we could see some weakness in the short term after an 8-day rally. So got to be aware of it. Reduce your risk. Yeah, let's take a look at New York Stock Exchange. Thank you, Corey. New York Stock Exchange, new highs, new lows. Just a quick calculation. How many new highs do we have versus new lows? Is that a green bar or a red bar? That's a green bar. The turn underway. Yes, we made a new high. Does it mean we're going to go up every single day? No, it just means that we're probably going to consolidate a little bit, I would think. Got non-farm payrolls on Friday, right? Yeah, so we're kind of at a stalemate at the moment. Not going anywhere. Okay, Tesla. Tesla just sitting here on a spinning top. A lot of spinning tops, a lot of dojis today. So you should expect that you're going to see more of this.
Welcome back. We have a number of calls in the day to get to today. Ferrari, Robert, downgraded to sell. That's at Alpha Value Beta Europe. The call happened yesterday. Stock rushing it off today. Price target goes to 357 euros from 342. That equates to about 396 from 379 US dollars. You own the stock.
We do, and it's hitting record high today. It's up 40% year to date.
So advanced decline looks good. We are, a little bit of a peak.
It illustrates the value in the ultra luxury segment. It's more resilient to shocks.
Okay, Meta back below VWAP. Looking for a bounce here.
We struggle with this. The valuation is 49 times forward PE. That's not typically something that we would be actively interested in, but remember, we bought it a long time ago. It's not even achieved long-term status for us. So we're going to be staying in this company, but this is a business with software-like profitability. 50% gross margins, 22% free cash flow margins.
Okay, S&P cash. I'm looking at Meta, but S&P cash had an area of supply. We're seeing, area of liquidity. We're seeing some buyers coming in.
It's been a tough one. I've been wrong, but I still like it. It's down 19% in the past year. The IGP, or the index, is actually up 20%.
Starting to move back up above VWAP.
Catch up if they can actually execute. Product revenue expectations are for 24% year-over-year growth. The reason the stock hasn't done well is because it's down from the mid-30s. Do you think that they can see stabilization in product revenue growth? You're seeing green shoots in the cloud migration projects. I still think you need data and clean data and a lot of scalable data for AI, and they play in that space. So I'm going to stick with it. It's a small position. My expectations are very low, though.
Rob, Lulu, reiterated overweight, and they've got earnings on 8/29. That's next week.
This is a falling knife that we actually caught and got cut.
Rob, they tell you never to catch a falling knife.
Well, we thought it looked pretty attractive and we could get it.
All right.
The valuation today is the cheapest it's been since its COVID lows. And, this is a business that has industry-leading profitability. I would be kidding everybody if I didn't say in a portfolio that's had a lot of successes, this may someday be a tax loss candidate this year. However, it's hard to do that when we think they're going to post a really good quarter coming up.
You want to hit MasterCard? Rob, will I have you? Overweight's the rating, 570, the price target, top pick at JP Morgan. They think they have a better line of sight into their guide.
Yeah, I think there is some risk to the top line if there is continued deterioration in economic activity. I mean, I think you definitely have to pay attention to that. But if we get this soft landing narrative to play out exactly as we want, these companies both trade, and we own Visa as well, both trade in line with their historic long-term averages and have been delivering better than their typical total volume.
A couple calls I want to get you on, Josh, that were earlier this week, but we didn't have a chance to speak to you. Shake Shack and Sweet Green. Okay, Piper Sandler downgrades those names to neutral from overweight. We know that you just bought Sweet Green, right? You told our viewers that last time, and you obviously own Shack, as we know.
Yeah, I mean, these are basically calls about stocks that have gone up a lot. Shake Shack is one of the best performers of the summer in the group, but just overall, the total stock market. And Sweet Green is coming off a pretty big rally as well. And it's possible that a lot of the recent great news is priced in. But I'm looking at both of these as a longer-term opportunity. These are chains with a few hundred stores each that could be in the thousands. And so I think if you're a trader and you have a stock that goes up a lot, maybe you want to take a profit. But if you're an investor, just the mere fact that these stocks have gone up in value doesn't always mean that there's not more to come. And in both of these cases, I think there is more to come. So
Okay.
I understand the downgrades. I just don't think that they apply to what I'm trying to do here.
Give me something quickly on Live Nation too, which the DOJ is seeking to break up Ticketmaster Live Nation. You own the stock. What's your thought here? Again, this happened on Monday, but I want your view today.
So the stock is at a 52-week high basically, and it has not fallen as a result. And I don't think most of the sell side analysts that are covering this are expecting a full scale breakup. That's just not what the base case is as far as what the remedy will be. So I don't think that they're at that much risk of that. And if they were, historically, those types of breakups actually lead to a creation of shareholder value. Ticketmaster as a standalone business is a great business. The venues, of course, Live Nation is very dominant there because they do a great job, and the fans like returning to those venues. So if that were to be the worst case scenario, I don't even think it's that bad. The reality is
Apple.
the consumer has demonstrated an insatiable appetite for live
Apple just riding the 20 EMA. So if you can get an entry near the 20 EMA on the 60 minute, that would be excellent.
That has not changed, will not change.
All right, Bertha Coombs has the headlines for us. Hi, Bertha.
Hi, Scott. Hunter Biden's latest bid to get his federal tax case dismissed has been denied. Federal judge rejected the motion Monday, saying he would not revisit a previous argument that special counsel David Weiss was ineligible to serve the role and funding for the probe was not approved by Congress. This time, Hunter Biden's lawyers cited the Supreme Court ruling on presidential immunity and a Florida ruling that threw out a separate prosecution of former President Donald Trump. Panama reported 29 Colombians on a flight deporting them. The government says this is the first to be paid by the U.S. under an agreement both countries signed in July. The Colombians entered Panama illegally through the Darien Gap, which over 500,000 migrants have used to head north last year. The move is part of a strategy to reduce migration to the U.S. through the transit point. And Apple is expanding access to its podcast library with a new web feature. It works with all of the main browsers and comes with most of the features available on the podcast app. The new page debuted about a month after Apple announced a web version of its Google Maps competitor, Apple Maps. Scott?
Bertha, appreciate it. Thank you. Bertha Coombs coming up. Countdown to Jackson Hole and a high-stakes speech from the Fed chair. Our Steve Leisman, he just arrived. He's going to join us next with what to expect.
I'm here just scanning through stocks. Watching Apple trying to push higher.
Moves that we've seen in the shares, as I mentioned, up about this from an earnings per an example trade.
And by the way, a programming note, Lightfolio's data on Lowe's yesterday was spot on in terms of their overall news. So one thing, looking back at what they did there. So when you look at TJX, like I said, this is a company doing all the right things in terms of where the economy is going. See Walmart, right? You can call TJX the Walmart of apparel. And that's what you're seeing. So Tom, even though this stock has moved, had a great run, I think you brought up a really good point. Home goods. Does home goods fall in line with Lowe's and Home Depot and get pulled into that category, or does or does the TJ Maxx segment dominate? So what I did, I stayed positive, Tom. I went out just 1 week, a tight 1 week. A lot of times we do calendars in this format. I'm doing a diagonal in this format, Tom. So what I did, I went in and bought the August 30th 110 call, couple dollars in the money, and then went in line with the expected move and sold the August 23rd 119 call. I did it for $4, Tom. I looked at $4. I think it's closer to it's $3.95. So it's within about a nickel of where it was. So Tom, a tight diagonal, a $9 diagonal, trading about $4, Tom.
All right, let's break this one down. Short-term call diagonal to the upside, buying the August 30th weekly 110 strike call. It's $2.50 in the money. That's got the higher delta. Selling the August 23rd weekly that expires in 3 days, the 119 call. So $9 wide bullish call diagonal. You're only paying $4 on this one. So there's your risk, $400 per spread, but less than half the width of this $9 wide call diagonal. You break even about 114 on this one. But Kev, the expected move is about a plus or minus $6 in the shares. That sets up with that 119 level, which would be a new all-time high. But I think the key is it costs less than a normal call diagonal, maybe because of the fact that implied volatility levels, there's a dispersion between those. In the August 30th, the 110 strike call you're buying on aggregate, that's about a 48% implied volatility level. And then in the near term August 23rd options that you're selling, the 119 call, it's about a 70
Down volume is still leading, so the edge right now is still with the bears unless we can manage a follow through on this little bounce off of the lows of the day. Still moving sideways. S&P cash, futures same.
And this type of strategy takes advantage of that. But Kevin, when you look at this, it's a short-term trade. Say the stock trading at all-time highs around 115, 116, 17. It goes up there. What do you do with something like this, or what's one way that you can manage it?
Yeah, start off with an ambitious limit order, right, above the market maybe. And either if you're patient or impatient, move that limit around as you see the stock open during the day, because the stock may gap open and may come down slightly, and then the real trading begins, Tom. So depending on how it opens, how it trades, just work limit orders, right? If you do more than one or you do several, work a limit order to sell some. But obviously the risk on this trade is the downside, Tom. And so depending on the news, if it's good or if it's, pretty average, you may want to adjust that way as well. So it gives you about a 42 delta on this spread, Tom. So it's a good, healthy delta to the upside that you can manage with limit orders if you care to.
Yep, and you have that ability to roll that short option over the next 3 days also to the August 30th weekly cycle. That would create a bullish call vertical if you think the thing is going to continue to move up to that 119 level or even above it. So you got some
Markets consolidating
on that type of strategy. All right, great look at the call diagonal based on Lightfolio's data as an example. But let's take a quick break. When we come back, we're going to take a look at Toll Brothers. The home builder stock's up 30% so far this year into their earnings after the close. This is high-end home buying right here. $1 million average selling price. Fast Market's coming right back.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices.
Apple just looks like it wants to go.
Schwab Network is available anytime, anywhere, on any device for free.
Apple just consolidating. Microsoft watching Microsoft. Thank you, Corey. Microsoft got room to the upside. 50 days overhead resistance at 435. Check in the money magic levels on Microsoft. We can see 425, 430. 425 is the next level, then 430, then 435. Next call wall, 425, just overhead.
I guess the question is going to be, what is good enough from Jackson Hole for this market?
Yeah, I would say good enough is we are starting a process. I don't think a promise of 50 basis points is likely in the cards or necessary for the market to absorb it and deal with it pretty well. I mean, I guess it depends on what the actual market feel position is going in. I think, today you have this low volume digestion type day after 8 straight days higher. That's probably good. You want to cool the market off and go neutral rather than kind of go in there guns blazing and raise the stakes for Powell. So I think it's okay. The bond market really is saying Fed's got to get moving. You look at the 2-year again, just really testing the lows almost of a couple of weeks ago. So yeah, I think you need to have a
Market's asleep, looking for a push higher.
Plan. It's not just data dependency as far as the eye can see.
Yeah. I mean, you don't want, spreads are widen a little bit, right? You don't want them to widen further. And I just wonder whether the Fed chair is going to give us really anything substantive on how far and how fast they're going to move, and whether that, in fact, is good enough if he doesn't.
He might make some nods in the direction of where they think the neutral rate sits. They'll probably just say it's a lot lower than where we are right now, which can, I guess, allow you to triangulate, how far they might go and what distance they think they need to travel. Ray, I think the bottom line is if they're going to be easing into an economy that remains resilient, great. If you start getting more numbers that say, guess what, late cycle is looking like late cycle, you lose your patience, or market loses its patience with a slower process, and they start to look like they're too tight for too long.
Well, they also don't want to be, forced to do something by moves in the credit markets. That's not a good scenario, right?
The objective all along has been these are kind of insurance normalization cuts. They're not emergency. Absolutely, you don't want that. And the credit markets really aren't flaring up. What's going on?
No, of course.
Treasury yields are going down, and credit.
S&P cash is still squeezing. Looking at Microsoft at the moment. Let's see, Apple just grinding along. Looks good, Apple.
Best ideas heading into September. Oppenheimer is out with a new list of stocks that they think could see a big bounce next month. We do have plenty of ownership on the desk as well, which is why we'll trade it next.
So S&P is just sitting here squeezing. Okay, just keep squeezing on the 5-minute chart. Let's go to the 5-minute chart. Nice squeeze, looking for a push higher. Apple, S&P, squeezing. You can see there's nothing to do at the moment, waiting for this momentum to give us a direction. S&P cash still squeezing. Okay, starting to get a little bit of an uptick.
Round out yours. We're back. Oppenheimer out with a list today of their best ideas for September, so we'll trade some of them. Josh Brown, NASDAQ is on their list.
Yeah, look, this stock is right at its
Starbucks,
52-week
yeah.
high, looks terrific technically. And if you recall, the main idea behind buying it in the 50s was that when we
Starbucks
get
still
that
consolidating.
cycle back, whether it's second half 24 or Q1 25, regardless, NASDAQ will
McDonald's doing okay.
Estimates will have to go higher.
Fading a little bit from the high, but definitely doing okay. I'm looking for the next dip down to the 9 EMA for the re-entry in McDonald's.
And so I feel like this is a
is on their list too, Carrie. KMX.
And so CarMax has a couple things going for it right now. Used car prices have finally started to come
PayPal.
down. Remember, they just skyrocketed during the
PayPal
pandemic.
trying to
So,
build
lower prices, better for volumes. Also, lower interest
nothing yet.
rates.
Apple trying to break higher. Nothing. Microsoft.
And it's been an underperformer, but this
Microsoft going.
Yeah, I like it. So does everybody else, apparently.
Yeah.
But they have a lot going for them. They have a very diverse total revenue base: data center, cloud, AI. AI is going to be a $30 to $50 billion business for them by 2026, 2027, up from 11 billion today. I don't think it gets enough credit for the AI exposure that it has.
Do you have a perspective here too, Rob? You own the stock.
Yeah, wish we still own more because we trimmed it a couple months ago. It was up 110%, it's up 140% now. I'm going to say this, at 27 times is pretty attractive.
Microsoft still going. Is that the high of the day? Don't chase it up here. Look for the next dip.
By the way, Sweet Green on the list too, but we covered that earlier. We'll step away. We'll come back. We'll do finals next.
Microsoft reports again on October the 29th. Microsoft. Microsoft, let's see. S&P trying to do something. S&P still squeezing. Okay, we're starting to drift a bit lower now, drifting lower. S&P back down to this liquidity level. All right, back down to another level. All right, Lilly. Lilly losing a little bit more steam. Let's see, Microsoft. Microsoft looking for it to hold. SPY is still hanging out. S&P. Okay, so more weakness in the markets.
What's ahead?
We're taking through the last hour today on Closing Bell with Goldman's Tony Pasquarello. Looking forward to that. Liz Young-Thomas, Matt Boss, Jason Snipe. We had a lot to talk about. I hope you'll join me at 3 o'clock. Josh Brown, what's your final trade?
Staying long NASDAQ.
Thank you very much, Rob Sechin.
CRM, there's been a lower bar in the software space lately, and I think they can beat it next week.
Okay, thank you for that, Carrie Firestone.
Yes to CRM and UNH. And UNH because they've got things that's resolved from their cyber strike, and Optum is going beautifully on the HMO side.
Okay, so we have, Target coming up with their earnings, and TJX.
Yeah, I have more confidence in
Must be
TJX.
steps.
S&P losing it now. S&P losing it, going down to the next level.
A good quarter usually sells off on the quarter. You buy it.
You used to own it.
I used to own it.
All right, I'll see you in the last hour. We'll take you through the final stretch. The exchanges now.
Thank you very much, Scott, and welcome to The Exchange. I'm Kelly Evans, and here's what's ahead. This actively managed ETF is up 18% this year. It's crossed $1 billion in assets since its launch less than 9 months ago. We'll bring you the ticker and the fund manager and the names that he says to buy right now. Plus, we turn to the charts. Our technician says something curious is happening in one part of the market. He'll tell us what he's watching and what it's signaling to him with stock.
Run for the market 8 straight sessions. Last time this 2023, and I want to say it's only happened like 6 times going back all the way to 2003. So we're sort of in that rarefied air in terms of number of green days in a row. And it's not like they've been small green days. We're talking like 1% or so moves on average for 8 straight sessions.
Yeah, I mean, today NVIDIA snapping its major winning streak. I believe it was up for like 9 of the last 10 sessions, adding like 23%. I mean, and that is a massive name. So no surprise. We always joke that look no further for the overall market activity than to look at NVIDIA. NVIDIA is down on the session by about 2.5% after having a really nice several green sessions. But as always on the show, we'll step away from the macro. We'll focus on our individual movers. We'll kick things off with upvote and downvote. We'll chart and trade those upvoted names. FOMO today, we're looking at Eli Lilly, which continues to see its weight loss drug reducing the overall developing type 2 diabetes by 94%. And we'll dive more into that miracle drug later on. We'll also be looking at some overall aerospace headlines. We have Boeing with some more manufacturing issues. We also have the Justice Department ending its review of the Hawaiian and Alaska Air merger without challenging the deal. So Hawaiian is ripping on the session as a result. And we'll close things out here with under 30 today. We are looking at Chewy as Bears did raise its price target, calling for some stability now into the back half of this year, which that is a name that needs some stability, Alex, to put it lightly.
Yeah, and I was just looking at NVIDIA, obviously, which has really high volatility right now at 75%. But we kind of think of it as like this stalwart of the market, this market general and leader, of which undoubtedly it has been. But looking at Lilly, it's not lagging that far behind in terms of its own performance, in terms of the last few years, last months, last 3 months, up on all those time frames. And it trades with about half as much implied volatility. So kind of risk adjusted, you can see why so many investors have flocked to Eli Lilly. But let's do upvote, downvote, more on that for FOMO later on. Not endorsements, not recommendations.
All right, so weakness persists. We're still trading at the lows.
Retailers here. Let's start with
8 days up. Today is day 9. Taking a breather.
Price target hike from JP Morgan.
Consolidation appears to be in the cards for now.
Among street analysts. So 570, previously I'd seen 550, but correct me if I'm wrong, they're still definitely one of the highest among the analysts that cover this name, and up from 500 with an overweight rating. So the firm did review year-to-date performance of some of these payment processing and fintech groups and established its now updated December of 2025 price target. So much of the sector has underperformed the market, they said, due to exposure to consumer spending and fears of slowing card volume growth, as well as a lack of excitement in new products and negative estimate revisions. But they shifted their preferences somewhat for the second half of this year, leaning more into a cautious stance on some of these upside drivers. They said preferring names with more visible, defensible growth and higher earnings quality. Their top picks are MasterCard as well as Corpay, which was a name I really don't frequent that chart until today. But amazingly so, MasterCard has 36 buys and 4 holds, not any bears as far as I could see. Visa is actually pretty similar. I will say the overall analyst coverage definitely skews more bullish to neutral. So the street likes these names, and MasterCard is holding on to a decent rally on the year. I mean, we're up almost 10%, so that's something, but we have pulled back about 4% from highs here.
Can confirm at least of the 52 analysts that Bloomberg compiles, they do have the street high at 570. JP Morgan's analyst there, 3 550s, a 545, but that 570 from the current share price of 468, that implies like a good 22% upside from here. So some optimism, even though that commentary, talks about more visible, defensible growth. Doesn't sound like the most optimistic, bullish kind of positioning, but they certainly see MasterCard as a potential beneficiary if that does come to fruition. So a lot of positives in payment processors, at least from JP Morgan. Next one is Affirm. So if we're talking higher quality earnings growth and sort of where that would be, I'm not sure Affirm falls into that camp quite yet, but it's still one that has very similar ties to the same type of commerce that MasterCard would.
It does. And I mean, you talk about a different type of performer. This name is so volatile.
All right, so you have to figure we've been up for 8 days straight. 12. This is 12 days from the low 2 weeks ago, Monday. So you have to expect that we're going to see a day every so often where weakness will set in, or at least profit taking. It's doing okay. Markets are all right. Be nice for the markets to be up every single day. That's unrealistic, though. Okay. All right. So starting, was it Monday, Tuesday? Starting on Thursday, Friday, Monday, Tuesday, Wednesday, Thursday, Friday, Monday. We had 8 days straight. 8 days straight.
They claim there's never going to be any hidden
from Thursday 2 weeks ago into Thursday, Friday last week into Monday, moving back up to the highs. We got a doji spinning top. There we go. Reversal now. Shorts covering.
Average price target right now is around $35 and some change. That implies about 17% upside, but then you also have the street lows, $20. So there's a fair skew of price targets right now on this name and where the direction in which the street thinks it'll go next.
Yeah, 3 of the biggest analysts you could see between Wells Fargo, JP Morgan, and Morgan Stanley all in the last week have provided updates. You get an equal
Shorts
weight
covering.
Andrew at Wells Fargo, $40 price target. Reggie at JP Morgan, overweight 45 today. And James at Morgan Stanley, underweight $20 price target today. So today alone, you have a $25 spread on a $29 stock, both to the downside and to the upside in terms of price targets and ratings in opposite directions. So to your point, volatile stock.
I mean, yeah, gosh. And I guess if you're, chasing that volatility, that name is definitely one that tends to move. And so that's something that some traders do look for, I guess. I just think you look at some of these massive price swings, makes me a bit nervous. But they do have their earnings actually Wednesday, August 28th. That's actually when we get a lot of these names we're covering today is next week. So that's also NVIDIA, of course, before. So we'll be busy as far as our earnings coverage next week. But our next name today also does report next Wednesday before the market opens. That is Abercrombie & Fitch. That is quietly one of the best performers that we're looking at today. I mean, this name is just so incredible, even in spite of some of the weakness we've seen hit retail as of late. Doesn't seem like it's hit this name. We're still up 88% this year, and I know we've pulled back about almost 16% off of highs, but up 310% off of 52-week lows. I mean, just ridiculous. But Citi did open a 30-day positive catalyst watch on Abercrombie into their second quarter report while keeping a neutral rating and a $190 price target. They do anticipate another strong earnings beat driven by strong sales and margins. And they do believe that both A&F and Hollister continue to see these strong double-digit comp momentum growth into second quarter with trend right fashion at both brands and acceleration into Hollister men's. But they think that Abercrombie's risk and reward is more favorable into this print. So it's interesting, all positive things, but then a neutral rating, which is to me a bit misguided. But we're slightly lower on this session, down about 0.4%. Not a lot of analysts actually cover this name. There's only 9 in total, which is relatively small, especially considering its outperformance this year. But I mean, we'll have to see if they can meet this really high bar. I can't remember looking at a retailer that was up almost 90% on the year into their quarterly report.
Yeah, 30% buys, 70% holds, so no doubters of Abercrombie at the moment. But what I think is incredible, I know there's been some big moves. We just talked
All right,
about
nice reversal.
in the market.
Shorts covering.
Look at a name like Nvidia. It hits 90. It's at 127, but it's Nvidia, right? It's a mega cap, high beta stock. Abercrombie & Fitch is almost 40% off its lows from August 5th. It is just absolutely incredible. And it's still a good $30 off its all-time high, or at least the yearly highs that it made post-earnings back in May. So another name, if you are a little bit squeamish from the volatility of the last few weeks, Abercrombie, maybe not insulated from it.
Right, well, especially flying high into next week's print. So that always makes me a bit nervous, but it's been able to, have some really nice earnings moves. So that's obviously what's driven some of the upside. Our last name today here is Birkenstock, and JP Morgan did raise its price target to $82 a share from $64, while also keeping an overweight rating, highlighting that some of their, again, the established 2025 price targets are updating across department stores and specialty soft lines sector retailers ahead of their second quarter reports. We do hear from Birkenstock next week, Thursday, before the market opens, but they noted that field work is pointing to a softer finish in July to close out the quarter, with spending growth year over year starting to moderate sequentially relative to May and June. I will say, this name also skews pretty optimistically. There's 14 buys, 3 holds, no outright bears, and average price target right now is around $67 a share. So that is obviously implying some upside. We're down about 1% today, but Birkenstock different because of the sense in which they've only been public for about a year at this point, less than a year at this point. So I just feel like for that reason, I tend to look at it as a more volatile name just because there's not like historically as much price activity.
2 names that I feel like were like very popular between Abercrombie and Birkenstock when I was like an elementary school student that have made a nice comeback.
I was going to say, I'm a Birkenstock wearer.
No, I think that they're popular now, no doubt. I see a couple pairs of them at my house, so that's usually a pretty good indication. They're not mine, trust me. That if they were mine, you might be in the wrong place. But when you look at Birkenstock and you look at the fact that it went public in October
Apple's still sitting here. Apple, AMD is flat.
Well-timed,
Nvidia flat on the day.
From its lows last year.
Tesla lower on the day. Meta trying to get something going.
17, 18% over the
Microsoft.
last 6 months. And even during the pullback, going back to August 5th, it kind of outperformed even on the downside. It didn't seem to have quite as much volatility maybe as some of the other names in its space.
Right. Birkenstock was actually one of the best performers, it seems like, outside of like ARM that we saw the IPOs last year. So I know it's pulled back, but
ARM's had way more volatility, though, to be fair. If you look at ARM's volatility of almost 70% compared to Birkenstock, which is, I guess it's at 50%, but pre-earnings for Birkenstock. But you actually just look at the movement. ARM moves around a lot.
And okay, like totally different size companies, totally different worlds in which they operate, so not comparable. But as far as like the relatively newer companies to the public markets, Birkenstock has been relatively resilient, and again, incomparable to ARM, but they both have done quite well post IPO. But we'll be looking more at our photo names today. We'll be diving into all of the volatility that is a firm, as well as the strength we have seen consistently over the last 12 months in Abercrombie and Fitch. Stick around, Next Gen Investing. We'll be right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time for our Chartmaster segment. Today we are looking at Affirm as well as Abercrombie and Fitch, two very different charts. And here to hopefully make sense of the technicals for us is Rick Ducat, our Chartmaster, as always. So we'll start off with the more, I'd say, maybe complex of the two, because that is Affirm, which is all over the place. I mean, it's remarkable that this name could be down 40% this year, while so well off of its recent lows, while also well off its highs. So, I mean, like, where to start, Rick? Walk us through what you're seeing.
Complicated in some ways, but the recent price trajectory has been pretty clear cut. You can see that most of the recent price action between these two downward sloping blue dashed lines here, a downward channel. And all we did was draw a conventional trend line going down across the highs, duplicated it. It matched up pretty darn close with the series of lows here. And eventually this recent low point that was the start of our rally during the past couple of weeks here. Now, this rally has been interesting here because we took, as of yesterday's close, we very rapidly crossed above all three of our exponential moving averages that we follow. Yellow 21-day, orange 60.
All right, shorts continue to cover a little bit more.
Very rapid succession there. And, you know, unfortunately for the bulls today, though, it does not look like we're able to hold on to that purple 252-day EMA. And, you know, in general, the longer term moving averages, the more important it is, the more important it is to clear it and close above it, the more important it is when it turns its slope from down to upward here. So this is a kind of a notable disappointment here for bullish traders here, but all is not lost yet. We're still holding above our other two EMAs. You know, we still have this shorter term upward trend line. Our white dashed line here is still in play as well. So perhaps just a momentary setback potentially.
Yeah, and today's price activity obviously not helping the bulls because we're down another 3%. But I'm interested in some of that recent momentum and hopeful recovery. Obviously, if you're looking to see a recovery in these shares, what is momentum telling you? Are we seeing some of the momentum match the recent recovery?
Microsoft hanging on to the highs. Microsoft
for the most part over the
just a little bit off the high of the day. Not one of the most bullish days for stocks. After 8 days up, we do still have positive gamma above 55.50. S&P cash above 55.50 is what we want to. We definitely want to stay above 55.50.
We did cross above that 50 midline. We're hanging out above that area as well. That demarcates bearish momentum from bullish momentum. So things are a bit more geared toward the upside right now. Not really able to hang on above that red trend line there, though. And, you know, RSI, you can use trend lines, support and resistance, very similar to how price uses these concepts here. So a breakout beyond a trend line is worth noting here, especially when it was happening concurrently with these breakouts above our moving averages here. But like we said a moment ago, a bit of a rejection here, not able to clear that 252-day EMA, and also not able to really hang on above this trend line here. So once again, a little bit of a disappointment here, but, you know, not a collapse or anything at this point.
Right, still tempting to hang on here and fight back against this recent downtrend. So now when we look at some price levels here with Affirm, again, volatility is your friend. I'm sure you love this name. So walk us through some levels, support, resistance you're keeping on your radar.
Sure. I mean, even after the notable decline that we've seen off those highs, we're down 43%. We're still up 114% off of our 52-week lows. So really, you know, like you said, there's definitely some volatility in this name here. If we were to keep moving to the upside, we can see here there was a
stocks Stocks not looking like any kind of follow through at the moment. Nvidia still flirting with the 50-day, excuse me, VWAP. Apple above VWAP.
That's quite close to where we are right now. And, actually, the first step would be to break out of that downward sloping channel before we got to that double top area. So that would be two things that are pretty close to each other. Beyond that, 39.25 was a notable high point on an intraday basis here. Certainly didn't last. It came back down, off those highs notably, but that was the high water mark to look at here. To the downside, we've got our yellow 21-day EMA, very close to our short-term white trend line there that's going upward near like 2760 or so. That would be one area to watch. Then the recent lows near 2225, our green line there.
Okay, yeah, and we have earnings, of course, next Wednesday. So we have that catalyst to look forward to. So a lot to.
Market's just sitting here marking time. Doji, no follow through.
There is earnings in about a week.
Spinning top.
Obviously, earnings for example purposes, but I mean, I'm expecting some
spinning top after 8 days straight up without a pullback. Finally taking a break. 12 days from the low. 8 days starting Thursday 2 weeks ago, rallying back up 100-day, then above the 50-day on Thursday, Friday last week. Started up this week with a bang. So a lot of people are still looking for that kind of price action. Unrealistic to think that we can just keep going. It'd be nice if we did, but looking for a little consolidation now.
Just because volatility is heightened around the earnings event, to Jenny's point.
The caveat for the bears is that we still have very positive gamma, so we could see a significant bounce if we manage to see some short covering, but positive gamma above 55.50. If we drop below 55.50, then we come risk off again. We go to risk off again after a few days up. Junk bonds, almost an outside day now on junk bonds. The 10-year yield drifting lower today. 10-year yield continues to drift lower. The low that we put in the second week of August. On August 5th, we hit that low. We bounced, turning back down now. The dollar, US dollar is weak, making new lows. Japanese yen, AUD, little bounce now.
Maybe on is its most formidable competitor, 53%, has nothing on an 88% gain. So walk us through this chart here.
Yeah, for sure. Kind of like a sleeper hit type of stock here. This may have flown under the radar for you, but off those yearly intraday lows, we're up 252%. So really strong price action here. And even though we did give back some of these gains recently, we're only down about 15% from those highs, especially after we had this recovery here that you can see.
Advanced decline percent, telling you pretty much what you would expect. We got the plus 30% on the S&P 500, the NASDAQ. Mid caps and small caps didn't make it that far before turning back down. So we got some more selling at the moment. Watch Microsoft. Microsoft trying to do something here. Microsoft.
In a shorter term uptrend, we still have the competing downtrend as well. So kind of
Microsoft trying to get going.
That we're at right now. We got to see how this one develops.
Not putting too much on Microsoft at the moment, but seeing a little bounce.
We've got our faster moving average starting to cross above our slower moving average, the 21 over the 63.
Some of the healthcare stocks like Lilly fading.
To open trade, but it's an important sign that the trend continues to improve.
Bristol Myers
move to the upside here.
Okay,
fading.
So
UNH, United Health.
Trend to the upside that has been consistent with price.
All right, let's go take a look at what's working.
Downward sloping trend line here.
Let's look at what's working at the moment.
Small amount of downward action here.
Walmart.
In the overbought area for much of,
Note the wicks on the top of the candles. All right, Procter & Gamble, no wick. Home Depot, very little wick. Okay, Merck coming out of a base. Microsoft, 425, 430, and then 435 are resistance levels on Microsoft. While Microsoft looks strong, I'm not going to put money to work at the moment. I just want to see what the indices have in store. We've been up for 8 days. This is day number 9, looking for a little consolidation. So I'm not putting money to work at the moment because I could drag everything down, even despite the fact that Microsoft looked pretty strong. I'm going to stick to my guns for now. See what happens around 2 o'clock if we get any kind of institutional interest.
We've got a little volume note here. We've got this area of heavy trading according to our volume profile study, kind of matches up roughly with where we hit our highs today. So around 175 or so, near that area, could be a congestion or consolidation area based on this heavy trading environment that we've seen around this price level. If we were to keep moving to the upside, highs near 186, near maybe 194 or so, and then around 197. So those would be kind of the milestones on the journey to the upside here. To the downside,
Looks like we could get some short covering.
confluence roughly in line with our trend line. So all those come together near like 155.
The bears are probably chomping at the bit for some downside for a couple of days. Palo Alto up 8%. Very little wick on the top of the candle, so probably an ABCD pattern intraday. Okay, so here's A over here, looking for B and C. Still, I'm not interested in taking something at the moment, only because of the weakness in the markets. Could spill over to other stocks. PayPal, looking good, following through. PayPal. Okay, ABCD pattern on PayPal. Okay, here's A over here early in the morning. B, C, higher low, looking for D, looking for a move back up to 72 on PayPal.
Invite itself to the picture here. But Rick talked about it being at a resistance point. So if it needs to break through that, perhaps it's going to need earnings as that catalyst. And if that is to happen, I looked at a strategy that would benefit from another really large move around earnings to the upside, getting towards that 200 level once again. And so if it's able to test that level for a second time, this is a strategy that can potentially benefit. Selling next Friday's 200 call and buying 2 Fridays from now, the September 6th
PayPal.
call. If you're
That
doing
looks
this for a
okay.
60-cent debit, you're risking
Albemarle following through. Albemarle.
$60 max loss, which I think can make sense for
Day
a strategy
4
like this, where you're kind of at that current
rally.
level. You're needing a binary event potentially to get you to get that move, and perhaps that doesn't happen. So, Jenny, in the event that that doesn't
Lily,
happen,
big fade on. Look at the wick on Lily.
but a chance to participate
Insight,
if that sort of narrow,
INCY.
list of events that you see happening could happen. So again, we've talked about throwing the dart, trying to hit a particular price. This is the strategy that looks to do that.
And of course, down about 6 cents of a percent today. So not like selling off by any means, but starting the week off more relatively muted, of course, with today's overall price activity. But we'll leave it there for our Chartmaster segment. Now coming up next, it's time to look at a clear winner in the market this year that has been Eli Lilly, as the wins just keep coming.
Medtronic, wick on the top of the candle. Clorox looking good. Clorox defensive.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in
New York Stock Exchange.
Spot a trend in electric vehicles?
DNA.
Have a passion for online gaming?
That can't be right.
Or want to explore the space?
Fabrinet, big gap up.
Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips.
All right, Canada Goose following through. Goose.
Themes, up to 25 stocks in just a few clicks.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
accelerate your market knowledge.
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Higgins.
Canada
Catch
Goose
me on Fast Market.
moving higher. Canada Goose, big move over the last few trading days.
Ready to go at 12 p.m. Eastern on the Schwab Network.
Mid caps. Sarepta. Wendy's.
Welcome back to Next Gen Investing.
BioMarin.
For FOMO and
Doji at the
a
highs.
name that has been a consistent mover to the upside. That is Eli Lilly, with shares now up 61, was 62% on the year, touching a new all-time high. Earlier in today's session, we pulled back about 2.5% from that 967 level, but still a really strong chart. So here now to break down more on what's driving this fantastic upside, I'd like to welcome in Caroline Wood, senior markets correspondent for the network. So, hey there, Caroline, talk to us about this diabetes weight loss drug. And I know it's amazing results from this trial, investing now in Novo Nordisk. So it's like the miracle drug, it seems like.
Yes, it certainly seems to be the case, and it doesn't seem like there's any stopping it. We're talking about tirzepatide, which is the main ingredient.
Extreme Networks breaking out. EXTR.
Eli Lilly, and in Zepbound, which is the weight loss drug. But yes, this late-stage trial showed that tirzepatide reduced the risk of type 2 diabetes in obese or overweight adults by 94%. So this suggests that the Eli Lilly's treatment could really delay diabetes in the majority of people that were using it in a really meaningful way. The trial also showed that patients experienced sustained weight loss over the roughly 3-year treatment period. Adults on the highest weekly dose of the drug saw a nearly 23% decrease in body weight on average after 176 weeks. That compares with 2.1%.
Okay, Microsoft. Still hanging out at the high. Microsoft. S&P cash building higher lows on the S&P cash. Trying to get back to the top Bollinger Bands, get above VWAP and follow through.
Progression to type 2 diabetes was 88%, so that compares to 94%. The company didn't say how much weight the test subjects regained on average after stopping treatment, but this does suggest that people would likely have to stay on those drugs in order to continue to see results, which would also, of course, benefit Eli Lilly. Could also be why we're seeing shares higher today.
Apple.
I did see CEO David Ricks on CNBC.
Looks like we could get something out of Apple, but I'm not willing to put money to work right now until the indices look a little bit more resilient. We're expecting that we could see more consolidation here on day number 9. So I'm just taking it easy at the moment. Don't have to trade every single day. All right, I'm going to take a 5-minute break. I'll be right back. I'm your host, Cousin Vinny, coming to you from the closingprint.com. It is 1:33 on the East Coast. It's Tuesday the 20th. And with that, I'll be right back.
You mentioned Novo Nordisk. Obviously, Ozempic is the key competitor to Eli Lilly's weight loss and diabetes drugs. It's under a little bit of pressure today, down about 0.2%. But the big losers today, the worst performers on the S&P 500, are Dexcom and Insulet. So Dexcom is a glucose monitoring company, and Insulet is an insulin management system company. Take a look at the shares of those, both down more than 6% today on this news. And Dexcom actually has had a pretty rough year to date, down about 41%. So, good news for Eli Lilly, not so good news for some of the other diabetes management companies. But seeing a nice pop for Eli Lilly shares. You talked about the 61% increase year to date. It's up 17% in August alone.
Yeah, this stock is an absolute monster to the upside, Caroline. But I was kind of looking through, at least in the last few years, Trulicity, which is their type 2 diabetes treatment, alongside Mounjaro, another one of their, of course, big type 2 diabetes treatments, are like their primary revenue drivers. So in a way, obviously these breakthroughs, if everything here is true and it gets approved and people are able to get access to this, is awesome news and potentially good news for Eli Lilly specifically in the short term. But long term, is this sort of just taking revenue from itself in a way, if it's preventing some of these conditions through pre-diabetic treatment?
Not necessarily, because keep in mind that that 84% versus 94 or 88% versus 94% shows that people have to stay or likely have to stay on these drugs if they want to.
I mean, 88 is still a big number, though.
It is still a big number, but that was just for 17 weeks, and they didn't say in terms of the weight loss component. So yes, potentially a little bit of robbing Peter to pay Paul, but I think that we're seeing the stock rise on this news because it could just bring more and more people in. And then of course there could be the switch from injections to pills down the road, which they've talked about, which other the drug makers in general have talked about, which would reach an even bigger clientele. So I mean, I think that there's a lot of excitement around these drugs, which is why we've seen the stock rise so much. I think the big question is how much of this good news is priced into the stock at this point, given the fact that it is up more than 60% year to date. Of course, that's when I look to the analysts to determine that. And if you take a look, I mean, the median price target is 1,027, so less than 10% upside from current levels, despite the fact that 82% of analysts still have a buy rating on shares. So it's kind of encroaching that median price target. It's trading at 941 right now. So I think it's certainly a question of how much more. How much more can it run on the same kind of news? But with 1 in 3 people having pre-diabetes, this could reach a lot more people with, efficacy like this late stage trial showed.
Yeah, and I mean, first of all, I have to say that now, anecdotally, since I've covered this story today, I'm like, do I have early onset of diabetes? I'm like, I probably am the 1 in 3, honestly, given my health habits. But it's also just amazing that there hasn't been. I know there's Novo Nordisk, there's Ozempic, but we haven't heard any real competition emerge from anyone else. I mean, correctly, I feel like it's just these two names in like a 2-horse race.
There's Hims as well, Hims and Hers. I believe that there's like a loophole if there's a shortage of, Ozempic and Mounjaro, that they can actually sell kind of a generic version of it because there have been shortages. But I know that they've been working through those shortages, which then, kind of closes that loophole for companies like Hims and Hers. So I know that when we've talked about some of these names, and the analysts have pointed it out, that competition is heating up a bit because it's not just one or the other. But it certainly seems like, especially Eli Lilly, we're seeing that reflected in the share price versus Novo Nordisk as well. Novo Nordisk was up 30% year to date, but Eli Lilly, especially after earnings, has really seen this huge jump. So it's clearly the favorite, but it's not without competition. I should also note, just in terms of the analyst community, Wells Fargo actually picked Eli Lilly as its new top pick in the space. Vertex Pharmaceuticals and AbbVie are number 2 and 3, but they continue to think that Lilly has potential to provide upside surprises with improving supply and then growth outside of the U.S. They say they see upside to 2025 consensus estimates. Note that the company also has key catalysts in terms of another upcoming trial in terms of these weight loss drugs for cardiovascular in 2025, and also a readout next year, a readout in 2026. So other key catalysts that could potentially move the stock higher surrounding some of the supply issues.
Right. I mean, it just feels like the demand, frankly, is so right now abundant that I don't necessarily see the narrative changing. As it seems like now, even in my world, I know so many various people that are on these drugs and have nothing but positive things. I mean, to say it, we used to talk about this as it was like a hypothetical. Now it's like encroaching in our daily lives. But
I know.
And
I have FOMO.
I do as well. And I'm like, I need to check if I have prediabetes. But we'll leave it there. Great insight as always, Caroline Woods, Senior Markets Correspondent for the network. So now we traded this name, Alex, and we already had earnings. We continue to get great, news as far as this developments with its trials and some of its overall efficacy. So walk us through how you think about trading this name for example purposes.
Yeah, long term, I think it has obviously expanded its marketplace. Pre-diabetes treatment, if it is able to get those bring those things to market. Insurance approvals will be huge. That'll really increase the amount of people it's able to reach. But do you think it is sort of, innovating itself away, given that a lot of its revenue is, of course, generated from type 2 diabetes drugs? But Shorter term, we're just looking at trading this name. Clearly an uptrending name, a nice performer. It's got optimism and momentum behind it. A couple things that are a concern, though. Liquidity is not great, and it's got a really high stock price per share, so it's a bigger product for those who are looking at these options. I looked at a risk-defined spread in order to contain that risk to a more maybe manageable level for some. And by doing that, we did a $5 wide spread, September 20th expiration, selling the 9.15 put, buying the 9.10 put, looking for about $1.75 credit. Maybe this would be, you'd be comfortable with this down to $1.50. It's just sort of a ballpark around where it was at the time. Again, liquidity is not the greatest in this name. 325 is the max loss potential. You simply take the credit away from the width of the spread. So $5 wide spread, net of the $1.75 leaves you with 325. We know options priced per share, but really delivering 100 shares in the standard format. So 325 max profit is 175 with the break even 913.
Microsoft grinding a bit higher. Microsoft
Nice window of profitability, stay above 915. It's at 940 right now.
trying to break higher. Microsoft.
$18 just today alone. Even though it seems like it's a long ways away, 915 absolutely could be tested over the next month.
I mean, right, we're even just $27 off of highs we touched today. So this name moves, and it's moved to the upside, but obviously it's capable of giving back some of that strength as we're seeing in real time. But we'll leave it there for FOMO. Now, coming up next, time to talk a whole different space. That is everything involving the aerospace world. We'll look at Boeing, manufacturing delays, Hawaiian Air, and Alaska Air, actually with some good news. And Hawaiian is ripping as a result, as well as Southwest. We'll discuss more with Kevin Green coming up next.
Okay, Microsoft looking for a break higher. Okay, watching Microsoft for the follow through.
Trading the trending
Okay,
names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Microsoft watching, looking for a follow through.
Welcome back to Next Gen Investing. It's time to talk all things the aerospace world. And we'll start off with Boeing because Boeing is right around its session lows here, just $1 or so off, but down about 4% today on some more manufacturing news. So here to break down that story for us, I'd like to welcome in Kevin Green, senior markets correspondent for the network. Kevin, I cannot believe this poor CEO has to deal with this as he's new to the job. I believe like 2 weeks on the job, but this is the nature of Boeing, unfortunately.
Come on, Jenny. I think the probability of having an issue from Boeing these days, it seems like it's still pretty high, unfortunately. So we are seeing, some reports here that the 777X is being grounded at this point in time. Now, this is a test fleet. They only have 4 planes, but this is after a scheduled maintenance showed that they did have cracks within the jet structure. So they had to obviously ground this. Now, they do have some deliveries that are scheduled for 2025, around 540 orders.
Microsoft trying pushing high today.
2025. Now the market's really trying to assess if that's going to be possible, or we're going to see a pushback of that timeline for deliveries. Now this is after having the Max 9 situation where the emergency door plug actually blew out, and among other issues for this company. So it is an unfortunate situation. We are seeing the shares sell off here today. And we've seen these type of reactions before. We see maybe selling for 2-3 trading sessions, and then the market tries to stabilize and see if the stock's going to move higher. But it's just an unfortunate event among many that we've seen for this company as of late.
This is systemic at this point, Kev. I don't have any more excuses for Boeing, but you still look at it, and yeah, the stock can go lower. It's down, 4% today. We saw it, I think, at like $90 around the pandemic. So certainly we know that it can go to lower prices.
Microsoft's about to go. Microsoft.
This money's got nowhere else to go. It's Airbus and Boeing. And so, yeah, there's SpaceX when it comes to some of the, the space exploration contracts and things down those paths. But, if this was an industry that had more players, I don't know that we're looking at Boeing at 172. It might be a substantially lower, but we're not in that alternate reality. We're in the one that we are. Talk to me about some of these airlines, though, that probably have to deal with some of this fallout, the Southwests of the world. And I guess I'm not as familiar with, Hawaiian Airlines or Alaska Airlines in terms of their fleets, but I know they got some news.
Yeah, so I would say for Southwest, I'm not sure if it's going to have a major impact for them because they generally have a max fleet. So I'm not sure if it's going to have a downward impact for them in the long term here. But we are seeing for Southwest, the news there is obviously their battle with Elliott Management, which they want to be able to add, I believe, 10 members to the board, if I'm not mistaken, and pretty much replacing 2/3 of the existing board, as well as trying to get the current CEO out. So that battle is going back and forth. With the CEO, Bob Jordan, did state that they're planning to try to fight this, and if it's a fight that they want, it's a fight that they will get. And it sounds like he's been really trying to work with the unions in order to gain support, which would be a major stakeholder to be able to provide some support for that leadership. And then we have Hawaiian Air.
Microsoft going. All right, looks good. Microsoft.
Alaskan Air seems like it may be going through. It says that they're actually at the final legs. The Justice Department did not have any challenges to the deal at this point. And this deal was actually announced in December, which was around a $1.9 billion offering to buy out Hawaiian Airlines. It's Alaska buying out Hawaiian Airlines, paying $18 a share and then taking on $900 million worth of debt. And you can actually see it in Hawaiian Air's stock price right now. There's not much of an arbitrage left to go. There's only around 30 cents being priced in, which is a risk reflecting a very low probability if this deal does not go through. You can also see that reflected in the options contracts moving forward. Pretty much no bids on the $18 level, and pretty much sitting at the maxed out when it comes to intrinsic value for the $17 call. So a lot going on in the airline space. Unfortunately, we are seeing a little bit of a pullback pretty much across the board here today. But this is a sector that's it's kind of like a Sour Patch Kid, right? It's kind of they're sour and then it gets sweet and then it gets sour again, unfortunately. And that's the nature of trading this industry.
That is a great way to put it, Kevin. I was thinking it's kind of like Russian roulette too, because I feel like Hawaiian, well, today it's having a great day. It's like the leader of this group, but there's also then, it's like significant, I feel like, downside risk when you see his name up 11% on this news. And maybe I'm just a skeptic of this overall space. I like the Sour Patch Kids analogy a bit more, but appreciate it as always. Kevin Green, senior markets correspondent for the network. And now coming up next, it's time for Under 30. Last but not least, it's time to talk all things Chewy, which is lower today, but some analyst optimism, perhaps some signs of recovery in Chewy. Per this analyst, George Schultz will have more on that story for us coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back to Next Gen Investing. It's time for Under 30. Today we discuss Chewy, and joining us is George Killis, as always, senior markets correspondent for the Schwab Network. Now, wasn't Roaring Kitty in this, George? Wasn't that the last news item that I had seen when it came to Chewy? Is that just not a story anymore?
Well, I don't think that's the prevailing story for Chewy. I think it was, I believe, in late June when the stock moved higher pretty significantly. I think it traded close to $40 based upon the news of the position that Roaring Kitty actually took on with this underlying business. But, you know, I think we've talked about this one a couple of times, and I think I mentioned that this one from a business standpoint and a fundamental standpoint is starting to look rather interesting, I suggest, because the business has actually been expanding not just its active customer base, which is over 20 million on a monthly basis, but they've actually expanded on additional services, which generates additional revenue per active customer. And that includes things like telehealth visits, pharmacy, as well as things like pet insurance that you can actually secure and purchase through Chewy. And I think this is becoming the place, an online, trusted e-commerce and pet service platform. And with that said, even if you look at some of the analysts, like for instance Baird, they did recently maintain an outperform rating in the stock and increase their price target to $32 a share. As the company is going to be reporting earnings coming up next week, they actually see the inflection point effectively in profitability for the underlying business. If you look at the one-year chart, the stock is down slightly over the last year, but you'll see a gap higher. And this is based upon the previous earnings, which were, I believe, in early May, or early June. And it's gapping higher, and it's actually been holding some levels based upon the fact that last quarter they did denote an inflection point in net income. The company is profitable based upon last year's sales of close to $12 billion. They generated about $83 million in net income. And in fact, we talk about companies that move from, non-profitable positions to profitable positions. If you look at the sales growth for Chewy, last year was around 6.8%. If you accumulate the last 4 quarters, they're expecting 7% revenue growth, or slightly higher for the next year. But at the same time, the earnings growth estimates were actually down 20%, contracted last year, and on a forward basis, they're up by close to 30%. So there's a complete inflection point that I see here happening in earnings growth, profitability for the business. And I think last quarter's results, when the stock gapped higher, was quite meaningful for potential trend continuation.
So, George, I was taking on a more pessimistic stance. I was thinking after being profitable, then the bar is set high. You have to achieve that profitability, or else it's like then the quarter was a blip, your profitability is somewhat overlooked. So You see this continuing though as we go into their earnings, which I believe are also next week. It's like when we get all of these major earnings and NVIDIA and everything we talked about also earlier in our show.
So yeah, I think it's a good point. So what I see here is if you look at prior to last quarter's results, the guidance the company provided for 2024's earnings was around 59 cents. Now it's 94 cents. So that is a pretty significant increase for this year. Now the stock may already reflect that. Going into next year, the estimates are for about $1.09 for the full year of 2025. So
Futures continue to grind higher. Futures.
that's somewhere in the 20% range, give or take, in terms of earnings growth.
Microsoft, a new high on the day. Microsoft
Free cash, and also
pushing a bit higher. Microsoft.
$1.1 billion in cash on the balance sheet. So if you take the market
Volume picking up on Microsoft.
of around 11 billion, that's about 10% of the total flow. So they seem to be in a better position. Let me just put it this way. Both on a balance sheet standpoint, an earnings growth standpoint, and even the price action seems to reflect that. Now, there can be some slowness in this quarter, and this is why I think Baird is looking at the continuation of prospective earnings growth going into early 2025. So we may have a soft quarter coming up when they report earnings. I can't tell for sure, and the stock may move to the downside. But nonetheless, I think the trend on Chewy looks rather compelling. Let's just put it that way, because the financials seem to fit the price action. And again, like I said, that's really what matters for a stock. And I don't necessarily see dilution risk in the near future just because they have a good cash position. And lastly, I'll say this: that going back 6 months, the short interest was around 18% of the float. Now it's about 12%. So I take that for what it's worth. It seems like shorts are covering.
Okay, and I love that, George. You know, I always love to check on the short positions in some of these names that are heavily shorted. So great insight and great breakdown ahead of Chewy's results next Wednesday before the market opens. But we'll leave it there. Appreciate it, George Schill, Senior Markets Correspondent for the network. And that'll do it for Alex and myself. For Next Gen Investing, coming up next, we have the Watch List with Nicole Petalides.
This election season, stay out of the muck and the mudslinging. Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political
week. Boeing. I'm thinking about Boeing, credit spreads. Boeing. Managing a bounce. Let's see what a credit spread looks like on this one.
Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well
190,
are almost too big to
160.
fail. Have you set yourself up correctly? It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy. So what is all
people want to buy it, the price could go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Just looking at a potential iron condor on Boeing, trying to figure out the deltas on this.
Good afternoon. Welcome to the Watch List. I'm Nicole Penelides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. Watching. Were we going to make 9 days of gains? Well, at least for right now, it doesn't look that way. In the meantime, we have a big show for you with the Futurum Group release its AI market share report. We will break down the highlights from that AI. Are poised to show the most growth in the future. It's Technical Tuesday. Kevin Horner will join us and examine the recent charts for the S&P 500, Supermicro, and Pfizer. And our panel standing by discusses those semiconductors. AMD continues to challenge NVIDIA for the lead in the AI race. Here's a look at the numbers. As I mentioned, we're up 8 days in a row, but today snapping that for the S&P and NASDAQ. Right now, you're seeing down arrows across the board. Last week was a great week. It was the best week of the year. This week, a little choppy ahead of Friday's Jackson Hole symposium, where we're going to hear from Jay Powell. Right now, 55.94 for the S&P 500. The NASDAQ is down 0.25%. The Dow, which hit some new highs, 52-week highs, right now down 0.2%. It's the Russell getting hit the hardest, down 1.25%. Oil and gold are mixed. Gold 25.48 a troy ounce, up almost $7. That's been hitting new highs, and oil's at 74.10 a barrel. 15.84 on the VIX. Dollar 1.35 for the dollar, and Bitcoin 59,165. So that's where we stand as we kick this off on the 2 p.m. hour Eastern Time here live from the New York Stock Exchange. We want to take a look at some story stocks too, big movers and stories in the market. Kevin Hanks joins us, host of Fast Market here on Schwab Network. And we'll start off with Palo Alto Networks. That has been a winner, had its report after the bell last night. Some of your thoughts.
Hey, Nicole, cybersecurity
190.
stock, Palo Alto Networks, doing well and possibly taking some business away from CrowdStrike. Here's the numbers. Earnings per share, $1.51 a share versus $1.41 expected. Revenues also a beat. $2.19 billion versus $2.16 expected. Remember, that's for the fiscal fourth quarter. Now, the guidance for fiscal first quarter of next year, $1.47 to $1.49. Revenues $2.1 billion to $2.13 billion. Full year fiscal 2025 guidance, $6.18 a share to $6.31 a share. 9.1 to 9.15 billion. Jefferies, Wells Fargo, Evercore ISI, KeyBank, Citibank, Deutsche Bank, all raising price targets on the name. It's a big win. Stock now up 8.8%, $30.50. Nicole, one of the biggest winners of the day. Really good news.
160.
From the cybersecurity.
Yeah, nice move there for Palo Alto. On the other hand, we have the down arrow. We saw those under pressure, and I think a lot of people were anticipating that consumer demand would be waning or under some sort of pressure, and that's what we heard, right?
Yeah, this was anticipated, yet the stock rallied off Home Depot's earnings a week or so ago and rallied yesterday, but the numbers were not good. Earnings per share were a beat, though. $4.10 versus $3.96 estimates. 23.5 billion.
All right, S&P continues to rally back into the squeeze.
Expected comp sales. Here's where it gets ugly.
All right, back above VWAP. S&P. Microsoft continues to push.
Even though that
S&P 500. All right, looking forward to get back above VWAP.
Lower on the day, though, as the overall market gave up some of its gains, and the overall news and the guidance from Lowe's was a bit soft. They lowered full year 2024 guidance for earnings per share and revenue, and they put the comp sales for full year 24 at down 3.5% to 4%. So, home improvement, Home Depot talked about it a week or so ago. Lowe's talking about it this week. Soft, Nicole.
Yeah. I mean, they missed on the revenue. They had the sales pressure. They cut the guidance. They tried to highlight the margin strength, but it was not
Okay, S&P
enough.
still climbing. Trying to get back above VWAP.
Thank you so much. Good to see you, Kevin Hanks. Appreciate it.
Okay, Bitcoin turning might be a nice entry on Bitcoin.
For all the volatility we've seen, joining me right now, Bill Davis at Hennessy Stance ESG Large Cap ETF Fund. Thank you so much for being with us, Bill Davis. I'm glad you're here. So tell me some thoughts, big picture. How do you feel about this market?
I don't really like this market so much. I think that especially the S&P 500, which we all know
Bitcoin is turning. Bitcoin.
a handful of companies represent the vast majority, not the vast majority, but a significant portion of the overall index. And right now, it has the performance of the S&P 500 itself compared to that of the S&P 500 equal weight, which is what it sounds like. Has never been as great as it is today. And the two previous times, Nicole, where we saw this kind of disparity, resulted in massive underperformance of the S&P and massive outperformance of the equal weight in the most recent instance, which was
at VWAP. Q's at VWAP.
20 years of underperformance by the S&P to the tune of something like 300 basis points annualized.
So you think people should stick with that? I mean, at this point now, what do you do? Because we've seen those names come back. They did so well over the last week or so. I know we had the volatility the prior week and that big sell-off last Monday, but then they came back. We saw video of 19%. So what is someone to do? The equal weight or the market weight?
So it depends on how much risk you want to have, right? So in my view, and I say this as a portfolio manager within the Hennessy family of funds, which is all active management, all high conviction. We know something about these kinds of markets, and I think that the signals we're getting right now, volatility spikes, big down weeks, then big up weeks, is the kind of the beginning of a rotation out of some of these mega cap names. Not all of them necessarily, but we've already kind of seen them pair back. I mean,
Okay, S&P, another squeeze. Looking for direction. We could just stay here in a doji.
Tesla even had a comeback, so it's hard to say, right? We went from the Magnificent Seven to the Fabulous Five. You're right. That's what we were saying. ESG, that's certainly in your wheelhouse. What's going on there?
I would say the movement hasn't really changed. It's more going underground. I think that there's a lot of companies that just don't want to deal with, I would just call it the performative politics that have gotten attached to the ESG movement. So I think, look, the underlying dynamics of, let's start with the firms. The firms themselves are not changing their efforts to decarbonize. They are simply talking about it less. Why are they doing it? Because it's good for business, right? And I think from an investor standpoint, as portfolio managers, we're exercising fiduciary responsibility, as are others that are looking at these risk factors. So that isn't going to change. I think if anything, I think we're going to stop using the term ESG. And it's just going to be replaced by something else, but the same underlying behavior is going to carry forward.
See, it costs so much. That's what it is. I mean, that's really one of the biggest
Okay, Q's continues. S&P catching a bid.
sensitive, or maybe put more governance in place and such, right? It can.
I could argue that any type of regulation costs companies money because they have to hire people and lawyers and staffers to deal with that. But I would also say that becoming more environmentally conscious usually actually reduces costs these days. Now, not 10 years ago.
Microsoft continues.
I can give you examples of companies that are in our portfolio that are moving from things like coal to LNG in other parts of the world, and they're forecasting that they're going to save a whole lot of money.
Right. It just takes time.
Takes a bit of time.
Right.
Bitcoin turning the corner.
When you buy an LED light bulb, right?
Yes,
I mean,
you
it costs a lot.
pay for it.
For the whole house, but then you have to buy a million more over the next 3 years. That being said, I know you have a few names that you brought to us today, including Broadcom and Freeport-McMoRan, right? Tell me about those two names and why you do like them.
All right. Well, everybody in the ESG space loves AI, right? So I would say we like it a lot less than most others because we tend to be more like an equal weight portfolio where we're not mega cappy. However, Broadcom, I really like. I actually think Broadcom is the one AI name that, if you can believe it, at 23 times forward PE might be actually undervalued. 60 billion of revenue this year, 40% forecast, obviously, 40% free cash flow margin. I mean, that's a massive moat of intellectual property around them. I think that's a company that is going to survive any kind of a, rebalancing of the prices of some of these on a PE basis. So
Yeah, and you reminded me about the stock split.
right, and the stock split.
And that's coming up, and that sometimes can drive the stock or cause some volatility.
Certainly for
too, but-
retail investors, yes.
Yeah. And then Freeport-McMoRan, I mean, when we think about mining and copper and commodities, we've had a weaker
Microsoft.
dollar.
Yep. So you wouldn't expect an ESG
Microsoft
manager
looking
to come in
good.
talking about a mining stock, right?
Mhm.
So in general, in the ESG space, everybody stays away from industrials. They stay away from dirtier sectors of the economy. But think about it this way. Everything in this room that we're in on the floor here depends on copper. It is absolutely indispensable to advances in technology, in aerospace, in electrification of vehicles, even in medicine. Implants basically have copper because of the properties of copper, basically. And so essentially, it is
Okay, let's look
absolutely
at
essential to the
Microsoft.
future of mankind.
Daily looking good.
Technology.
RSI rising back above 50. Let's look at the 60-minute time frame. Okay, nice trend in the 60-minute.
They also have a pretty big moat around them. They're, I think, the largest copper producer in the U.S. They're responsible for something like 8% of all global copper production. And I think that they are, even if you factor in sort of global weakness, the demand for copper around the world is going to increase. And I think it's a very good company to own.
Yeah, I saw a few of the names that you have in the ESG stance fund. STNZ is the fund ticker. AT&T was in there, 3M, Akamai, among others, right?
Sure.
How are you picking some of those names or the most heavily loaded up names in the fund quickly?
So we do three things. We look for companies who are responsible from an ESG standpoint. We then marry that up with companies in the S&P that we think fundamentally exhibit the likelihood that they're going to actually outperform in the next 3 months, and then we optimize to manage risk. So we're doing those three things. It's systematic. It is based on machine learning, talking about AI. We've been practicing that for now 10 years.
Right.
And ultimately, we end up with a portfolio we rebalance every quarter.
So glad you were here.
Thanks for
Thank you
having
so
me.
much, Bill Davis, portfolio manager at Hennessy Stance ESG Large Cap ETF. Thank you. Coming up, Options Corner. Tom White is standing by, and he will highlight the unusual options activity we're seeing today, how investors are looking to trade on recent news of coal, Procter & Gamble, Oracle. Stay with us here on the watch list. We'll be right back. Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
All right. We got an hour and 45 minutes to go.
I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. Time for Options Corner, where we analyze unusual options trades that we are seeing throughout the day. It is our pleasure to bring to you Tom White, who each day takes a look at the unusual options activity that we're seeing, trading names on the news, and pulls out real trades. He's host of Fast Market here live on Schwab Network every day. And today you're watching Kohl's, Tom. Shares are seeing significant weakness this year, down 30%. And you found a trader who stayed bearish on the stock with an options trade. We would like to hear more about it, Tom.
Yeah, Nicole, this stock's been under pressure. A real big loser in the retail space. They're trying to go through a restructuring plan right now. They've got earnings next week, so we'll get some more clarity on how that's working out. Sales year over year decreased 5.3% last quarter. So the story hasn't been good for Kohl's. They're trying to do that restructure. They're trying to control their inventory levels. They're trying to open more Sephora locations in their stores to kind of prop up, what they have going. Sales in China starting to slow down in some of their segments also. So we've seen some weakness across the board. This mostly domestically based retail has been under pressure, and I think somebody's betting that it's going to continue to move lower because we did see some unusual option activity out in the September monthly cycle. So about 30 to 31 days to expiration in the September 19th strike put. Trader bought over 15,000 of those for an average debit of $1.28. So that break even for this trader where he starts making money is $17.72 over the next month. That's about 10% below the current share price. That's about what the option market's pricing in as far as a plus or minus move in the shares post earnings. Put volume about 12 times.
Okay,
the normal daily
Qs are on the
average.
move.
They're starting to position themselves for further weakness in Kohl's. Maybe this turnaround plan that the CEO is trying to initiate at this point might not be working out. But this trader's definitely betting against any upside in the near term.
Qs, looking for a giddy up. Here goes the
Yeah,
Qs.
and when we see this now, went from $30, it's below 20 now.
Okay, we got a nice giddy up
Any
going.
final thoughts here on this one? Because it's amazing how consumers
So
have been
look,
so
the
particular
most I
about
would
where
think
they're spending
today would be the high of the day.
Yeah, well, if you look at the retail
That's
sales
it.
data, consumer
Okay,
sentiment numbers,
for
they're
now.
not weak, right? They're better than
Apple looks like it
expected.
wants to go.
So you
Apple.
would think some of the retailers would participate.
Okay, so Apple and Microsoft together, what's that? 13% of the weight. There goes Microsoft.
Being choosy and picky on what
Microsoft on the move.
their money on. We'll get some more clarity tomorrow morning as far as the consumer goes with Target earnings also. If they see continued weakness, that stock's basically flat on the year, and the expectations or the bar set pretty low going into that report ahead of Kohl's. But it just seems like some retailers are doing really well, like the A&Fs, the Walmarts, but certain names like Target and Kohl's are definitely underperforming.
Yeah, and then I'm taking a look at Procter & Gamble, the next name that you're focusing on, which actually hit an all-time high earlier this month. But prior to that, had this big gap down, had that sort of big move, volatility, and came back up to the new high, and now sitting around 170 or so, not far off from that level. You found a bullish trade, right? Tell us more about that, Tom.
It did hit the all-time high earlier this month, Nicole, and we've seen the consumer staples sector as a whole settled at a record high yesterday, and PG is a big component within the S&P 500 consumer staples segment. So we've seen some, pretty solid gains here for a lot of these stocks. They've bounced back. We've seen a little bit of rotation, maybe out of big tech into some of these names. Now, you have to wonder, is this because they're a safety play? They pay a nice dividend. Their growth is slow, but it's steady moving forward. Now, volumes actually increased during PG's last earnings report, and that's the first time we've seen that in a while. They've relied more on price hikes for a lot of their products, but they don't have that control anymore as the consumer's being choosy. But now volumes are starting to go up. Volumes rose 1% last quarter. Strong demand for grooming, healthcare, and home care products. So that's a bonus for this company. But China continues to struggle on that side of their business. They saw a 9% decrease in organic sales over in China. So that's a concern moving forward, as that economy has not rebounded as much as a lot of people thought. That on their last earnings at the end of July, they expected weaker than expected quarterly revenue, as China did weigh on those. Now, that being said, with the consumer staples segment moving higher, I think we got some traders in here expecting Procter & Gamble to continue to move higher over the next couple of months, because this was out in the October cycle, the 180 strike call. A trader came in and bought over 7,000 of those, paid an average debit of only 55 cents. It's pretty far out of the money to the upside. So that break even just over 180, 55 over the next 59 days. It's about 6% above the current share price in there, with call volume about 4 times normal daily average volume. So
All right, looking
one
good.
segment, of the,
Microsoft
S&P 500
working.
doing better than others with the staples, and this trader thinks that Procter & Gamble is going to continue to move to fresh all-time highs over the next 2 months.
Yeah. All right. And then last but not least, we're watching Oracle, which over 6 months is up nearly 30%. But we're looking back. I was just looking back to July 2019, because that was the last time that this stock has been up 9 consecutive days in a row, which is what it's doing today. So that's always a lot of fun to see some of those trends. And earnings on tap at the beginning of September. You, in fact, found a bearish trade. So let's hear a little about that, too.
Yeah, we had that nice run. Stock's up over 30% so far this year. And I think that pivot away from relying on M&A activity to kind of support their growth is kind of taking hold. Now, they've been part of
Okay,
every
Apple looking good.
revolution
Nvidia
here in the U.S. over
trying
the
to
last
turn.
30 years or so.
AMD trying
And
to
AI
turn.
is their next growth area. If you look at some of the numbers on their cloud computing side, that's starting to grow at a 40% year-over-year clip over the last 4 or 5 quarters. So that's a bonus for them. And actually, supply is actually outstripping demand at this point for a lot of their components on those data centers, and the ability for Oracle to cross-sell. You know, they're basically, their customers are all the Fortune 500 companies. So that cross-selling platform that they've got working out pretty well. And that being said, they do have earnings on the 9th of September. So that'll be a key event, especially with the gains that we've seen so far this year. They better not disappoint, because we might see some downside. And I think that's what this trader is betting on. Saw some unusual option activity out in the September 20th, the monthly cycle that expires in 31 days. Trader bought over 15,000 of the 120.
Okay,
So
S&P,
far
everything's
out of the
still
money
going.
to
All
the
right, looking
downside.
good
This
with
stock
plenty of
can
time
move
left
on
in the day.
earnings, but this trader's betting that it's going to go below 120. They paid roughly an average debit of 93 cents on that 15,000 lot. So that break even just above 119 over the next month. That's about 14% below the current share price in there, with put volume 4 times normal daily average volume that we've seen over the last 5 trading days. So yeah, somebody loading up on some puts. Now, Nicole, this could be a trader that has a big, massive position in the stock, and he's just maybe hedging his position. But this trader definitely captures that earnings event on the 9th of September with this put purchase.
Yeah, I'm glad you mentioned that and said all sides, because you never really know. Yeah. I also thought it was interesting when you said how, you know, it was in the supply chain of tech. And I waited to see how many years you were going to say, and you said 30 years, because I knew you were going to go back before Y2K. And that was so right. That was so right. Great to see you, Tom White. Thank you.
Thanks.
That was Options Corner with Tom White with Kohl's, Procter & Gamble, and Oracle. Coming up, the Futurum Group released its AI market share report, and we want to hear. They're going to break down the highlights from this report, including which segments within AI are poised to show the most growth in the future. You'll want to hear more. We'll be right back here on the Watch List.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab. Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this girl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Watch List. I'm Nicole Penelides, coming to you live from the New York Stock Exchange. The Dow is positive. Oh, will the S&P go positive, and then we'll make it 9 winning days in a row? We'll see. In the meantime, we have some movers for you to watch in the market right now. Boeing is falling after the aerospace company said it will ground its test fleet of the 777X aircraft after finding cracks in the jet's structure. Boeing currently has orders for 540 77X aircrafts and plans to begin delivering them in 2025. It's unclear whether the issue will impact the scheduled delivery time for these aircrafts. Take a look at Eli Lilly. It's moving higher after announcing its anti-obesity drug Mounjaro reduces the risk of type 2 diabetes in adults with pre-diabetes, are obese, or overweight. In the study, it found Mounjaro saw a 94% reduction in individuals' risk of progression to type 2 diabetes. Analysts predict the growing list of health benefits from Mounjaro could boost sales and bring in business from more health issuers for Eli Lilly. And now, let's turn our attention over to tech. The Futurum Group released the first of its kind study focusing on AI applications in the data center segment. We want some details, so let's welcome in our next guest. Lisa Martin is with us, research analyst at the Futurum Group. Thank you so much, Lisa, for being here. We want to hear a little bit more about the study, how it came about, what were some of the takeaways.
Yeah, Nicole, great to be back on with you. Great to see you. Great research announced yesterday from Futurum Intelligence that was really looking at a lot of the AI chip makers across CPUs, GPUs, XPUs, etc. And really what the data demonstrate across these organizations is that global data center investments are absolutely on the rise. New growth drivers in AI inferencing chip market set to grow exponentially this year in the next 4 years. For example, the data show the AI data center chip market set is expected to go from 38 billion in 2024 to 138 billion in 4 years. Not surprisingly, NVIDIA dominates the GPU, the graphics processing unit market, with 92% share, contributing to a sector, the GPU sector, that's also poised to grow to 102 billion by 2028. What we also saw, though, it's not just GPUs, which are obviously pivotal for AI workloads, it's CPUs as well. And some of the biggest buyers and consumers of this AI chip technology are hyperscale providers, AWS, Oracle, like you just mentioned in the last segment, Microsoft, Google, for example. So what we're seeing is growing competition. Yesterday's news, not just from Future, but also from AMD. You talked about it on the Mega Cap Tech segment yesterday with your guests. ZT Systems going to be acquired by AMD. Will it move the needle? We think so. But we also know that while it may move the needle, it'll take time. And we know that NVIDIA isn't slowing down. We're also seeing growth in other sectors besides IT and telecom in terms of consuming those AI chipsets. We're seeing growth in financial services and insurance, as well as healthcare. So some great use cases, great new use cases there.
Yeah, I think it's great that you brought in some of the other sectors that are now using AI, such as healthcare, such as financial services and insurance. I mean, it's pretty much moving into everything. If you have a company that won't be using AI in 5 years, you're probably left behind, right? I mean, we started talking about ChatGPT last November, right? More than a year ago, November. And now here we are, right?
Yeah, a tremendous amount of growth and opportunities, but there's also growing competition. We know the NVIDIAs, the AMDs, the ARMs are really seeing significant revenue growth, but there is exciting competition in the market, really expected to intensify as new entrants, startups really are aiming to capture some of that market share. And really, ultimately, what we all benefit from is continued innovation. And one of the companies that is one to watch that I wanted to mention, Nicole, to you and your viewers, is a competitor to NVIDIA for sure. It's called Groq, Groq with a Q. And the Q is important. It's a company that was founded by some former Google employees. In fact, their CEO was one of the designers of the Google Tensor Processing Unit, or TPU. They don't consider themselves a startup, but about 8 months ago, I had a chance to sit down with their CEO. And Groq was flying so low under the radar that what was newsworthy was the CEO actually sent, kind of cheeky, a sarcastic but cease and desist letter to Elon Musk complaining about xAI's Groq with a K. Fast forward to 8 months later, and Groq has just received a great influx of cash, $640 million. This is just this summer, a valuation of $2.8 billion, and they are prepared to take on NVIDIA. So what we're going to see from companies like Groq is pushing the NVIDIAs, the AMDs, the ARMs to get better. Ultimately, hopefully, we all win.
Yeah, I'm glad you're mentioning some names too. One thing we left out was telecom. Another, you talk about IT and telecom, right? That's another area using all of this.
Absolutely. Telecom is one of the leading industries in addition with IT. The Futurum Intelligence research showed. So we're seeing a lot of growth there, a lot of explosion of 5G, a lot of AI use cases in the telecom industry that we all expect, because we expect as consumers, as business leaders, to be connected 24/7. And the AI chipsets going into the telecom sector are clearly going to be able to support that pretty well.
Yeah, and so when we think about all the AI type of names, you're mentioning data center,
Microsoft at the highs.
the NVIDIAs and things like that. The big names, some names, and when you think about the leaders or the ones that have the big moat, what names sort of come up in conversations? I mean, not necessarily stock picks, but I mean, in your mind, as you do these studies, what names are clearly leaders?
Groq is becoming a leader, one of the ones that I just talked about. We're seeing Cerebras as well, who are really innovating pretty
Okay,
quickly.
Microsoft looks good. What about Lyft? Lyft looking for a follow through. It was looking good
With respect to what this competition is fueling. But another area
last few days.
really
Lyft
interesting right now, Nicole, from an AI perspective is
today, an inside day on Lyft. Looking forward to get back above VWAP. All right, S&P looks good. S&P higher low printing. Looking for a higher high.
It burst onto the scene about 20 months or so ago. I look at it as the catalyst for this generative AI market that's maturing pretty well. One of the things that ChatGPT just released was its current version, which is called ChatGPT 4.0 latest. They also did something interesting this summer, Nicole, and that is the release of a prototype of Search GPT. Their CEO, Sam Altman, said, hey, we think there's room to make search, much better. So a little pressure on Google. It's a closed now prototype of 10,000 people. I didn't make the cut. It's kind of bummed. But it's going to be interesting to see how OpenAI challenges Google from a search perspective, because we know Google is default. It's a verb. We've all been using it for many, many years. So changing behavior habits is challenging, but OpenAI is poised to do that. Another one that I would mention from an AI as a service perspective is Anthropic. Their chat bot is called Claude. They released some new features this week. They were only founded in 2021, so it's an up-and-comer. It's quickly moving. They just got an infusion of $2.75 billion from Amazon. They're growing globally. They're working with leaders like Google Cloud to bring AI capabilities.
Wolf,
to
yeah, that
Azure,
looks
for
good.
example.
Wolf
And
looks
they're
good.
widely considered a strong rival of ChatGPT. You can both get ChatGPT and Claude on Android and iOS. So they're quickly becoming competitors that are really pushing each other to innovate.
Yeah, I'm glad you mentioned Anthropic. I met the CEO in the elevator here at the New York Stock Exchange one day, and when he said Anthropic, I'm like, oh my goodness, Anthropic! Like how huge it is if you're studying AI, and so we had a great conversation. So anyhow, it's great to see you. I know you were talking about American Express incorporating more AI, but cautiously with executives, with human oversight. But this is what all companies, I guess, need to do in order to stay in the game. It's great to see you, Lisa Martin of the Futurum Group. Thank you very much. Still ahead, it's Technical Tuesday. Kevin Horner is standing by with some key levels to watch for the S&P 500, as well as some recent trends for Supermicro Computer, Pfizer. Stay with us right here on the Watch List on Schwab Network. We'll be right back.
All right, so Wolf looking good.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides, coming to you live from the New York Stock Exchange. 90 minutes left in the trading day. We are watching to see if we get 9 days of gains for the S&P and NASDAQ. The Dow has gone positive. We'll continue to watch for any of that. After a great week last week, the NASDAQ is now flat, so they're not too far off the change line. In the meantime, with the S&P sitting at 5605 and Kevin Horner, we'll take a look at that in a moment. We have Ben Lichtenstein, senior futures contributor, with a market update and taking a closer look at crude oil in the meantime, right? Because I'm seeing at 7404 here on the big board. Some of your thoughts on the chart recently.
Yeah, crude's been somewhat contained, Nicole. I think that's kind of helping what we've seen in terms of stocks. At least we're not ripping to the upside, taking out 80 or dipping down below that $60, $65 level. I think that raised some concerns, but at current levels right now, again, for the most part, it hasn't really had a lot of conviction one way or the other, and a little bit of sideways action in crude right now. I think, again, supportive of stocks. Let's just take a look first and foremost at the more intraday price activity, 1 minute candle chart. You can see we started off in the wee hours this morning around 72, all the way up to the 74.50 level. And look, speaking of contained, kind of right in the middle of the range that's been established. Let's step away from this intraday look, and very similar pattern playing out on the daily candle chart. You can see going back to last year, this time We had a high up all the way around 95. We dipped down into the winter of last year. We're talking December, January of last year, around 67. And since, again, not a lot of conviction one way or the other. Just kind of looking at some sideways consolidation here within a range. But again, I have to lean on the fact that considering the geopolitical tensions we've seen over the last many months and some of the uncertainties in terms of demand, China, to see crude at current levels, I think a reassuring aspect for investors and at these current levels in many ways, as I mentioned, supportive of stocks.
Yeah, understood. And how about gold?
Yeah.
This all-time highs.
Yeah, that's
Exciting
right.
watching gold, isn't it?
I actually thought we were going to start with gold here today because it did post a new record level here, Nicole, earlier this morning. Now, sticking with the pattern, we see these 2 steps forward and then 1 step back. Let's look at how that appears to play out here again today on the 1-minute candle. There's an all-time high, as I mentioned, a new historic level for gold. So this beat continues. It goes on and on and on, right? And a bit of a pullback here today, but still nothing major in terms of rejection of this upper level. I guess the best way of putting it. Speaking of no rejection here, you can see it on the daily candle chart. Well-defined trend that's been rewarding the bulls for some time now. We're going all the way back to the fall of last year when we were down around this 1800 level. And again, look at this, 2570. So just proof positive the fact that these trends continue longer than we think as traders possible, and how it could be a big mistake to short it just because you've missed out on most of it, right? That does not necessarily make a sell signal a sell signal provide, and I think gold's proof positive of that.
Yeah. Good to see you, Ben Lichtenstein. Thank you for all of that. And nice to see gold at a high. That's the record story, no doubt. All right, let's get to Technical Tuesday. Every Tuesday, trends to watch, stocks to watch, charts to watch. Kevin Horner is with us, Senior Manager, Trading Services Education at Charles Schwab. As you always do, you start with the S&P 500, which is right around the unchanged line. I was just wondering if we will see the 9th day in a row of gains. I know you can't answer that for sure. However, what are you seeing?
Well, what's notable to me is the level that we've rallied to and paused here intraday is 5620. It's the same level that was the high, essentially 5622 here back on July 17, which was the gap down move from the day we made our all-time high trade at 5669 and change. That's just maybe a pause level, but it does give us at least a reminder that if we want to be bullish, we really want to get into 5670 to the upside and through it. In fact, any rejection here before 5670 is attained could mean a lower high for the S&P 500 and bring some weakness thereafter, at least in the short run. But yeah, we're watching this closely for that reason. The move off of the lows has been great. We all know we pulled back just about 10%, 9.7 peak to trough. And then at yesterday's close, we were up 9.5% versus the low trade on the 5th of August. So very pleased by the V-shaped recovery. Honestly, I don't know if all of us expected it to go this way, but it's been wonderful bounce-wise. I guess, like I said, we just need to see, can we take out that 5670 level above us? If we pull back, do we make a higher low, which could happen at around the 5500 level? It's important to remember 5500 was a very big level for us to get through back here in June, and we spent about 2 weeks tightening and consolidating at that 5500 level before pushing higher, and that's where we added the extra 170 to the peak there. So it's a good level for us, both on the ledge to which we've rallied today, but obviously 5670 remains the short-term target. Through that, hey, it's blue sky above, and traders might then start talking about, can't believe I'm going to say it, but SPX 6000 perhaps.
I don't have a hat for that. We only had Dow 40,000. We don't do hats for the S&P. How about Super Micro on your list?
Well, Super Micro, I think many people know that we've undergone a healthy retreat from the peaks achieved in February of 23. Stock off about 60% when we moved from our peak at 1229 down to the low at 480 or so. Really aggressive sell-off, but what's notable now is that the bounce has taken us up quite nicely. Believe it or not, it's up 30% as it's rallied into the 20-day moving average, what I have termed to be resistance 1 on the chart, right around 630. It's an important zone to get through, Nicole, because visually it looks like a bit of a bear flag level. we've seen these bear flags be eliminated rather quickly in the SPX and in the NDX and a number of other positions in the marketplace. And Supermicro is behind the game here. So if you're bearish, you're looking at the resistance ledge there at around 630 as a potential zone against which to base bearish designed trades. If it trades through 630, we could then see that 750 level above resistance 2 happens to be coincident with the 50-day moving average. The third layer of resistance I've added is up there around 840, and that is coincident with the downtrend line that has been in place since those peaks in dip back to late 22 or early 22, excuse me. So it is a improving chart, I guess, but only improvement for the last 2 weeks. Certainly has a bearish slant to it here. But again, I'm hesitate to call it terribly bearish, if only because we've seen so many equities run through that first layer of resistance, and this one just hasn't yet. So bearish traders probably want to see a break of the uptrend line that's been going on for about 2 weeks before taking the bear trade, which could lead them down to about the same level we saw before, what I've termed to be support 1 at 480. But a very interesting chart, and more importantly, a very interesting point within the chart at this moment.
All right, thank you for that. I mean, it was such an exciting stock when it was running up, right? But we'll continue to watch those levels that you're mentioning. What about Pfizer?
Well, we're going from an exciting one to a fairly yawning one, if you might, Nicole. Pfizer's been undergoing a healthy retreat. December of 21, Pfizer peaked. It's off 60% from that point to the lows that were achieved at $25 in the spring. That was right around April, mid-April. We are up 15% off of that level, and that feels well and good, except the thing that matters most is probably the fact that we've remained above the 200-day moving average since early July, really, July 10, July 11. So we've had a breakout and a retest of the 200-day moving average. And after having been in a very healthy long-term downtrend, So the July 30 earnings resulted in the pop to the upside, and it looks like it was a sell the news situation, because on that earnings, we came all the way back to the 200-day. Now, yesterday may have been the initial opportunity that an aggressive trader is looking for. Friday's price action gave us a tail below the 200-day moving average, and it represented the lowest trade since the stock made that peak back on July 30. So if that's the good low in the pullback, yesterday's close above the high of that low day might be an aggressive entry for some traders. This is starting to show signs of life in the sense that it may have corrected this long-range down run here. As long as it holds the 200-day moving average ballpark to $28, I think bulls are on the right side of the trade. But at this point, that could change at a moment's notice, Nicole. If this thing gets thrown back below the 200-day moving average, then everybody who was bullish is going to change their viewpoint rather quickly.
All right, Kevin Horner, great to see you. Senior Manager, Trading Services Education with Charles Schwab. Thank you. Coming up next, we'll bring in our panel to discuss semiconductors. We'll look at a few names that have been flying under the radar and those that might be trying to really challenge NVIDIA. How about AMD? That's up 6% this week. A big deal there. Much more to come. Our panel is ready. We'll be right back.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network. Welcome back to the watch list. We turn our attention to the semiconductor sector, looking at names like NVIDIA set to report next week. AMD making the big acquisition to kick off the week and try and compete even better against NVIDIA. Let's bring in our panel. Lucas Case with us, semiconductor analyst at Third Bridge, and Ryan Sherwood, Futurum's president at Signal 65. Thank you both for being with us. So, Lucas, look, we had the big acquisition today, this week from AMD of ZT Systems. And that was a big deal because that will help them to sort of really try to catch up to NVIDIA, but NVIDIA is still growing too. Some of your thoughts?
I think you put it great. I think it's a good attempt in trying to catch up. Obviously, as you mentioned, they are still quite behind the market leader, NVIDIA, but we're seeing AMD make the necessary investments in both their AI software ecosystem, as well as now kind of taking a recognition that the industry is moving more towards a system-level approach. Therefore, targeting a company like ZT Systems, which, some might say is a bit unexpected, but it's certainly a step in the right direction.
Yeah, understood. Ryan, how do you feel?
I think the acquisition that they announced for ZT is maybe less about competing directly with NVIDIA and more about helping them continue down their path of kind of this open ecosystem approach, but still trying to get into that verticalized market, right? What NVIDIA has done to perfection is own everything from the chip to the infrastructure to the deployment in many instances. AMD tends to be more on the side of working with partners and kind of close partnership relationships to get some of that done. It's less expensive, it's less risky on their part. But what ZT does for them, it allows them to go one step further than just deploying chips. And now they can offer kind of white box system options for a lot of their partners. And I think they're still adamant, and Lisa has said this during some of her interviews yesterday, that they don't want to step on partners' toes in the process.
Yeah, we had her on recently. We were talking about the findings of that whole research, and a lot of it was all about GPUs and CPUs and telecom and all these different sectors using AI too. Not only IT and telecom, but also finance and insurance and so on and so forth. Amex, for example, really incorporating AI into the workforce. Lucas, where do you see the growth happening? You mentioned data centers, for example. What kind of names are you watching really closely?
Sure. When it comes to the customer end, it's clear that the hyperscalers, major cloud players like a Google, Amazon, Microsoft, even a Meta, are still kind of dominating that AI demand as well as that GPU supply and allocation. But as that adoption increases, we can certainly expect that to trickle down into more enterprise and smaller to mid-sized companies that are going to grow that need for an AI-specific application, whether that be an inference or even training, and have it a bit more specialized to their specific business needs.
Yeah, understood. Ryan, when you think about the competitive landscape, and we're looking at how AMD is handling all of this, some of your thoughts about some of the other players. Are there the up-and-comers that we're not really focusing on enough?
I think there probably are some. AMD is still very clearly a number two in the GPU space. GPUs tend to be what we think about when we talk about AI performance and AI infrastructure capabilities. Intel still has a role to play here. They've obviously had a lot of kind of downward trajectory over the last several years. They need to do they have some work to clean up on that, but their Gaudi infrastructure could be a credible third player here. They have some benefits in terms of performance per watt, and power we know is a really critical part of any discussion of AI infrastructure. I also think, if you look at the custom silicon from Microsoft or Amazon or Google, right, all these kind of custom AI infrastructure that they're building is an interesting part of the equation as well. How much they're willing to invest themselves and kind of design their own silicon, continue to iterate on it, and compete against the likes of NVIDIA, AMD, and Intel, I think is going to be a really interesting kind of 12-month story to watch.
Yeah. And Lucas, what kind of story are you think we're going to hear? What are going to be some of the headlines from NVIDIA? I know we had some chip delays, but growing and ever changing those chips. and now everybody wants a newer chip, and they don't necessarily want the older chip.
S&P.
What kind of themes do you think we'll hear from the earnings next week?
Looking for some sort of follow through. It's still a doji at the top of yesterday's price action.
We can expect to see continued data center growth for NVIDIA, but as you mentioned, we've recently heard about some of those delays in the Blackwell generation of chips. Obviously, NVIDIA and AMD both kind of taking that path of a one-year cadence for their newest accelerators. I think it also, on the other hand, presents an opportunity for AMD. We're hearing that they can take anywhere from 10 to 15% on the high end of that total data center GPU market by the end of this year. And next year, given some of these hiccups from NVIDIA, could potentially be in the low 20% range. So I think those are two key factors to keep an eye on. We're hearing anywhere from 4 to 6 month delays, given some
All
of the
right.
packaging complexities we're seeing with CoWoS L and B200. So maybe mid-2025 is kind of a conservative estimate as when we could start to expect some type of volume usage or deployments within the data centers.
Yeah, thank you for that, Lucas. And really last but not least, Ryan, how do when you look at the public and you think about AI, and a lot of folks are in such a learning curve at this point, how do we integrate? How do we penetrate a bigger, wider market share and audience and get everybody up? And there are people who use ChatGPT every day, and those who have never heard of it.
Okay, AMD up 1.5. All right, so AMD trying to get back to VWAP. AMD with a doji spinning top at the highs.
The evolution of programming, the evolution of how we interact with our devices, whether it be smartphones or laptops, or how our devices communicate with the data center. I think it's some people think it might be happening slowly. I think it's happening deliberately, and more people are integrating with AI today.
AMD
They probably don't recognize across their smartphones and
150.
laptops and what they're seeing in the data center space. I think how these companies are kind of today racing into the adoption of AI is still an important first step to enable the software developers, this kind of broad ecosystem of software engineers, to have access to that computing capability. And until that access is more ubiquitous, we won't see the really kind of drastic society shifting type changes that I know are going to be coming.
Okay. Yeah. Thank you both, Lucas K. and Ryan Shawwood. Thank you. That's going to do it for us here on the watch list. Thanks for being with me. I'm Nicole Petalides. Market on Close is next.
This election season, stay out of the muck and the mudslinging. Try Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week, it's going to be a crazy political week. Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed.
Okay, Bitcoin still trying to turn the corner. AMD back up to 157, 158.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky at trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by
Microsoft. Looking for a follow through in Microsoft. Pretty decent move on the daily. Microsoft. 60-minute looks good. 60-minute. Trending along the 20 EMA on the 60-minute time frame.
Do you think that this is potentially a human superpower?
Okay, that looks okay. Microsoft. All right, SPX. Just flat at VWAP. You can see a doji on the daily. Okay, S&P 500 doji in the top of yesterday's price action. We're drifting a bit lower now, so it looks like they were taking the opportunity, like we thought about earlier, bringing prices back up to the highs and then fading it. That's what it looks like so far. Doji. Tell you what, if we do manage to push a bit higher, I would be taking some profits off. I was surprised that we didn't start to consolidate right around 55.50 as we were coming up Thursday, Friday last week. I was surprised we didn't stay there. We just jumped above it on Monday. So, yeah, just watching for consolidation. RSI is above 50, but flattening out. Volume looks good. That's institution. So I'm not looking for a big move lower. MACD momentum shows bulls are in control, and stochastics is starting to embed above 80. All right, so MACD is starting to recycle on the short time frames. MACD, you can see starting to cross over down at the bottom of this chart. S&P, MACD starting to cross over again. 5 minute.
And yesterday was that small caps and the big were living harmoniously together in a state of bullish momentum. Today it's split up a little bit. That's generally not the worst.
Still a doji on the daily. AMD trying to push a bit higher. AMD. Apple flat at the highs. Microsoft pulled back a little bit. Tesla trying to get something going here. Tesla.
Semiconductor AI themes. That means that we're just basically flat on the day. The drag from all the other stuff lower, and then tech solid, but not really the big momentum winners. And so we kind of flatline. That's an okay session. A little breath, a little pause, not a big deal. I'm still watching a few things here this week that are interesting on the macro front. Earnings have been some driving force, but mostly just a smattering of kind of second-rate names that are going to be interesting for their individual sectors, like consumer discretionary stuff. Tomorrow gets a little bit busy with some earnings, but generally you're still following the momentum from the bounce back the last 10 days. Will we be able to keep that momentum going through Fed minutes? And then more importantly, Jackson Hole and Jerome Powell, probably a question for the second half of the week, mainly when we get jobless claims on Thursday and Friday. But here's just the rundown for what happened today. Bitcoin fade there from early strength was again kind of a tell that the market was going to come under some pressure, even though the two have been a little bit out of whack. The intraday moves have been fairly useful.
Apple flat at VWAP, Microsoft, Tesla watching Microsoft at the high, flagging Tesla trying to get back up to VWAP. Let's see what Google looks like. Google looked good yesterday at the close. We did follow through. So Google looks okay. Above VWAP, trying to make a higher low and higher high now. Google. Okay, what's Lyft doing now? Lyft. Okay. Boeing continues to fade from VWAP. Not a good day for the new CEO. Meta. Meta. Yeah, just sitting here. All right. Looking for Bitcoin to make a higher low and then a higher high off of this level.
You just want to see a high momentum trade get back to highs. And you just haven't heard quite as much dialogue about it, even though it's had this rip right back in the V-shaped rebound. Hasn't been in the higher highs yet, so some bonds continue to catch a bid. This is where the macro starts to get interesting. Yesterday, as I put the green light back on stocks, you kind of have to because you got to respect the technical momentum. I'm still just not a fan of some of the macro narrative that seems to be underpinning it. You just don't want the dollar to collapse. If you look at bonds versus the dollar, the 10-year has actually been a little bit more encouraging. The blue line in the 10-year shows us that we're still up off the August lows. And when we were in the middle of the big sell-off, the dollar that was made new lows and has just fallen apart here the last 48 hours. It's not a good look. And if you think you want to root for the dollar down,
All right, trying to push.
I'll continue to pound the table.
S&P is trying to do something. The bulls are trying to push this a bit higher. Not the best day, doji day. Nice move down to the lows for those of you who shorted it like Mondo. Now looking for a pop back up to the highs. Doji on the daily, up down volume, agrees pretty much 1-to-1 on the NASDAQ composite down, 1.6 down on the SPY, 1.51 down on the Qs, 1-to-1 up on the diamonds. It's only 30 stocks, 2-to-1 down on the New York Stock Exchange, which had a good day. Triple top breakout on the New York Stock Exchange. So when in doubt, I'm always checking the New York Stock Exchange. Okay, so a failed breakout. We pushed above it yesterday, pulling back in. Do we consolidate for a little while? Or do we pull back like we did over here back in the third week of July? Yet to be seen, but we're at a triple top high on the New York Stock Exchange.
Here, Kevin, which is a smattering of big tech names like Apple, Amazon, Alphabet, Netflix, which is sitting near highs. You've got some stuff that's holding us together here, basically unchanged.
Yeah, I think after 8 days on the upside, you're looking at a little bit of exhaustion here as you get to these high levels. So a day where if this is a down day, Oliver, that's a flesh wound. This is nothing to be concerned about.
Sure.
However, as we get closer and closer to NVIDIA's earnings, I expect the volatility to pick up in that name going into their earnings. I think it's interesting that Palo Alto Networks rallied, but CrowdStrike didn't today. And the divergence between Home Depot now and Lowe's is significant. I think looking at the overall, we're trying to grasp at straws for some story as we wait for Jerome Powell to speak on Friday, but right now, I think
the markets, bulls and the bears at loggerheads right here after an 8-day rally. Today being day 9, we're just sitting here biding our time. I'm not going to take any risk on if I think, the markets could drop off. So I don't want to take something. I don't want to take too much exposure if the markets conceivably could pull back. If the markets start to break out, then, we'll readjust and reassess. Longer time frame. I'm just talking about intraday and short-term swings, not talking about investment time frames.
That's a big story today.
It is, and I think it's big when you consider the fact that they're seeing this drastic 94% of what we're seeing in terms of pre-diabetic adults that are seeing these weekly injections. Now that risk is cut by 94% versus Ozempic, which is obviously Novo Nordisk, that's reduced by 73% on average. In comparable, this trial is actually surveying about 1,000 adults, so mind you, it is a relatively small sample size, but this is a pretty I'd say outstanding metabolic result as far as drug results go. And I was a skeptic about a lot of these GLP-1 drugs because we first heard about them and it was the miracle drugs, but every data point we've gotten ever since has only proven it a skeptic like me wrong, because this continues to be not only as far as like the demand is they cannot keep up with the demand, and that seems obviously to not be the issue. They continue to be able to fulfill a massive demand.
Okay, so that's the New York Stock Exchange. Meta drifting a little bit. Meta.
The GLP-1 trade, and I think Zepbound and Mojero, I just don't necessarily see this
S&P. Yeah, you know, this is just chop. This chop. Doji on the daily.
skepticism you could say is that these results did show that those that stopped taking this treatment did start to gain some of that weight back. But you things like 1 in 3 right now U.S. adults are pre-diabetic, and this is able to treat those that don't even have type 2 diabetes yet. I mean, it makes you want to go to the doctor and say, gosh, it makes you want to start analyzing your own self and start looking within, because I'm like, gosh, do I need to go see if I'm pre-diabetic? I probably am.
Well, maybe chill out on a little monster.
I know.
I'm just kidding. So Eli Lilly puts it a new high. There's not a lot of stocks making new highs right now. So the fact that it is definitely stands out. Generally, the other leaders too.
Fading a little bit more. S&P.
After earnings, that hasn't led to a big kind of unanimous tech run today because the chip stuff was a little bit soft. But Palo Alto after earnings was kind of huge. I'm kind of surprised that didn't put a bigger lift into some of the tech stuff today.
I am too, especially because this name was capable of bringing down tech when it had some nasty post-earnings moves that it hasn't gotten the same lift on now the reverse, the upside. I think this shows that like a solid finish.
Okay, lost you there.
Up 8.5% today. Actually, this move is even clean, but Eli Lilly's chart has been more consistent. So it's just like, what do you want to sort of like pick your poison there? I will say, Nvidia, I know you were looking at earlier, just added 24% in the last 6 sessions.
Right.
Yeah, we're down 1.6% today. Yeah, we're up 30% from August lows. So that's also been not too bad of a momentum trade.
No, for sure. I think the best way to describe today, just a bit of a breather. The stuff that's really moving is very secular, stock specific in nature, whether it's the healthcare stuff or whether it's earnings driven. Okay, so a little pause, a little breather. Thanks, Jane. Thanks, Kevin Hanks. Ed Klissel joins us, Chief U.S. Strategist at Ned Davis Research. Always a pleasure to have him. Always a wealth of information. And it seems like your guys' general conclusion.
Sitting on top of VWAP. Doji Day. After 8 days up, not surprised. We've got a VIX expiration tomorrow. We got positive gamma, as long as we stay above 55.50. So we're going to have some wild, more than likely, a little bit of wild price action tomorrow at the open. That's usually the case. When I say wild, I just mean choppy at the open. And then we got OPEX on Friday. Of course, we're waiting for the Fed. Okay, so we just continue to fade here, not going anywhere. S&P.
This is going to hopefully lead into what we call a soft landing. That's our base case. And so when the market gets a little scared about a weak economic report, that leads to things that there's going to be a hard landing, unless something meaningful has changed, which we don't think has at this point. But that's a bullish environment for stocks to have positive, even if it's slow in economic growth.
Okay. Ed, when I look at your guys' equity view of the majority
okay, what is
62%
S&P? All right.
A little bit of participation in Europe, XUK, and a few of the others. The dollar's really fallen apart.
Kind of a boring day, especially after yesterday. It was quite a move yesterday.
But we were still the best house on the block. Dollar firmed up again last year while the Nasdaq was rallying back. I mean, what is this idea that like we should be rooting for the U.S. to lose its edge?
when it comes to currencies, you really have to ask yourself the question, why is a currency moving? If it's because the economy is weakening, that's obviously negative for earnings, negative for that country's stock market. It has to do more with relative interest rates, and I think that's what a lot
Okay, VKTX, Viking Therapeutics, was a big day yesterday. It gapped down this morning, and then they kept buying all day long. So we're back up near the high, getting near the high yesterday. So buyers stepped up at the low today. VKTX. Okay, nice little rally there.
I guess I wouldn't argue the numbers are weak nominally, but the comparison to kind of the direction in which they're going, our economic surprise rate is very negative still. Even though we had a couple nice numbers the last couple of weeks, the market went nuts on retail sales and jobless claims last week. But of course, our NFP, the last read, was pretty soft. And unemployment's trending higher. We triggered some stuff. I mean, are these not reasons for the dollar to go down?
Yeah. So we're talking about dollar, we're talking about relative to other currencies, and the U.S. has been so strong, and economists have been looking for a recession for the better part of the last 2 years because look at some of the reliable data that has worked in the past, like the leading economic indicators, the yield curve. They kind of missed it this cycle. That what was going on was really a readjustment post-COVID. So now the economists have caught up, and they've raised their estimates, and economic data is coming a little bit weaker. Then you get the economic surprise index coming back down. So all this is a recipe for maybe has been so strong. Maybe it does need to pull back a little bit. But I think we got to distinguish between that message and one that I think would be a bigger concern is that we're spiraling toward a recession. And then some of those data points you mentioned last week tell us that, look, even if we do go into recession, one's not imminent. The S&P 500 peaks about 6 months before the start of the recession, and really the worst of it comes the 2 months leading into a recession, which again I think most
boring kind of day, right? Boring.
So we have some time to see how this plays out, and if even going into
compared to yesterday, we had a good time yesterday.
really bad after a few months, so you have some time as an equity investor to kind of take a look at this and see if things are going to get worse or not.
Okay. So you don't think we're at the point where we need to start prepping just yet?
So always do your homework. Be ready. But
Okay, Viking, S&P, dropping below VWAP now.
Data slowing down has been welcome because the inflation data is slowing down as well. Is that still kind of the bedrock of the bull case that's going to keep trending lower?
Yeah, so I'll give you 2 data points. One is you mentioned the economic surprise index, and there's another cool data point, which is the inflation surprise index. Same concept, inflation versus expectations. That's actually rolled over. Earlier this year we got some hot inflation readings. That's come back down. That's bullish for stocks. And the second thing is just the bigger picture. Look, the CPI, the headline CPI, fell below 6-month moving average in August of 2022, just a few weeks before the market bottom.
Okay.
This inflation is to the bull market. Well, after we kind of flatlined earlier.
Okay, Apple back below VWAP. Just a dead kind of day. AMD fading again.
But we're still in this disinflationary tailwind, which is bullish for stocks.
Okay.
AMD.
Thinking about what kind of stocks the big rotation.
Okay, one more time. Let's go see what is actually working. Microsoft looks pretty good, riding the 20 EMA on the 60-minute. Wolf pushing a bit higher. Wolf.
What kind of market leadership we get? Is it possible just everything goes up together? Do we get that dream case scenario?
S&P. S&P 500 leading on the day. Palo Alto looking pretty good, right? Palo Alto having a good day. Didn't give back much. Zscaler, the other. Okay, Zscaler is trying to get above the 200-day. If that happens, we're probably going to attack 208 pretty quick. Zscaler, CrowdStrike. Nice follow through on CrowdStrike. And CyberArk. Okay, Fortinet, of course, that one continues to look well. and good. Fortinet grinding higher.
Lastly, thinking about whether or not all this depends on the Fed playing ball, what do you think are the expectations now? Obviously, if the stock market.
All right, let's go through the sectors. XLB, consumer materials, FCX. Some of you were looking at FCX yesterday. Outside day today at the 200 day. Let's see what gold ETF is doing. Gold ETF at the highs, but giving back some from the highs. Gold, silver looked pretty good yesterday. Again today. So it's been rallying. All right, what's this? Day 10 on the rally. Let's look at Japanese yen, Aussie dollar carry trade. Still holding at the 21 day, just above the 200 day, near parity. We want to see that continue to fade. 10-year yield. 10-year yield. All right, still fading. Junk bonds. We're looking for junk bonds to lead the way. Okay, you notice that they're buying the low of the day on junk bonds, right? Okay, so they bought the low of the day. Junk bonds are pushing it back up. Would expect to see this building at a bearish engulfing candle if they were exiting the markets, more selling, but they're buying the dip, so that's pretty good.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
No Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest with Schwab.
Be part of the latest commodities action on Future with Ben Lichtenstein weekdays, 8 a.m. Eastern. with Schwab.
Got to mute you guys for 1 sec. All right, so you should be okay with the idea that every day is not going to be a bullish day or a bearish day. We're not going to go straight up or straight down. S&P hanging out. S&P is hanging out. Whoops, that's the wrong chart. Okay, S&P, Doji, RSI is flat, but it is above a 50. Volume shows that institutions have been the buyers, so that's good.
No, I mean, I think it's a major force for equities. Obviously, stock market's been up 8 days in a row. Today could be the 9th, which would be the longest stretch since 2004. It's up, 8%, 10 trading days. I mean, this is a ridiculously sharp recovery from what looked like Armageddon on August 5th when the Nikkei went down.
MACD's above its signal line, stochastics embedded. So this looks okay. Can we pull back to this 55.50 area? We certainly don't want to move below it. So that'll we'll stay in positive gamma state, which is good. If we stay in positive gamma, we'll look for dips to get bought. The dip did get bought today. It's just we didn't follow through. We're just at a stalemate after 8 days straight with gains, 12 days from the reversal low. We're just sitting right here at 5,600. Trying to figure out what to do next. Okay, S&P just sitting here. So Doji Day. Doji Day.
So it's been the right strategy and the one that I wrote about having going into this earnings season to be pretty circumspect into any one of these companies' results. And then you can engage on it afterwards because obviously expectations are really high into this NVIDIA print.
Let's talk Microsoft and Apple first because I do feel that there is an overlap between those two and that they're both offering consumer-facing AI products, whether it's the Assistant for Microsoft, if it's a new phone that's coming from the iPhone. They both have really run up in valuations, trading at like 33 times forward. Where is the confidence in Apple over Microsoft? It seems like, just reading from your notes and what I just heard, that you generally like Apple a little bit more.
Yeah, I mean, because if you think about it, what's the one consumer device we have with us 24/7? It's the smartphone.
Sure.
And so if you look at Apple, to some degree, the reason I like it is because their revenue growth has been so pitiful for the last 3 years. If you look at it, they grew revenues 2% in calendar 22. They grew at 0% in calendar 23. And we're only talking about 4% revenue growth this year. I think next year you have a decent
Continue to fade. S&P continues to fade.
double digits. And it's the only one of the Magnificent Seven where I think revenue growth actually improves next year versus decelerating. And so the valuation obviously for Apple's high, so is it for Microsoft, but you can say that for the entire S&P 500. So they're all pretty high, but I'm a growth-oriented investor. And so the one thing I've learned from hard experience is when things roll over, they tend to go lower than you ever imagined. And then when things start to improve, they seem to improve for longer than you expected. And for a big company like Apple, where the last big upgrade cycle was during COVID, which was 4 years ago, I think people are interested to check out this thing called AI and do it on the device they have with them all the time. Obviously, with Microsoft, it's, you're sitting in front of your PC or your laptop to do that. But with a smartphone, you can do that wherever you are because you probably have it in your pocket.
How much confidence do you have that the functionality is going to be groundbreaking? The 2 cents I've continued to offer here is as a Google phone user, they've already got the software on there for Gemini. It's cool, but it's not that much different. I don't think they'd go shell out $500 for it.
But here's the thing, Oliver. The stock market is up a lot this year. Unemployment's sitting at 4%. And most people, they did their big upgrade on iPhones during COVID 4 years ago. So are you willing to go out and spend a few hundred, or $1,000 during Christmas to upgrade your iPhone? Yeah, I think consumers will do that because the upgrade cycle has been pushed out for a while. And remember, only less than 10% of the installed base of iPhones, which is about 1.2 billion iPhones out there, can run the new AI features. And unfortunately, as human beings, we have...
All right, we just continue to slide a little bit more. We're underneath VWAP. Okay, so there's not a whole lot to do. ASTS just popped up. ASTS. ASTS popping.
It's a 1.2 billion installed base. Less than 10% of them can run these cool new features. If you have an iPhone 15 Pro or better, then I think, will it increase the percentage?
ASTS is popping up. Watch this for a sec. Got something a little more exciting going on. Okay, change of character. Chalk is showing up. Looking for a move through VWAP.
Does the Alphabet trade have complications from search in there?
Yeah, I mean, Apple's not an Android play, right? I mean, Apple is a search play. So the question you have to ask yourself is, with over 90% market share in search do you believe all of this CapEx spending we've heard on AI, do you think that drops? And if the answer to that is yes, then from a longer period of time, Apple's got a problem. I do believe there's some very interesting AI products out there. I think Perplexity is really good. I think Claude's really good. You know, there's a lot of things that can eat into 90% market share. And you look at Microsoft with a ChatGPT powered Bing with like 3% market share. And do I think that goes up a little bit? Yes. And so I think from a longer term perspective, especially, and I'm not even talking about the antitrust stuff, because this is another whole kettle of fish, but do I think Google's going to be able to pay to be the default search engine on devices like the iPhone in the, a couple of years from now when this finally gets settled? Absolutely not. I don't think they can do that. But even in the near term, do I think over the next X number of years, you pick it, they're going to lose share?
Okay, there goes ASTS on the move. ASTS is starting to go. Starting to move.
AI-powered now kind of search that they're offering within their apps. Kind of interesting way that they're integrating that into some of the services. It kind of looks like Meta's the best chart right now. Am I wrong, Dan?
Meta's got the best fundamentals.
Okay.
And so you would hope that would mean they have the best chart. And sometimes it does, and sometimes it doesn't. In this case, it does. Because if you think of the 6 Magnificent 7
ASTS on the move. There it goes. There it goes.
had beat revenues, beat EPS, and then had forward revenues and EPS for September quarter go up. And that's despite Meta saying they were going to increase the amount of money they were spending on CapEx on AI. And so they're the best out of all of them in terms of using AI within their business, because they're using AI to figure out, hey, what does Oliver want to watch? Well, let me recommend.
Okay, we got 29 minutes to go. Wow, the end of the day really snuck up on us, huh? Really snuck up on us.
That's helping to drive their revenues as they're using AI to help drive that. And then obviously they have some consumer-facing AI products, which you brought up as well. And that is another leg of growth sitting on top of what they're already using AI for to improve the way their core business functions.
Okay, well, I think we see it in Mark Zuckerberg's attitude and his outward appearance. He's pretty stoked, seems pretty happy, and seems like he's got one of the best companies in the Mag 7. Great to catch up, Dan. Thanks for the walkthrough. Always like the Mag 7 analysis from you.
Thank you, Oliver.
Absolutely. Dan Ellis, founder, portfolio manager at Niles Investment Management. Right? Looking for Apple and Meta to lead the Mag 7. Coming up, let's trade some options. Let's look at the market maker positions. Let's prepare for the close. Be right back. S&P's below 56 now.
All right, ASTS on the move. Looks good.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex around the clock market access, even when equities markets are closed.
ExxonMobil. I was thinking about that too, Bobby, because Exxon has been underperforming, right? ExxonMobil with that pullback.
With a wider range of opportunities, you can trade for the fight with Schwab. Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for
Yeah, I like Netflix as well. Looking for a follow through.
with up to 25 stocks identified by our unique algorithm. Buy it as is or customized to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
All right, S&P's running into a little bit of pushback here today. We're still talking basis points. Anything could happen before the close. Kevin Green joining us for a look at the options flow. KG, we're going to be able to turn this ship around before the close. It's only like 20 bips.
Yeah, it's not as aggressive as we saw yesterday.
Mhm.
This does seem like it's a little bit more of a compressed market. In fact, I think we've only ranged out around 30 to 35 points for the S&P 500 total for today, and that's going to be one of the lowest levels that we've seen all month, and even some of the lowest levels I believe since July 26th, if I'm not mistaken here. So,
Yeah, looks good on ASTS. Okay, I'm going to take a couple minute break. I'll be right back. We got about 25 minutes to go. 25 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Tuesday, the 20th of August. Just going to take a 5-minute break. I'll be right back.
Notice that they didn't really immediately go up to the 5650 level. They went right up to the 5700, which is once again bullish. And we've been kind of following these flows of calls rolling up to the upside pretty much every single day. And they've been on point, to say the least here, but a nice little reaction to the upside. On the downside, still not seeing a lot of protection, but we did see some adjustments. If you're kind of looking at the open interest charts, we actually did see negative dealer gamma actually moving up to the 5500 level. I kind of called that out yesterday. You want to kind of start seeing that being moved up here a little bit, and rightfully so it did. So your intermediate level is right where we're at right now, 5600. We're kind of ranging out here for today, consolidating. Let's see if we're going to be able to continue to break to the upside. And the positive dealer gamma level is sitting at 5700. So we had a 100-point move up for the upside. We had a 100-point move up for the downside here. We're trading pretty much right in the middle. And it's really matching what we actually saw last week, Wednesday, where we had a nice little pop, then we kind of ranged out for the most part, kind of in this triangle or wedge type of pattern here. And then we had that massive breakout to the upside. It's really fueled this rally over the next couple of trading sessions. This appears to be setting up in the same type of manner if you're just looking at the technicals and not even focusing on the gamma levels right now.
So did we kind of widen out the guardrails somewhat in the last 24 hours? Is that what happened? Kind of push the positive and negative up and down?
Yeah, so the guardrails themselves, they actually are still equidistant from each other, what we saw previously. It's just everything kind of moved up at the same time.
This is great. Okay.
Right?
Translate.
So you're exactly. So the negative gamma level moved up 100 points. Positive gamma moved up 100 points. Once again, they're still around 200 points away from each other. We're sitting right smack dab in the middle. And this middle portion here still has a significant amount of positioning that's there. We don't want to ignore it. And this is why we are seeing some pressure here right now. And we'll see if we're going to actually break up to the upside or break to the downside here. It's going to be a little bit of a battle, but just kind of knowing that 650 area has not been identified as a significant area of resistance to the upside. Now it's 5700, gives you a little bit more room for the S&P 500 to move higher. Now, if we have a reversal for whatever reason, 5500, you want to obviously focus on that here, but you want to kind of be able to manage that. You don't want to break below 5500 at this point, because then you could actually have the technicals kind of matching up with the breakdown in price action, and that could actually increase selling activity for the S&P 500. Obviously, we want to avoid that at all costs if possible.
Okay. So it seems like everything has basically gone exactly the way you would want it to. The stair-step nature of the levels being continuously raised, the kind of tolerance thresholds moving in a bullish fashion. What would look like an aberration? What would look like something softening? Would that be just kind of generally more put positions building up, or what? Like, what do we need to be on the lookout for here, KG? Because it's been so steady, so stair-stepped.
Yeah, so if you see an increase in put positioning that's closer to at the money, that's where you would have that first sign. Then you're going to also look at liquidity. Are we starting to see liquidity kind of drain to the downside here? Lack of liquidity creates volatility, no matter if it's upside movement or downside movement. But usually when you see lower liquidity, that also does translate to maybe the market weakening here. If we see a consolidation for more than 3, 4, even 5 trading sessions around this area, 5600, you would also then get concerned. We don't have a daily chart up right now, but what I will say is that we probably will look at one later in the show here. The candle that's being developed here today is kind of a spinning top, right? So you have a very small body, very low range. You don't like to see that. That could be a sign of an immediate reversal. We don't really have the volume to support that notion yet. But if you start getting those spinning tops larger volume, more selling volume hitting on the bids, that's where would be your first indication that maybe we would maybe we see a near-term peak. We don't have that now. Those are just the characteristics that we would be focusing on, not only from options but also from a technical standpoint.
Got it. Okay. And that spinning top candle, that literally is like a little toy you spin around, right?
Yeah. Correct. Yeah. So you have you have wicks on both sides, and then you have a very small body, basically meaning that you opened up and you closed at relatively the same level, maybe a couple of points to the upside, maybe a couple of points to the downside. That's where you kind of have those, where it makes it look like the market is indecisive when it comes to the next action that it wants to take. Now, if you have that on very low volume, maybe you can negate that a little bit, but if you have higher volume or very large volumes and it coincides with that type of candle, that does indicate that maybe we have a near-term pullback in the making rather than us continuing to try to attract to the upside, which when you're looking at 8 days in a row, that's not bad. To see a little bit of pullback actually probably would be healthy right now.
Yeah. This is it seems like as good of a down day as one could ask for, basically just going sideways. When you look at the potential for records here, which I think we're basically now talking about when, it's only 70 points away. I thought what was interesting about this, coming back to your dealer exposure chart with the open interest, is that the positive gamma level is above the old high for the S&P. Yes. So it's kind of like the market makers are already thinking about breaking out.
Well, institutional traders are. And so when we talk about these levels, I think this is a really good segue too. So when we talk about these levels, what this is really meaning or showing is there's a lot of call selling premium happening at the 5,700 level. If I'm an institutional manager and I manage a portfolio, you're selling upside calls and you're buying out of the money downside puts to protect downside, but also then to be able to scalp basically premium to fund that downside protection. And you want to be able to continue to incrementally move up to the upside. And as you're doing that, you're rolling your positions up. You're rolling those calls, out of the money calls up. You're rolling those out of the money puts up as well. So the dealers themselves really don't have to really take any type of aggressive action unless we have a vol spike like we saw a couple of weeks ago, or in the event that we get closer to either that upper end of the range or the lower end of the range.
All right. Thank you, Mr. Kevin Green. Excellent work. Appreciate that. Watch out for those spinning tops. All right. Get trapped in the inception market. All right. When we come back, we're going to go to the NASDAQ. We're going to talk about IPOs as we're ramping back up towards highs. That the pipeline is getting antsy. We're going to talk Uber as well, which has grabbed a big executive from Tesla as the robo-taxi and EV revolution continues to build out the infrastructure. Plenty ahead on Market On Close.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends?
All that research sounds exhausting. Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes up to 25 stocks in just a few clicks.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere on any
All right. S&P just continues to fade. Not much else going on. NVIDIA at VWAP, they'll follow through. AMD below VWAP. Apple trying to push higher. Apple. Tesla still below VWAP. Microsoft had a nice little run up and looking for a follow through tomorrow. Looking for a little follow through tomorrow. Okay.
Chris, we may not get the 9, but 8 is pretty good.
8 is enough, right?
Kind of
Yeah, it does. I mean, the market sell-offs really
are often quick and violent, steep declines, elevated volumes, and then the rebounds that come off of that are generally kind of slow, long, boring days with lighter volume. But as the old trader adage goes, you never want a short or dull market.
Yeah, true. Right now it's pretty quiet for news flow until we start getting the second half of the data in the Fed. The market did, though, take a pretty big cue last week from retail sales and from consumer numbers. Seems like right now there's a hope that the economy is not as bad as that employment print indicated.
The disinflation narrative is definitely in play. And with that, with the stronger retail sales, one of the best prints in a long time, that soft landing scenario is definitely where we want to be in the marketplace, kind of gives credence to the Fed as well as playing this out a little bit. And with that, the Fed fund futures, of course, in a 100% chance of a cut at the September meeting, but that was kind of foreshadowed at Powell's last press conference in July. The question remains, is it going to be a quarter of a point, like the market says at about 70%, or is it going to be a half a point? Big turnaround from what we saw at the beginning of the month when the markets fell to hell in a handbasket and people were talking about an emergency rate cut coming through here in August at Jackson Hole. So at the end of the day, the slow market's rallying back up on lighter volumes. We're averaging about
Okay, we're still fading. S&P still fading.
almost 16 billion shares a day. It's kind of creeping us back in. What we really need to see is what Powell says on Friday at Jackson Hole, giving the market guidance on what the expectations may be or not. So again, if he's a little bit more hawkish, that could throw everything into the fire again. But if he plays it right and hits that driver right down the middle, you're going to be looking at a nice soft landing conversation. And really, the Fed speak for the most part has been reiterating that over the last couple of weeks heading into Jackson Hole.
I like that. Powell puts us on the green and the market can just tap it in.
I love it.
Chris, how about the IPOs? It was a bit of a scary pop in VIX. I don't imagine that the IPO market loved to see VIX 65, but it came and went as fast as it did. So what does that mean now?
It was a crowded vol trade that we saw the VIX spike up to 65 and then back down 77%, back down.
Okay, we only have 14 minutes to go. 14 minutes to go for the regular session.
So really, it's an anomaly telling you how tight that trade was and people who were short vol had to cover. The IPO market likes the thought of rate cuts. It likes the thought of raising capital in the markets. We've had a very good year this year. Not the best year. I don't think we're ever going to see a 2020, 2021 type of scenario again. However, we are outpacing.
All right, Tesla. I'd like to see Tesla get back above VWAP. Tesla had a pretty decent run over the last 12 trading days. Today's day 12. Tesla ran right up against some supply. If you look at this, Tesla, maybe we can jump above this tomorrow. Okay, so we got some supply overhead. Let me go to the 15-minute. You can see what I'm looking at. No, it's on the daily. Okay, the daily is where most of that volume is. Okay, you see the supply overhead? Okay, so we need to get through that level. Got 576 million shares sitting right overhead. Once we get above that, then we can run from 235 up to 255. Fill that gap, perhaps. Good thing is we've got some liquidity below. Traders have been buying along this area. But the 5-minute shows and the 15-minute shows that we have price actions below VWAP. So hopefully we can get something going tomorrow. All right, the S&P is starting to pop up. Okay, what's Lyft doing? Lyft, L-Y-F-T, Lyft. Nothing. Netflix had a pretty good day. Netflix, it's flat. Microsoft had a pretty decent run up intraday. We're near the highs of the session. But overall, it's been a pretty boring day. Unless you manage to short the high.
reporting to the top executive that's in charge of the company's ride-hailing business. But in this new role, she'll be overseeing their transition to a zero-emissions platform. The company is aiming for all of its rides and its deliveries globally to be made using zero emissions by 2040. It's also working to eliminate unnecessary plastic waste from its restaurant deliveries and to use more sustainable packaging. Her experience will be an incredible asset to the team at Uber. That's per a statement we saw to email to employees. But this veteran, I do think, is one that's seen as in terms of aiding this transition. It has not been an entirely smooth process so far, although, of course, we do have some time. I mean, we have about 16 years until this end goal, but right now it's already been seen that there's a bit behind on their goals. Actually, Uber has already been criticized in the sense in which it's already seen a lot of its startups and its efforts cost the company a lot of money, frankly. As we did see, one of its startups in Brooklyn cost around $6.5 million and wasn't seen necessarily as victorious. So Uber's right now also trying to reach its zero emissions target in Canada and European cities by about
Okay, nice little pop in the. Here we go. Nice little pop. Microsoft turning up. Microsoft pop.
using zero emission miles. That number was 9% in Europe, but in Tesla, she was mainly focused on this 500-person supercharging team that was
All right, ASTS.
broader job cut. So I think this is kind of interesting because Uber right now is in a unique shift in place for growth. We've so long said since, I mean, like the way to make Uber a more profitable growth engine is to make it more autonomous. I mean, to me, this is like the most natural transition because we talk about
Estee Lauder, you looking at? Okay, let's look at Estee Lauder. Estee Lauder with earnings yesterday, right? Okay, we got a hammer. So personally, I'd like to see it above the 21-day. Once it gets above the 21-day, we can test the 50-day. That's a pretty decent amount of selling on Estee Lauder. We got 9 minutes to go. 9 minutes to go. Okay. Futures trying to push back up.
My job as a trader is to just make money. With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses? Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills really become...
Okay, so we got a little short covering and then nothing. Yeah, that's good. New CEO, Estee Lauder. Okay.
Not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me. Do you think that this is potentially a human superpower?
All right, super micro. Okay, still consolidating. Okay, what's Dell doing? Dell. Dell consolidating. All right, so it looks like we're going to test the low again. Okay, 7 minutes to go. 7 minutes to go.
we're almost like full circle back to the highs. Not quite there, but how has the market shifted from 2 weeks ago? I mean, it must look totally different than we did at the lows, right?
Oh, sure. And the lows were very much an intraday.
Microsoft looking for a follow through. Microsoft looks really good. Looks really good. Back to the 100-day moving average. Microsoft working. Microsoft popping back up to the highs.
In the VIX, and you saw sort of a classic V bottom come in, particularly when JP Morgan came out on that Thursday, 3 days later, saying their perspective was that 75% of the carry trade had been unwound, and we've been sort of off to the races since. I think a day like today really is probably just about the fact that we had 8 days in a row up, and you just see some profit taking kick in. There's no particular news to define today's weakness. We also had a near and dear to my heart is wide breadth thrust.
Yeah, I would just like to see it, Paticus. I'd just like to see Estee Lauder back above the 921.50 day. If we can accomplish that, then that would show a trend change. Look at Estee Lauder and look at Bristol Myers a few weeks ago. Look at Bristol Myers. Bristol Myers looked exactly the same. BMY.
Just recently.
Okay. So those couple of days where we had real good participation, that's usually like a pretty darn good. Didn't we get like a big breadth thrust, like basically around?
Then it broke the downtrend in July.
Oh yeah, for sure. In fact, what was interesting about that low is the indexes at that point were taking out their June lows, but under the surface there had been a notable breadth improvement. So to use technical terms, that's a positive divergence, and that was a much healthier underpinning for the market than what we had seen.
Okay, no pop. All right, Phil. Bitcoin rising. Bitcoin rising. Bitcoin is rising. Okay, looking good.
This was largely an equity event, or has there been as much volatility in credit to normalize?
Really seen as much volatility in the credit market. So you saw spreads spike quite a bit once we kind of hit that Monday issue that came up in terms of the payrolls report that was a little bit weaker than expected on that following Friday, and then everything with the yen carry trade. But since then, Oliver, you've really seen spreads kind of decrease a little bit. They are still relatively tight. So if you look, though, at the all-in yield for investment-grade corporate bonds, we do think that it is an area of opportunity. But one of the risks, one of the issues is that spreads aren't relatively tight. So that doesn't really give too much wiggle room, if you will.
Cooper, when you're looking at the slate for this week, Treasury yields are holding that first week of August low. The dollar's already broken down. Where's the momentum? Is there momentum in Treasuries that is identifiable at this point?
I think the momentum is going to be dependent upon what Powell says on Friday. I think that that's going to be the big catalyst for what happens this week. Now, we know that we have Fed minutes tomorrow. We also have jobless claims on Thursday. But I think the big catalyst this week is what comes with Chairman Powell's speech at Jackson Hole. Now, our expectation is that he's likely going to say that he's comfortable cutting interest rates, or they're going to be closer to cutting interest rates. Gives some indication to the market that we're moving more towards a rate cutting cycle. So that's what we would be expecting.
Okay. Lizanne, when you look at the stock market relationship to bonds right now, does it look like the two have kind of like formally disconnected? I mean, the equities seem to have so much more direction right now.
Yeah, I think the equity market has really swung from a significant correlation on the interest rate side of things to more now a correlation on the economic data side of things. So as
Okay, Microsoft trying to get back up to the highs with 2 minutes left to go. 2 minutes left.
And frankly, I think that to some degree is reflected in thinking around the Fed. Not that they've put inflation in the rearview mirror in terms of what they're focused on with regard to policy.
Okay, quite a fade. We hit 56.31 and just faded from around 2:30. Looked like they were going to do something and it just fell apart.
So then, is this a market that if it doesn't get exactly what it wants from Powell, we should be all right, Lizanne? Or what's kind of the tolerance range you think for this week?
Well, we've got the benchmark revisions coming from the BLS tomorrow, and of course that predates the Powell speech at Jackson Hole. So it could be a pretty interesting week, particularly if the
Okay.
revisions, which are
Looks okay.
outside the band of expectations.
All right, we've got less than a minute to go
than expected. I think that could change.
in the regular session. About a minute, less than a minute to go.
Last thought on bonds. It seems like you still think munis are a win-win.
Yeah, I think that they're showing more of a attractive opportunity for the muni market, especially relative to the corporate market. So one of the metrics that we look at, Oliver, is just what is an all-in tax rate that's required to make the muni yield.
All right, babe. Babe. I don't know why, guys. I just called you guys babe. Anyway, have a great evening, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is the closing bell and a wrap for the day. Pretty boring day. After about 2 o'clock, we faded. We had a nice little run up into 2 o'clock, and then we just rolled over 215, 220, and just got kind of boring. A few stocks popped up, Microsoft, among others. So we'll see if we get any kind of follow through tomorrow. We had a Doji Day on the S&P 500. So not surprising. Not surprising that, after 12 days up, of which the last 8 days were straight up without any pause, higher each day for 8 days. And then today we took a break. We took a break today. I mean, that's no big deal. So have a great evening, everyone. Take care, and we'll see you in the morning. Take care. Ciao.